good morning, everyone, or good afternoon, good evening, wherever you are in the world. Thank you for joining us here for day 4 of the Traders Conference. We're excited for another great, fun-filled day of learning more about what's going on in the markets. So we are excited you're here and that you're here to learn with us. Now, we are MetaStock. We are hosts of this conference. We're excited to have you here again. Just to introduce you to MetaStock, who we are, what we do, I'm just going to play you a quick video, and then I'll be right back with you to introduce the rest of the day. So enjoy the video.
Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, there is a great introduction to MetaStock, who we are, what we do here. But this is the Traders Conference. We are excited to have you here to learn about the markets, what's going on in the markets. My name is Kelly Clement. I will be your YouTube host today, so I'll be here in the background making sure everything's running smoothly. Fingers crossed. Make sure everything to YouTube is going out okay. In just a moment, I'll introduce you to Jeff Gibby, who will be your conference host who will be presenting throughout the day, introducing the presenters. And we do have a great lineup of presenters today. So let me just show you that really quickly. If you go to, the easiest way is actually just to go to metastock.com, metastock.com. And then what you'll see there is you'll see this this page where you just up at the home banner. I'm not sure why it's not fully loading here, but if you click that register here to save your spot, it will actually take you to a page. It's going to show you, well, let's see if I can get it to load here. It's going to show you everything that's going on in the conference today. You can see it defaults to today's schedule. And then you can go through and you can look at all the presenters who are presenting today, what they will be talking about. And then also at the very bottom here, you'll see this other option down here to register for the event. Now, you are here on YouTube, so you can watch the event, but if you would like to register for the event, we will be giving prizes away throughout the day. So make sure you register there. So you can actually click on the link that I put in chat, metastock.com/traders-conference, or go to metastock.com and click on that homepage banner, and it will take you right there. So we've got about a minute and a half before we get started. I'm just gonna go check in with the presenters. But while you're waiting, say hello in chat. Tell us where you're coming in from. We'd love to hear from you and where you're coming in from. I'll be right back. Okay, looks like we are all set, ready to go. It looks like we've got all the technical difficulties worked out. We're set to go. So enjoy today's conference. Be sure to be interactive, ask lots of questions, and enjoy. Have a great learning day, everybody.
You're good on your side. Thank you, Neil. Really, I'm just going to leave the mic on right now because as soon as Kelly tells me it's go time, it's go time. All right. Thank you, Charles, for that. All right. Welcome. Good morning, everybody. It's good to have you here today. We've been having a fantastic conference. Thank you, Charles, Klaus, Neil, Felton. Thank you for letting me know you can hear me. If you're on YouTube and watching this, make sure to like and subscribe. It helps a great deal. And also, let me know everything is coming through okay, because we always feel better when you can hear us. like it's just one less thing we have to worry about. In any case, welcome to the conference today. My name is Jeff Gibby. I'm going to be the Master of Ceremonies, I guess is the official title, but that just means I'm going to introduce all of our great guests and read a legal disclaimer. Speaking of which, let's go ahead and get right there. So today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock has no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. I'm getting a note from Bobby in YouTube, and MetaStock, the audio is coming through. So everything looks good. Anyway, two things before we get started. Well, three things. I want to say thank you for everybody that's come so far this week. I hope you've been learning some stuff. I hope you've been enjoying kind of the conference. Very happy personally with how things are going. Also, thanks to all the great speakers that have spoke so far. Thank you also to Stocks and Commodities Magazine. Stocks and Commodities Magazine, as you may have heard over the course of the last couple of days, has sponsored all of our events, every single one of them for the last 10, 11 years now. We appreciate them. They've done such a great job. It's a great magazine. The other thing that they do that's really cool is if you do a subscription to MetaStock today, they're going to give you 5 months of their magazine for free. And if you spend $300 or more, they'll give you a 2-year subscription. Great magazine. Can't speak highly enough of it. They do a good job. We appreciate it. The other sponsor I want to thank before we get started today is cmtassociation.org. CMT, you see a lot of people, particularly a lot of the guests we have have a CMT designation after their name. If you CMT is a very, very highly accredited, highly respected organization, and they deal in risk management, systems development, technical analysis, portfolio management. We have Tyler Wood from CMT coming in to talk a little bit later about how much a CMT designation can help you if you're managing money or you're looking to manage money. And it's really eye-opening. But he's going to come on a little bit later. Thank you, CMT, for sponsoring the event and helping us out with them. cmtassociation.org. And then, of course, we're MetaStock. We're going to be talking about MetaStock all day. MetaStock, 30 years in a row, #1. The offers that we're doing all day long is if you buy a month of MetaStock, we'll give you a second and third month for free. And Stocks and Commodities will kick in 5 months too. So if you haven't tried out MetaStock before, it's great at scanning, testing, forecasting, all of that stuff it does really, really well with. Give us a call. Metastock.com/sales chat would be a way to chat. If you want to call, it's 800-882-3040 here in the US and Canada. You can also go to metastock.com/comp promo. So that's my part. Our first guest today, and I have been actually kind of going in and spending a lot of time actually with the Sublime trading strategies, and it's actually they're very, very nice. So I've kind of become, but it's also Zaheer's very first time today. So let me go ahead and make him the presenter. Zaheer, can you hear us? All right, Zaheer, I can see your screen. I can't hear you though.
Testing.
I can see you. Hear me? All right, cool. We're good. I can see your screen. I can hear you. I'll be here if you need me, but I'm going to get out of the way for now. It's your turn.
Fantastic. Right. Thank you very much for having me, MetaStock. Hello, everyone. I'm based here in London, in the UK. I believe most of the people on here will be US based. So delighted to connect across the pond and hopefully be able to show you maybe a refreshing, a revamped and updated approach to the stock market, where we use proven old school techniques, but we combine a layer of technology, bring them together to create a style that's very relevant for us as busy everyday people. And I think that's really the point that I'd like to bring to the forefront here, that most people on here will be everyday individuals, you'll be business owners, employees, married, kids, etc. And what we want is a style of investing that can adapt around that without compromising on time, without compromising on profit. So focus of today is how to identify stock market trends for maximum profits in 60 minutes a week. I'll try and get this presentation down as swiftly as possible so that we can end up with any questions at the end. And Jeffrey, if you feel like you need to come in at any point with any questions, please do interrupt me. Okay, so let's get straight in. Let's lay some groundwork. First and foremost, as I've already mentioned, most of us on here will have some sort of lifestyle. It'll either be a career, it'll involve a career rather, hobbies, family. You may be married with kids, definitely some kind of social life involved, hopefully, and potentially some sort of companions as well. This all comes together to create a lifestyle. And so what this means is that the #1 challenge for most people is that time is short. And what we want is an extremely efficient strategy in managing your portfolio, but for maximum returns in the minimal time you have. So let's start with some numbers. Now that we've laid that foundation, let's start with some numbers. Question I usually ask people is, have you worked out your desired ROI, your desired return on investment that you're looking to hit year on year? If we know this number, then we can reverse engineer the process. So let's start with a calculator. I've got some numbers on here. I'll go through them right now. I know it's in pounds, but it could quite easily be converted into US dollars. So initial investment, let's say, is 20,000 US dollars. And let's say the desired amount that you want at retirement is a cool £1 million, $1 million. You want to achieve that over the next 20 years. And you're going to be able to contribute an additional £100 or $100 a month over the next 20 years. To convert to reach that $1 million target from $20,000 to $1 million and adding $100 additional every month, over a 20-year period, you need to be aiming at 19.78% annually, ROI, okay? Your return on investment needs to be just under 20%. This is a very achievable target. It may not seem like it based on some of the returns that are being given out there from traditional investments, but if we look at what we're doing in this presentation, these sort of returns are extremely possible. So let's reverse engineer this process. How can we hit 19.78% annually, year on year, over the next 20 years? Well, banking system is not even an option, right? I don't know what it's like in the US, but I'm pretty sure it's similar to the UK. Here in the UK, you're getting less than 1% a year. So leaving money in the bank, definitely not an option. An S&P 500 tracker fund, not a bad starting point. You'll be looking at around 11% a year over a 20-year period. Not bad at all, certainly better than the banking system, but not getting anywhere near that 20% return that we're looking at. Now, if you're looking at hedge funds, depending on which hedge fund you're going to, which route you're going down, anywhere from 5% to 15% a year. The challenge, of course, is finding a reputable hedge fund. We know last year, for example, there were a lot of hedge funds that underperformed. Some of them went bust in the correction of 2022. So that's the challenge. You're giving your money away to someone else, and how reliable are they? Real estate, always part of people's portfolio. I'm not a big real estate fan. I own my property that I live in here in the UK, but that's it. I don't have a vast property portfolio, but if you do, generally 10% to 11% a year is what you're looking at. Wine, very interesting. I did a bit of research into this. I'm not a drinker at all, but wine, interesting, 13 to 14% a year over the last 15 years. So you can see there are some interesting returns that you can be achieving quite consistently. But here's the thing, trending stocks will return you over 30% per annum. This is what we've achieved over the last 10 plus years. And trending stocks, and I can throw in commodities, I can throw in currencies as well, which I'll look at briefly today. That's really where the vast majority of my capital is always kept, because stocks, trending stocks, are so consistent in terms of the maturity of the market, in terms of the opportunities available. I don't need to diversify widely before that, massively beyond that. I do have a small crypto portfolio, again, a tiny capital in Ethereum, for example, and a few other cryptos, but the vast majority of my capital, and I'd say 96, 97, 98%, is always in trending stocks. And that's simply because of the returns that I achieve compounded year on year over the last 10 plus years. So just to give you some sort of proof of what we've achieved, 2020 to 2021, if you look at the starting amount, this is a broker account that I opened, I funded purely for the purpose of being able to share my returns. I think this is really important in the space that we're in. There's a lot of claims, there's a lot of theory, but there aren't a lot of people showing their returns. And what we tend to do here at Sublime Trading is show the returns plus a complete history of all the trades that we've taken. So you can see from 2020 to 2021, we achieved almost 90% in that period. And you know, if you want these the trade log, the complete trade history at the end of this presentation, reach out to me and I'll happily share this with you. Now, the question is, what happened in 2022? So 2022 was a down year. 2021, end of 2021, we actually started managing funds. People approached us and said, hey, you know, we're not really interested in the education side, but we like your returns. Will you start managing funds? We did that at the end of 2021. We opened a fund. And we've got over 7 figures in that account. Here's one of the accounts with £1 million in there with one of our investors. And you can see that, unfortunately, the first year of our fund was a down year. But if you look at the drawdown, it was less than 6%. So this is the beauty of trend following or investing, which is what I'm going to explain today. In periods of boom and strong trends, you want to maximize the profit. In down periods, you want to keep your losses to a complete minimal. And you've got to repeat this process again and again and then again over 10, 15, 20 years. And that's how you will achieve substantial returns. So again, as I said, these are real returns. This is live money and live accounts. I just wanted to show you what is possible in good periods, market trends, and how you want to protect your capital during down periods. Okay, so let's get into the depths of this, the meat on the bones. How is this all done? So first of all, what is a trend? Well, the definition is the general direction in which something is moving. So in terms of markets, what we're looking at is a market going up. This is a bull trend, or a market going down, a bear trend over the long term. So what we're looking at is 12 to 24 months, typically before there's some kind of market correction. Now, I just want to drive this point home using fashion. Now, fashion can be broken down into either trends or fads. Trends, excuse me, let me just, if you just give me a second, guys, I just want to be able to move this out of the way. It's just blocking my view. All right, I hope that's fine. Okay, so trends typically last 3 months to a year. Whereas fads, they come and go. Trends create global movements. Fads, they're forgotten about and laughed at. Trends, trend following. This is investing in medium to long-term trends for wealth. This is how you want to look at trends in the market in terms of long-term movements in the market. Whereas day trading is where you're jumping on short moves for quick riches. As retail investors, we really want to gravitate towards the trending side of the market, so not the day trading side of the market. Day trading is sold as this sort of sexy way to quick riches, and people tend to buy into it a lot. And it tends to be a lot of wasted time and money and heartache before the penny drops that actually day trading doesn't work. Whereas trends, these long-term moves in the market, it's a timeless approach. Trends have been features of the market going back to the creation, the very dawn of the financial market. So what we want to do is take these old school techniques that already work, and we want to apply them to modern market conditions. Now, you know, if you look at performance tables, value investors, people like Warren Buffett, they're found mid-table. Whereas if you look at trend followers, they're always found at the top of performance tables. So we need to look at trend followers and figure out what they're doing, and we want to copy them. And that's what I started doing in 2007, 2008. When I read books like Way of the Turtle by Curtis Faith, How I Made $2 Million in the Stock Market by Nicholas Darvas, it all really started making sense to me. And trends are the way that we want to go. So just wanted to really drive that home, the idea of the difference between trends in fashion, which can last 3 months to decades, and fads that just sort of come and go and laughed about. We want to focus on trends in the market. So what are trends in the market? Well, as already mentioned, we've got bull trends where markets go up. We've got bear trends where markets go down. And we've got consolidations where markets go sideways. Now, don't underestimate the power of consolidations, because a consolidation is a sideways market. And there's an expression, which is the longer the consolidation, the bigger the breakout. So we want to look at consolidating markets. We don't want to trade them. But if we can find assets that are consolidating and then breaking out from consolidations, that's when we can get in early into trends and start making profit. And I'm going to show you exactly how we do this. Now, bull and bear trends are the two most profitable period in the market. That's a fact. People tend to dispute this a lot, but it's incorrect. Bull trends and bear trends are the two most profitable periods in the market. And that's really what we want to focus on. Now, I just want to sort of drive home the point on how important it is to understand market conditions, because often people will get caught up in what's happening on the news. And when you get caught up on what's happening on the news, you get really confused and disorientated in many ways in terms of what is actually happening. So I've gone as far back as 1990. So I've gone 30 odd years, and I just wanted to sort of break down how much of the last 30 odd years we've been in bull markets, bear markets, and sideways markets. So if you look at bull markets, we've been in bull markets for 22 to 23 years. I've said 23 years as a question mark, because if you look in the bottom left corner, I've put a question mark next to 2023. At the moment, 2023 is looking bullish, but until it actually confirms a full-on bull market, we don't know how it's going to end. So I've just put a question mark next to 2023. We've had 4 years of bear markets and we've had 6 years of sideways markets. So what this tells us is that our bias should mostly be bullish. We should be aware of bear markets and we should also be aware of sideways markets. But generally, the stock market moves up over the long term. Okay, however, there is another variable, and that is the 10 sectors that are in the stock market: energy, real estate, healthcare, consumer discretionary, utilities, communication services, financials, consumer staples, technology, and materials. We've got 10 sectors. Now, why is this important? Because ultimately, guys, money flows between sectors. So if we go back to 2020 to 2021, when we made that almost 90% return, most of that profit was made in communication services, technology, and real estate. Now, at the end of 2021, at the start of 22, money started leaving those sectors. And while everyone else was thinking that we're in a full-on market crash, healthcare and energy were doing very, very well. So we had some stocks in healthcare that continued to move up, and in energy as well. So it's really important to ignore the news and focus on what the markets are telling us. Now, after 12 to 24 months, healthcare and energy, the money may start leaving those sectors and may move to materials, consumer discretionary, and financials. These are just examples. Of course, I don't know which sectors will come alive. That's where scanning and analysis comes in. But ultimately, it's just an example of how money will flow from sector to sector every 12 to 24 months. And if you can identify where the money is, and that's where tools like MetaStock are fantastic, because MetaStock allows you to scan for stocks, allows you to scan for sectors, and you can really pinpoint exactly where the money is. And we've been doing this using MetaStock and a number of other scanners together to really narrow down to where the best performing stocks are. Ultimately, what you want are the best performing stocks in the strongest sectors. And if you can rotate between this, you'll consistently make those sort of 19.78% returns that you're looking at year on year. Okay, now sectors invested in over the years, just wanted to give you an idea. 2017, consumer discretionary, financials, industrials. Then in 2018, the stock market went flat and we actually made decent returns on the US dollar Turkish lira, which was one of the only currencies we traded. Then in 2019, we were in technology, consumer services, and palladium, which was booming at the time. CV19, unfortunately, at the towards the tail end of CV19 and at the tail end of 2019 and the beginning of 2020, we were dealing with the coronavirus. And of course, we had that huge drop at the start of 2020. The markets found support in March of 2020, and then we saw a recovery. So from 2020 to 2021, we were in technology, communication services, and healthcare. 2022, healthcare and some dollar pairs. The currency markets didn't really work out, which is why we had that sort of 6% loss. And now, 2023, where is the money? Well, consumer discretionary is looking good. Healthcare is still looking fairly interesting. Financials and materials are looking interesting as well. So you can see how we've had to rotate between the sectors rather than just go, hey, I'm just going to buy Tesla and hold Tesla for the next 20 years. It doesn't work like that. You can do it. It's one approach, but it's very inefficient. A better approach is to hold stocks while they're booming. When they start turning or consolidating, take your profit, move to the next sectors, and round and round and round you go. Okay, so quick question, a quick point I want to cover here. Why you must use technical analysis to identify trends? Well, there's two ways of doing your analysis: fundamental analysis and technical analysis. I just want to look at fundamental analysis very, very quickly. Fundamental analysis is suited for institutions. Why? Because they pay thousands of pounds to get news early. They have whole floors of analysts to go through the news. They have vast sums of capital. We're looking at billions of other people's money. And ultimately, they're positioned well to profit given that combination. For us, using fundamental analysis and trying to go down this Warren Buffett value investing approach is very difficult. It's uber expensive and it's time consuming. And it's how people regularly end up in that catching a falling knife scenario. You know what I'm talking about. You're buying an expensive stock that's now cheap. You're buying it at a cheap price and you're hoping for it to reverse. Instead, what tends to happen is that cheap stock keeps on getting cheaper and cheaper and cheaper and keeps on dropping against you. If you think about it, guys, think about the logic. What you're doing is you're buying a stock on the way down, hoping for it to reverse. That's how you end up in a catching a falling knife scenario. And that's usually because of all the sort of fundamental analysis that people do around it. Remember, guys, a stock is only a piece of paper and is worth what someone is willing to pay for it. That's all it is. You may want to look at it in a much deeper philosophical way. That's fine. But ultimately, it's simply a piece of paper and it's worth what someone is willing to pay for it, regardless of your opinion, regardless of your analysis. Sometimes I use the analogy of Cristiano Ronaldo. He's 37, 38 years old, and he's now earning $200 million in Saudi Arabia. Now, a lot of people out there may think he's not worth that, but the Saudis do think he's worth that because of the fact that he's a brand and what he will bring to Saudi Arabian football. So there is someone out there who's willing to pay him that. And that's how you want to look at stocks. It doesn't matter what you think the price of a stock is worth. If it's continuing to go up, there's people out there willing to pay for that stock. If the stock is going down, you want to avoid that situation. Now, why is technical analysis so powerful? Because it's suited for busy everyday people. Why? It's simple to learn. It tells us where the institutions are. That's important. We need to know where they are because they provide the liquidity and the trends, but we don't want to trade like them. We want to be able to jump on them back and piggyback the ride. They're doing all the work. We're just riding the trends. It takes minutes a day, a week to manage a portfolio, which is perfect for busy people. And this allows us to position ourselves to profit from long-term trends. And also, this is a repeatable system that we can stick to. So that's the beauty. Technical analysis is simple, it's proven, it's profitable. Also, it focuses on price. That's the primary indicator of technical analysis. The stock price tells us everything we need to know. Fundamental analysis tends to focus on everything around price. So this is why technical analysis is so powerful. But here's the thing, guys, don't get it twisted. The odds are not stacked in your favor at all. As retail traders, it's designed to take money away from us. That's I'm talking about the financial markets here. And that's where the term dumb money versus smart money comes in. The institutions consider themselves the smart money. They think that we, the retail investor, are the dumb money. So we have to think like the smart money. We don't have to act like them, but we have to think like them. We have to align with them and piggyback off the big dogs. So we need to know where they are so we can jump on their back and piggyback the ride. So let them create the trends. We ride the trend. So here's an example, guys. Let the institution do all the hard work using fundamental analysis. All we need to do is identify the start of a trend using technical analysis and then piggyback the ride. So this is an example of a stock, McKesson Corporation, MCK, so US stock, which you guys hopefully be familiar with. It's in healthcare. This moved over 50% in 2022 when the rest of the stock market was down. The S&P was down 28%. McKesson and a number of healthcare stocks, they continued moving up. And that's the beauty of scanning and identifying where the money is. Okay, part two now. Let's move into this. Aligning yourself with the market. What does this mean? Well, the 3 C's to trend following: clarity, control, and consistency. If we have these 3 elements and bring them together, we have this sweet spot in the middle to identify where the money is. So what do I mean by clarity, control, and consistency? Well, the 3-step blueprint. Step 1, clarity in establishing market conditions. We want to know whether we're in a bull market, a bear market, or a sideways market. That's step 1. Step 2, control over identifying the very best high probability assets once clear on market conditions. So once we know overall whether the market is bullish or bearish, we can then identify the best bullish stocks or the best bearish stocks. So these are steps. Step 1, step 2, and then step 3, consistency in maximizing profit and managing your portfolio with confidence and peace of mind. So that means using a strategy to extract profit from the markets. So I'm just going to go through that again. Clarity in establishing market conditions, step 1. Step 2, control in identifying the very best assets to invest in. And then step 3, executing a strategy to extract profits consistently from the market. Those are the 3 steps that we want to be going through again and again and again. This repeatable approach to the markets. It doesn't have to be complicated. It's simple, but it's not easy. That's the expression. It's all very simple to learn, but it's not easy. And what that means is that you've got to do this. It's got to be part of your routine. And people tend to give up on it very quickly, or they don't really get the right strategy in the first place. They bounce around from one short-term strategy to another and never really knuckle down to one strategy that they can stick to for the rest of their life. This is something that you will be able to do. If you really allow this to sit to the message to seep in, guys, this is the system that you've been looking for, one that you can adapt around what you do day to day without having to compromise on time with your family, time at work, but still have your portfolio growing in the background. Okay, step one, clarity in establishing market conditions, bullish, bearish, or stand aside. So how do we do this? Simple. We use the S&P 500. Why use the S&P 500? Well, it's a major US index. Other indices tend to follow the S&P 500. So whatever the S&P 500 is doing, the Dow, the NASDAQ, the Russell, the FTSE, the UK index, they all tend to follow what the S&P 500 is doing. So we don't need to look at all of them. Let's just look at the S&P. It's an average of 500 leading US publicly traded companies. Because of its depth and diversity of stocks, it's widely considered as the best gauge of the entire equities market. Most stocks moving up, if in the S&P 500, most stocks are moving up, the stock market is bullish. If most stocks are moving down, the stock market is bearish. If there is a mixture of stocks moving up and down, it's a sideways market. The S&P 500 is the barometer of the stock market. The pressure tells us whether the market is bullish, bearish, or neutral. So it's a perfect barometer, a perfect measurement to align with in terms of determining whether we are bullish or bearish. And what's beautiful about this, guys, again, if you turn off your news channels, ignore everything that's being pumped at us through our media channels, or social media, news channels, newspapers, whatever it is, and just focus on the S&P 500, I guarantee you guys that you'll have a much more peaceful time in the financial markets when it comes to making your investment decisions. The big bad world is not designed to keep you peaceful. It's designed to keep you frustrated, stagnant, confused. If you just look at the most simple indicator, it will remove all of that and it'll give you a much clearer indicator of what the market is actually doing. Okay, so how to use the S&P 500 is probably what you're asking. Look at price in relation to the 200 simple moving average on both the weekly and daily timeframes. The 200 SMA is a proven and timeless indicator of the long-term trend. So here's a quick history lesson, guys. Old school traders used to draw charts by hand. And because they drew charts by hand, they were very selective with the information that they put on their charts. The 200 simple moving average, they discovered the 200 simple moving average as to be a proven indicator of the long-term trend. So if price was above the 200 SMA, it'd be a bull market and they would buy. If price was below the 200 SMA, it would be a bear market and they would sell. Institutions still use that logic today. It's a flawless, timeless marker of the stock market. And so we want to use techniques that work. We don't want to reinvent the wheel. Use techniques that work and get it working for us. Keep it simple. So market conditions, let's have a look, guys. In a bull market, we want to see price, the S&P 500, how to use the S&P 500 and the 200 SMA together. Well, in a bull market, we want to see price above the daily and weekly 200 SMA. That's a confirmed bull market. And the reason why I say 2023 at the moment is a confirmed bull market is because that's what we have at the moment. We have price trading above both the daily and weekly 200 SMA. How long that will last remains to be seen. But currently, we are in bullish territory. The bear market is a reverse. Price below the daily 200 SMA and the weekly 200 SMA. Interestingly, if you go back to last year, 2022, price never moved below the weekly 200 SMA. So for me, it was not a full-on bear market. The last time that happened was in 2000 and in 2008. They were the last two real bear markets in the stock market. Last year was not a bear market. It was a deep correction for sure, but it wasn't a bear market. And that's because price didn't move below the weekly 200 SMA. Now, if we have any other combination, above the daily, below the weekly, below the daily, above the weekly, that is a sideways market. So through most of 2022, we had that first combination. We had the bottom combination where price was below the 200 SMA, but above the weekly 200 SMA. In fact, since 2010, the weekly 200 SMA has been acting as this sort of trampoline where price comes back to the weekly, bounces off it, back to the weekly 200 SMA, bounces off it. So it's been acting as a trampoline since 2010. This is, again, if you focus on the 200 SMA and the S&P together, it's amazing how much clarity it gives you. So this is the first thing. Use the S&P to establish market conditions. So this now should make a lot more sense to you. This is the table that I showed you earlier. Now you will kind of understand how I've come up with these numbers. Now, these are sort of, these numbers may be off by a few months on either side, but it's pretty accurate in terms of how much time the S&P has spent above the 200 simple moving average. you can see that we've been in far more bullish territory than bear markets and sideways markets, simply based on price on the S&P 500 in relation to the 200 simple moving average. I hope that makes sense, guys. If you have any questions, please ask at the end. And also, if I'm correct, this is recorded. Of course, rewatch it to review and revise, and reach out to me if you have any questions on it. Okay, right. Let's move on. Once the S&P 500 has confirmed a bull or bear market, guys, look at what I'm saying here. Once the S&P 500 has confirmed a bull or bear market, not what you think, not what you feel, not what the news is telling you. Once the S&P 500 has confirmed a bull market, I'm using indicators, proven indicators, to tell me what market conditions I'm in. We then scan the market for opportunities. Step one, use the S&P. Step two, start scanning the market for opportunities. So remember, the S&P 500 is the stock market. That's a typo there. That should say barometer. The S&P 500 is a stock market barometer and also an average of 500 stocks. Logic should prevail that if we scan and invest in stocks performing better than the S&P 500 in a bull market, we will make better than average returns. Scan and invest in stocks weakening quicker than the S&P 500, which is the average. In a bear market, we make better than average returns, right? Let's look at this visually. This is the S&P 500. This is an average. Some stocks will match the average. Some stocks will underperform against the average. Some stocks will outperform the average. These are the stocks that we want to scan for. Again, this is where tools like MetaStock come in, where you can scan for stocks outperforming the average. And these are the stocks that you want to have in your portfolio for the next 12 to 24 months. In a bear market, we reverse the logic. We're looking for stocks that are weakening quicker than the S&P 500. And these are the stocks that we want in our portfolio over 12 to 24 months, and then rebalance the portfolio. This is how we exceed the average. And now it's important, guys. Sound stock investing is not about buying and holding forever. This is another fallacy that people buy into. Hold stocks when in trend. That is our friend, right, guys? The trend is your friend, as the expression goes. And exit stocks when it confirms the bend at the end. Okay? The trend is your friend until the bend at the end. Hold stocks when in trend. That's our friend. Exit stocks when it confirms the bend at the end. Now, move between the cycles of the stocks, sectors, and other assets. This is what you want to be doing consistently, which involves rebalancing the portfolio every 12 to 24 months. It's a crucial aspect that people tend to overlook, usually because they're emotionally tied to the stock that they're buying in. Like, we know everyone wants that piece of Tesla. And once you buy a piece of Tesla, you find it extremely difficult to let go of it, because there's this element of wanting to be right rather than wanting to make profit. If you focus on the performance of a stock rather than the asset name, you switch that mentality around, and now you're focusing on the performance rather than ego and being right. And this is really important because you'll know when to be in the stock, and you'll also know when to let go of the stock. If there's an element of wanting to be right, you'll just end up holding stocks for no reason other than waiting to be right. You just end up wasting all of this time and money. Now, in a sideways market, stock market, we must stand aside and protect capital. Again, remember, guys, standing aside is also a position. There's this idea that just because you're an investor or a trader that you need to be taking trades all the time. You don't. Standing aside and protecting capital is fundamental to the approach, which is what I was doing through most of 2022. But because standing aside is also a position, but also be dynamic and look for emerging trends in Forex and commodities. So what I mean by that is that sometimes when the stock market is tanking or going sideways, where has the money gone? Well, gold can start moving. Silver will start moving. Palladium may start moving. Euro dollar, dollar yen may start moving. So look for opportunities in other markets. Your primary focus should always be stocks, just because of how many opportunities and how well it moves, how mature the market is. But then keep an eye out on commodities and Forex in case they offer opportunities as well. You don't have to do that. You may want to just focus on US stocks, and believe me, you'll do very, very well. But you don't want to ignore the other markets, because diversification is important. Over diversification isn't important. Diversification is important. That's important. There's an important distinction. Now, I just want to do a comparative return here, guys, just so that you understand potentially what can happen if you move away from investing in the average and start investing in stocks outperforming the average. So I've got a table here. Let's say, so you've got asset, which is the S&P 500 tracker fund, where you basically set up a direct debit and pay into a tracker fund every month, or whether you do more advanced techniques, which I'm showing you here, and you invest in individual stocks outperforming the average. Now, let's say with both, you start with $20,000. The time period is over 20 years. And let's say you add an additional $100 a month contribution to your portfolio. Let's say with the S&P 500 tracker fund, you're getting 11% a year. With individual stocks outperforming the index, you're making 30% a year. After 20 years, you'll have almost $250,000, which is not bad for doing anything other than setting up a direct debit and transferring money into the tracker fund on a monthly basis. So not a bad return at all. However, look at the difference, guys. If you invest in individual stocks and achieve greater than the average, the difference is in the millions. So this is why you want to get away from thinking like the average and thinking in terms of just investing in the average and look beyond that. I've been on LinkedIn for quite a while, and I'm quite active on LinkedIn. Hopefully you guys will connect with me and follow me on LinkedIn. Put a lot of content out there. The financial educators on LinkedIn will tell you to only invest in the S&P 500 because investing in individual stocks is time consuming, it's difficult. It isn't. It's very straightforward. But there is a process to it, and that's what people tend to overlook. Okay, so how do you shortlist the very best stocks? Well, control over identifying the very best investment opportunities in stocks, commodities, and currencies. How do we do this? Well, you need a scanning and analysis process. So we start with over 10,000 stocks, commodities, and currency. We want to go through a filtration system that brings out the very best 10 to 20 stocks that make it into your portfolio. So how do I do this? Well, tier one, I use professional scanners programmed with a blueprint, scanners like MetaStock. That will take my initial list and give me a more manageable list of 50 to 500 assets. I then take those 50 to 500 assets. I go through a second filtration system, which takes anywhere from 1 hour to 3 hours, at least, certainly at the weekend, but I tend to do it daily. And that then gives me my 10 to 20 stocks. So you can see the process that I go through. Scan the market, create an initial shortlist, manually go through that shortlist, going through tools that I've developed, charting tools that I've developed. I've also developed them for MetaStock as well. So I can be sharing these out with you guys. And then through that process, I consistently get the best 10 to 20 stocks that make into my portfolio. Now, preparation starts at the weekend, but I tend to do this daily, and we certainly do this process daily for our community members here at Sublime Trading. So they don't need to do this. They outsource this to us, and we do it for them. Now, just to give you an idea of what we do then is that if you look at tier two, where it says that bespoke charting tools and blueprint checklist, well, we have a checklist system that every chart goes through. There's 6 indicators on the monthly, 4 indicators on the weekly, and 6 indicators on the daily. So that's 16 indicators in total. When those 16 indicators are met, I then look to take a position. If those 16 indicators are not met, I don't take a position. If they are met, I take a position. So it completely removes all the guesswork. This is what my checklist looks like. There's some terminology on here that you won't be familiar with because it's just language that matches the tools that we've developed. But I'm going to give you a simplified version of this in a second. But the beauty of this checklist system is this. There are 2 big problems you need to solve. 1, you're up against the markets, and 2, you're up against yourself. And arguably, the second can be more challenging. You can often be your own worst enemy rather than the markets. And ultimately, what people are dealing with are 16 investor biases that can significantly impact performance. These are those 16 investor biases. And here's the thing, guys, you could be dealing with as many as 4 at any one time. Pattern bias, overtrading, risk aversion, a herd follower, these all come together to really affect your performance. So by having a checklist system, what tends to happen is that you adopt a proven edge. An edge is where you have more chance of making money than losing money. And if you don't have an edge, guys, it's really, really important that you understand that if you cannot define your edge, you don't have one. And if you don't have an edge, you will get eaten by someone who does. So having an edge is crucial. And so by adopting a proven edge and using a checklist system, you negate those biases, you depersonalize the process. There tends to be a lot of people thinking that the market has a personal vendetta against you. It doesn't. It's just the decisions that you're making. So by following a proven checklist, you depersonalize the process and force yourself to focus on market structure and high probability setup. This is the investor mindset. Also, you eliminate luck with a proven and easily identifiable edge. There's no luck involved. We're playing on probabilities. And you can replicate this process again and again, stock after stock after stock, year after year after year, choosing only the very best high probability stocks with clarity. Odds always stacked in our favor, improving performance. You can see how we're doing that all the way through, guys, by starting with the S&P 500, start scanning for the best stocks. Once we've got the best stocks, then moving towards the strategy and starting to extract profit. You're constantly stacking the odds in your favor. So I want to focus on the monthly. This is a simplified version of the checklist, but I really want to focus on the monthly time frame, guys, because if the monthly is all met, the weekly and the daily tend to take care of themselves. So I'm going to focus on the monthly for a second. What am I looking for? Well, I'm looking for a history of trends, a long-term consolidation. Remember what I said earlier, breakout from consolidation, start of the next trend, new all-time highs. This is what I'm looking for. History of trends, long-term consolidation, breakout from consolidation, start of the next trend, new all-time highs. So what does this look like? Well, a history of performance. I'm looking for a stock that has trended well in the past for 12 to 24 months. If it's done it well in the past, it's likely to repeat in the future. I'm then looking for that stock to go through a sideways movement. Remember, sideways movement, the longer the consolidation, the bigger the breakout. Think of a consolidation as the roots of a tree. If the roots are strong, the tree will be strong. So if we can find a trend that is breaking out from a long consolidation, that long consolidation will be the strong roots for a trend to develop. And so what we're looking for is a breakout from this consolidation and a continuation of the trend. So history of trend, long-term consolidation, breakout, and the start of the next trend. And this is where we want to get in and invest. And we want to see that trend develop over the next 12 to 24 months. And this is what I'm looking for on the monthly time frame, guys. Trend, consolidation, trend. I've highlighted a lot of stocks on LinkedIn at the start of this year that are all following this pattern. And these are stocks that are now trending and returning profit. So this is the kind of patterns that you need to be looking for. Trend, consolidation, breakout, and start of the next trend. Okay, so I'm just going to switch over to MetaStock quickly. I appreciate that I am now running out of time. So I am going to be as quick as possible. So I'm just going to let Jeffrey confirm whether you can see my charts.
We can see them.
Perfect. Okay, brilliant. So I'm just going to open up the monthly time frame. This is McKesson Corporation, guys. So this is the stock I was talking about earlier that I've been in since the start of the year. If you have a look, it's end of 2021, I've been holding this stock. And I'll show you how I did it. History of trend. You can see right there, guys. History of trend, consolidation. And then it was this bar here, December of 2021, where the market broke out and moved 60%. And it's all it is, guys. That's all I looked for. Trend, consolidation, trend. That's how simple it is. Now, of course, once you're in, that's where the emotional biases start coming in and where you want to have a process. But in terms of actually identifying a stock, it's as simple as that. Right, let's move on to the next one. Right, Progressive Corporation, guys. You can see here, trend, consolidation, which was around that $100 round number. And you can see how it's been trending since it broke out from consolidation, which was at the end of last year, October. Arch Capital Group, another US stock, guys. You can see trend, consolidation, and trend. Look how well it's trending since this breakout in at the end of last year, October of last year. Look how well it's trending. Again, trend, consolidation, trend. Okay, hopefully I've got Burberry. You should be familiar with the brand Burberry. It's a UK stock. If you can see here, guys, look at the trend, right? You have this trend from 2009 to 2011. Then it went through this huge consolidation, but now it's starting to break out. And this is a stock that we've recently added into the portfolio. It's very early days. It's in a little bit of negative because it's just the start of the movement. But ultimately, you guys can see how we followed this pattern of trend, consolidation, trend. So if you can repeat this again and again and again, starting with everything I've talked about, scanning, finding those stocks, a simple scan such as give me all the stocks printing new all-time highs. That will reduce a ton of stocks down to a few stocks that are worth managing and looking at. So really important. I hope that really makes sense to you guys. Look for that pattern. Okay, I am now just going to quickly switch back over to my monitor. Are we good? Please there, Jeffrey?
We can, yes, we can see your PowerPoint.
Fantastic. Thank you very much. Okay, so maximizing your profit potential. Step 3, executing a trend following strategy and managing your broker account. So the right combination of skills. What do I mean by this, guys? Well, you want to adopt technical analysis like a trader using cutting edge technology, but you want to hold positions like an investor. And this will then allow you to manage your portfolio in 30 to 60 minutes a week for maximum profit. So basically, you've got 2 skills here. You've got to be able to do analysis and you've got to be able to invest. These are 2 separate skills that come together to put a portfolio together. I think people tend to overlook that. Put it this way, is using charts like a trader, technical analysis, and then holding your positions like an investor is the perfect hybrid approach for busy everyday people. Think about it. If you're a bad analyst and a bad investor, you'll have a poorly performing portfolio. If you're a good analyst and a bad investor, underperforming portfolio. Bad analyst and good investor, underperforming portfolio. But if you're a good analyst and a good investor, ultimately you'll achieve compound growth. So you can't overlook one and have preference for another. They come together. If anything, your analysis has to be spot on. Once your analysis is spot on, you've then got to be able to extract profit using a trend following strategy. They go hand in hand. So once the asset, we call these hot assets, history of trend. Once the assets that we've shortlisted, once I've gone through the scanning and I've shortlisted the best 10 to 20 stocks, once those assets have set up, we then look to take a position. Now, we've got tools that do all the hard work for us. We've developed tools that give us entry points, stop losses, risk management. Again, we've developed these for MetaStock. I know this isn't a MetaStock screenshot, but we've developed these for MetaStock as well. And what we do is we take these values and we can then put them into our broker account. Again, it's all based on algorithms, proven algorithms that allow us to stay in positions for 12 to 24 months. Entry points based on algorithms, stop losses, risk management, exit management, compound levels, all based on algorithms that allow us to repeat the process. The software creates all of those numbers. We don't have to use calculators or anything, and we just put them into our broker account. We've got tools that do that for us. Now, what does it involve to construct a strategy? Well, entry, typically 10 to 20% above or below the entry bar. Stop loss, use an ATR and a multiplier. ATR is average true range. If you use the average true range, say over 5 days, and multiply it by 4, you have a stop loss that is unique to each asset. And that's the beauty of using ATR. Risk management, specific framework, which I'm going to show you in a second. Compound levels, you want to add more of a winning stock, guys, not losing stock. Exit management, trailing stop loss, which is ultimately a safety net, which removes emotions. So this is what you need to construct a strategy. Now, the strategy must cut losers short and let winners run using a risk management framework. So I'm just going to explain what this means. Now, it's when I switched from fearing risk to controlling risk that my performance grew exponentially. It is when I switched from fearing risk to controlling risk that my performance grew exponentially. There's this idea that risk management, oh my God, it's so scary. It isn't. It's actually very, very simple. This is how I did it. This is my risk management framework. Risk per position, rule number 1, typically 0.5% to 2%. Rule 2, risk per day, typically 4% to 8%. Rule 3, max risk allocation, typically 10% to 20%. Never deviate from these rules. Focus on the downside and let the profits come to us. Now, in market conditions that are kind of new bullish markets or bearish markets, I'll be at the lower end of the scale. When the trends really kick in and we're in a full-on bull market or a bear market, then I'll move to the higher end of the scale. So there's this sort of flow, this flux from when I start testing the waters initially, little testers, 0.5% here, 0.5% there. But when I'm fully confident we're in a bull market, I then start going in harder so I can really accelerate the profit phase. Importantly, I never deviate from these rules. So an example, let's say we take 5 positions, guys. That is a total of 10%. So we've taken 5 stocks, we've added them into our portfolio. 2 of them are losing positions. So that means we lose 4%. Position 2 is break even. That means it doesn't lose us any money, it doesn't make us any money. It's a break even trade. So we're still 4% down. However, over the next 12 months, positions 4 and 5 return us 10% each. That's a total profit of 20%. So if we do the maths, that's 20% profit minus a 4% loss. That's 16% profit over 12 months. Not a bad return at all. Now let's take our winning positions further. Instead of just settling for this, let's say we start adding more of those winning positions. This is compounding. Instead of 10%, each stock returns us 25% each. So that's a return of 50%. 50%, we still have the 4% loss. We have a 46% return. This is the beauty of compounding, guys. Add more of a winning position. If you buy Microsoft and it starts returning you profit, just keep on buying more of that. That's the beauty of compounding. Now, here's the thing, though. And this is where people tend to get a little bit maybe lost in the numbers and the hype. I often get asked, what is my win rate? I don't care about winning or losing. I care about profit versus loss. If you look at this example, there are only 2 winning positions out of 5. That means I only have a 40% win rate, but that 40% win rate has returned me a 46% profit over 12 months. So instead of thinking in terms of winning and losing, which is that day trader, gambler mentality, think in terms of profit versus loss. That's the investor mindset. Compound your winning positions. My risk to reward, guys, is 1 to infinity. Why? Because I simply let my winning positions run. Okay, so your complete blueprint, almost at the end here, guys. Optimize performance with the right broker. This is something I think people tend to overlook as well. A good broker has an unbeatable array of assets. It's essential. Choose a broker that gives you everything you need and then narrow down to where the money is, first and foremost. Number 2, extremely competitive costs. Brokers now, because there's so much competition, costs are part and parcel of the process, but look for one that gives you the right array of assets first and then worry about the costs. You want flexibility of going long and going short so you can expand your portfolio. You want comprehensive risk and exit management capabilities. A good broker will allow you to control how much you risk and where you want to exit. You've got to have that in a good broker. And for those of you here in the UK, guys, we're blessed. We have leveraged accounts. I know in America you don't have leverage, unfortunately. We have leverage. We also have spread betting, which is free of capital gains here in the UK. So we're extremely blessed. But if you have any sort of broker accounts that allow you to invest tax-free, then it's certainly something worth exploring, but not at the expense of the first part, which is unbeatable array of assets. That should be your primary focus, and then the rest falls into place. Now, your investing routine, scan at the weekend. We do it daily for our community, 1 to 3 hours, depending on market conditions. Monday to Friday, manage portfolio, which will take you minutes a day because you've done all your preparation at the weekend. Repeatable and sustainable over many, many years. Adopt a trend following process that fits around your lifestyle. Calculate your desired ROI to reverse engineer the process. Invest in stocks outperforming the market so you get better than average returns. Establish market conditions using the S&P 500. Shortlist the best stocks to trend using scanners and tools. Use the checklist system to identify your edge and kill biases. Execute a trend following strategy. Focus on what is in our control. Let go of what isn't. Ultimately, what isn't in our control is the outcome of the position. Everything else is in our control. Cut losers short, let winners run, and compound and rebalance every 12 to 24 months. Guys, you can't skip any of these steps. That's the thing. You've got to build the probabilities as you go along. And the more you build the probabilities, the more chance you have on making profit. Okay, guys, your next steps, just to give you a little bit about what we're doing here at Sublime Trading. We've got do it with us, or we will do it for you, and ultimately you'll achieve the same returns, the same performance. The Griffin Fund, unfortunately, it's leveraged, guys. So again, we can't, as frustrating as it is, we can't onboard US clients. We get so much attention from Americans, but unfortunately, we just can't onboard you. So they end up joining the Phoenix community. So the Phoenix is our education academy. This is where you invest alongside us. And of course, the fund is where we do it for you. Now, just to give you a difference, in the Phoenix, you'll learn the process. With the Griffin, you'll just be familiar with the process because I've already explained it to you right here. And on calls and stuff, and in our prospectuses, it's all explained. So you're familiar with the process. With the Phoenix, you get support all the way through the process, live training days, weekly webinars, a private community, a video content, the copy service. It's all there. In the Phoenix, in the Griffin rather, we keep you updated with regular newsletters about what's happening. In the Phoenix, we share the short list of stocks. So all the stocks that go through our scanning process, we share that with our community members. In the Griffin, we email you with entries and exits of all the shortlist, all the stocks that make it into our portfolio, so you're continuously updated. In the Phoenix, we share our portfolio for you to copy. In the Griffin, you have a performance portal which you can log into, and you can see the account live, so you can see how your portfolio is actually performing in real time. And as already mentioned, the Phoenix Academy is based on a subscription model. The Griffin is based on a high watermark performance model. Okay, so guys, to keep the momentum going, your complimentary portfolio accelerator call, if you go to this link, sublimetrading.io/MetaStock, book a call, your portfolio accelerator call. This is we usually charge £1,000 for this, guys. But for you guys, everyone on MetaStock, to say thank you to MetaStock for having me here today. This is a complimentary call that I'd love to do with you all. We can look at your performance, look at what needs to change, and how we can help you get there. It's all part and parcel of the portfolio accelerator call. This is absolutely free. And once you book yourself in and attend the call, we will also give you these other bonuses as well. These gifts, the ultimate stock market blueprint for you to download, the complete methodology PDF, which has our strategy at the end. This is my first attempt at a book, guys, so it'd be good to get your feedback. More importantly, our strategy is at the back. You'll get a 30-day free trial plus a 50% discount on TradingView. We've developed the tools for both TradingView and MetaStock. So whether you want to use MetaStock or TradingView, we've got the tools to give you, which we will. The wealth calculator at the very beginning, where I calculated a 19.74%, you will get that calculator as well, plus another presentation similar to this that I did for members of the Entrepreneurs Organization. So all of that for you guys for sticking with me to the end of this presentation. Okay, and if there's one favor I would like to ask you guys, please connect with me on LinkedIn. Just do a search for my name, Zaheer Anwari, and I would love for you to follow me and connect with me on LinkedIn. I'm on around 8,500 followers, so I'm keen to get to that 10,000 mark. So if you guys can jump on LinkedIn and follow me, that would be an absolute pleasure. So over to you, Jeffrey.
All right, you want to do a couple of questions?
Please.
We have a lot. We're only going to be able to really get a couple of them. First of all, though, Benjamin said, welcome. I attended your presentations on the other side of the pond. A lot of info. You need more than an hour. On target, on my investment list, Benjamin. So good job with the presentation today.
Cheers. Thank you very much.
Let's see. Zaheer or Vivek wants to know, can you help with the Nifty stocks, like the Indian Nifty 50s? And
yeah, we actually have our community in India, and we scan the Nifty for them. So we're already doing that. So yeah, it's a really good question.
Let's see. Salam just says thank you, excellent presentation. Walter says thank you very much. Let's see. There was another comment that was in here that was worth reading out to you. I'm not seeing it. Let's see what. Okay. Vivek wanted to know. He's like, impressive, Zaheer. How has this system done in the last few years? That's pretty much what he's asking.
Yeah, over 30% per annum over the last 10 plus years. I've shown the last 3 years just for time, but we've got results that go back to as far as 2017. 2017 was a 355% year for us. 2018 was a 67% year for us. 2019, we were dealing with Corona, so we ended up having a 13% loss because of the coronavirus. So yeah, I mean, we say over 30% just because we don't want to come across as cheesy marketers, but you know, trends are powerful.
Ishik wants to know, is the Griffin Fund open to Canadians? It's a really good question.
If you're not allowed leverage, it's a challenge. I'm sure there could be ways around it. I don't know, but it's a challenge. And so, you know, what I would say is, look, the Phoenix is no different. The difference between the Phoenix and the Griffin is that in the Phoenix, you will actually see all the positions that make it into the Griffin fund. You will see all of those positions in the Phoenix. You just have to copy them. So, you know, unfortunately, we can't do it. It's really frustrating, but you know, the Phoenix is where you want to be if you can't do that, because you're doing the same thing, just yourself. Plus, I just want to add, plus you're learning a skill, and don't underestimate the importance of learning that skill, because that skill you'll have for life. And not only that, you're going to pass it on to your kids. Who's going to teach this to your kids? At some point, you have to break that financial illiteracy loop. And that's really important, because the schooling system isn't going to teach you this. So it comes down to the parents to have to do this at some point.
Okay, Jax asks if we've developed the scanner yet. Not yet. We did do a lot of development work like last week. We're working on it. So that's where I'll say about that right now. Tara says, excellent presentation, best presentation so far. So
wow,
for that compliment there.
I appreciate it. Thank you.
Walter says, hello, Walter from South Africa. Watched yesterday's conference. This is absolutely must have for me. How can I get MetaStock? And I included the link to get MetaStock. But Walter, I'm glad you're enjoying the conference. Thanks for coming.
Brilliant. Yeah.
Zaheer, that's our time.
Brilliant. Thank you.
Thank you for coming. Great job. I didn't know what to expect, and I think you did an awesome job. So thanks for coming in and spending an hour with us.
Absolute pleasure. Thank you so much for having me, Jeffrey. And thanks to everyone out there for attending. So thank you very much. Please connect with me on LinkedIn. I'd love to continue these conversations. If you want to email me, Zaheer at sublimetrading.io. Very simple.
All right. Very, very good. Thank you very much, Zaheer.
Thank you, Jeffrey. Cheers, guys. Bye.
All right. Let me go ahead and do this. I will kind of move on just a little bit. And I need to make sure my presentation. If we did miss your questions and that kind of stuff, sorry, there are a lot of them. We have a lot of people, even Thursday. So it's great to have you here. We're doing our best. Glenn says, absolutely brilliant presentation. Excellent presentation from Terrell. I think I read that already. Sterling says, thanks for your time. Okay, cool. I think we're all caught up on those. Anyway, let me go ahead and kind of turn the presentation back over to me. Make presenter, show my screen. And very quickly, I'm going to say thank you to Stocks and Commodities magazine or actually CMT. Let's do CMT this time. Thank you to Stocks and Commodities as well. If you are watching in YouTube, I'm going to ask you to give me a number between 1 and 12,773 because I'm going to give away a prize in just a second. So the very first number that's guessed out of YouTube is the number we're going to go with. It's going to be between 1 and 12,773. If you remember, we gave away a lot of really cool prizes yesterday. So I did want to recap one of the offers that we had from yesterday. Yesterday, Steve Bigelow kicked us off, and he offered basically his Candlestick Forum pack, where you can get MetaStock, Candlestick Profit System 2, one of our most popular add-ons, the Candlestick Training Bootcamp, MetaStock Real Time for a month for free, the Zenith Market Data for free for a month, Unleash Your Power MetaStock. All of this would be normally $13.98 as a conference special. We're doing it here at $6.98. So if you want to take advantage of that, give us a call, 800-882-3040. Any of the offers that we're doing, but I wanted to highlight this one real quick. We'll be highlighting some of the other offers that we've talked about. This is a fantastic one to get, 800-882-3040. MetaStock.com/sales chat. So in any case, did somebody, okay, Barry, thank you for the number in YouTube. It's 983. I just need 1 second to kind of actually, I should have done this earlier, but it won't take me too long to actually get the list of prizes open so I can keep track of it. The first prize today is going to be Larry McMillan's 2-week free, 2-week offer for his highest ed newsletter. It's published twice a day, has all of Larry's insight, that kind of stuff. It's normally $175 value, and we're going to give it away to what number? What did you give me? 983. So Barry, let's go ahead and look at 983, and we'll figure out who wins that prize. So 983 would be Mr. Traders. So let's see, Goxie J.E. Carr is like the first part of your email address. You're the one that just won. I'd give your first name and your maybe your last initial, but you filled out the registration form as traders. So I really can't do that. I don't know who you are. I will get some information over to you in terms of getting that prize, though. And if you're watching this on YouTube and you want to be eligible to get the prizes, go to metastock.com/traders conference. I'm going to go ahead and pin that up in just a second after we get Sean started. You too can be eligible for prizes and that kind of stuff. So also, if you're on YouTube, like and subscribe. That stuff helps a lot, and we like it and we appreciate it. So let's go to our next guest. Our next guest is John Osborn. John, I always talk about is a triple threat. He's a really good trader, a really good system designer, and a really good presenter. And those three things are kind of like adverse skill sets. We love bringing John on. He does a really, really good job of talking about kind of some of the things that he looks at for stocks. And so with that being said, John, how are you today?
Can you hear me?
I can hear you now.
There you go. I have a little bit of I'm getting over a cold.
Yeah, everybody is. Like, it's amazing how much sick is going around right now. I just made you an organizer, so you should be able to see questions as they come in. And now I'm going to make you the presenter.
All right, let's see if I can do the right screen here.
I'll let you know.
Monitor 2. There we go. Should see a title page which says Reveal Hidden Market Moves.
I can see that, yeah. Okay, so I'll get out of your way. It's all yours. Go for it.
All right, first I have to ask a question, though.
Okay.
What if that person's name really is M.Trader?
Then that would be a cool name. I would probably, in that case, what I would like him to do is join the army and become like Corporal Trader or Captain Trader, because that would be cool.
That'd be cool. Yeah, it would be cool.
It's all yours.
All right. Well, welcome, everybody. My name is John Osborn, and I'm from Basecamp Trading, and I'm here to tell you about something that's going to change the way you look at charts forever, because you're going to see some new technology that's able to route traders through a chart to find the best trades, just like a GPS does, and it can help you get where you're going, even if you've never been there before. So let's get started. Now, I have to do the risk disclaimer. You guys know this stuff, that trading is risky, as we know. So don't trade with money you can't afford to lose. We've done our best to ensure the accuracy of the information I'm going to share with you. This webinar is intended to provide you with information you can use to help make your own independent trading decisions. And remember, past performance is not indicative of future results. The markets are unpredictable and they do change. And we have to show you this CFTC Rule 4.41 as well. That's the government wants you to know that trading has both rewards and risks. Again, don't trade with food or rent money. And I'm not soliciting you to buy stocks, options, futures, or any other securities. And I always suggest trading in paper with any new strategy to make sure you're profitable in paper before using real money. So you have real money left when you finally figure out how to make real money. Okay, so don't trade it away while you're learning. Learn with paper. Okay, so many people I know don't do that, and I said, you just paid for a course, with what you did there. So anyways, today we're going to be talking about how to completely transform the way you're trading and to start seriously growing your accounts by using a very powerful technique that I like to think of as a stock market GPS. Now, I want you to imagine for a moment that you're approaching the market with this tool every day with the guidance that our current customers who use this tool every day already have. And our traders have doubled, tripled, quintupled their accounts with it. This stock market GPS lets you trade with pinpoint accuracy, just like a hedge fund does. Now, let me ask you this. Do you think you could possibly improve your trading if you had a tool that could do something like this? I know you don't even know what it is yet, but if I want to pique your interest here, because if you've never thought trading with such guidance and confidence was possible, I have some great news. It's totally possible. You can even start doing it today with the tool that I'm going to show you today. So this is not a minor incremental change either. This is something insignificant. It's technology that's been in use by our best traders for years that we keep improving as we ask more and more of it. Now, it's used in powerful automated systems that we've sold access to. And today, you're going to learn what this stock market GPS is and how it will improve your trading. Like I said, this isn't just an incremental change. It's a powerful, fundamental way to identify trading routes that lead to profits in the stock market. Like this $53 per share gain in just 19 trading days. That's more than a 30% return here in NVIDIA. And we have one back here, too. This was a $46 per share gain in just 26 days before then. That's another 33% return. Now, here's Tesla. This is a $57 share gain in Tesla in just 3 weeks. This is just in the last little bit here, over the start of the year here. Here is January 1st back here. Okay, and this $57, 36% gain right here follows this $72 gain back here in December. That was a 41% change in 3 weeks, all caught by this system. Now, since we're going to spend some time together this morning, let me give you just a bit of my history to help illustrate why I'm so passionate about people making money in the markets. I want to see people pull money out of the markets. I want to see them succeed. Now, I've always been interested in the markets. Even as a kid, I watched my dad trade. He did okay in the markets, but he always thought he could do better. He's the one who got me inspired to learn more about the stock market, and he made sure I understood that making money in the markets was how to stay ahead of other things like inflation if you wanted to get where you wanted to be. And like him, when I started trading, I struggled to learn how to trade, especially in a post-dot-com world. It was easy in the 90s. After the 90s into the 2000s, it got a little more challenging. And I wanted to learn how to do better. So I decided that I was going to learn everything I could about trading. And then I could share what I learned with my dad so he could enjoy trading in the markets and do better too. Well, that journey was a lot more complicated than I expected, took a lot more money and a lot more time than I even imagined. And when I finally learned what it takes to be a successful trader, and that was once I got together with Basecamp Trading and gained my confidence in trading, it was too late to share it with my dad, unfortunately. And since I wasn't able to teach my dad, I now teach others like yourselves about trading in hopes that you can reach your own trading goals, because I know if I teach you how to help yourself, you're going to teach other traders to do the same, and they could teach even more people. So this way I have a big impact on a lot of people's lives, which I'd like to see. And maybe some of you will be able to teach your own dad how to trade, or your mom or your son or your daughter. And I know that helping so many other people achieve their own goals in trading is something that would make my dad very proud. And that's why I love to share how to pull money out of the markets with traders like yourselves who are genuinely putting the time and effort into learning how to trade. I especially like it when we have our offsites where we get to meet people face to face and they come up and tell me all their stories, and you get all the thank yous for the stuff that we've created, which is a great reward too. So anyways, let's learn how to pull more money out of these markets. Now today, I'm going to be letting you in on a technology that can help any trader be a better trader. And I'm going to explain how this tool that I'm going to show you can make that huge difference in your trading. It's going to completely transform the way you trade, which will revolutionize the way you pull money out of the markets. And like I said, I hope you will share this with your own family and friends to help them get to where they want to be. So now let's start out with an example. It's a great way to get a point across. And let's see if you can relate to this in your own trading. This is an example of where traders misinterpret what the market is telling them. Now, it's a common pitfall for traders who don't have all the information they need to make the right trades, entries, and exits. Now, here we see a really nice run higher. There's a gap up and a move up. And when we see this pull back here a little bit, we say, well, there's a good opportunity to get in. In other words, it was moving up. Let's jump in. So we wait for this pullback, jump in on this bar that's higher right here, and start to move higher. And our goal here is to hit here and keep running, right? So it starts to move up. We get kind of excited, and bam, it moves the other way. Has that happened to any of you? And you can go ahead and type it in. I'm going to try to monitor questions here. But does this seem like it happens to you, and it happens more than you'd like, where you see a decent setup, and then the market starts to move and you get all ready to go with the trade, and then it just dies? Okay, we see it pull back and we get stopped out down here, right? Because hopefully you have a stop in. Hopefully you'd have a stop in this area up in here, but we get stopped out by here, and then the market goes sideways and another setup occurs. This is an inverted head and shoulder. If you don't know that pattern there, it's right there, and it's a possible breakout pattern when you go above this neckline high. And you can see right here, this is a valid entry. But because you just got burned on this one, you're hesitant, right? You think, well, I didn't make it work this time, so maybe I shouldn't bother this time. And of course, what happens? It takes off. Okay. If this has happened to you, where it feels like the market's against you, and because when we take a trade, it stops out, but when we don't get in, it runs without us, that's frustrating. And that's the kind of confidence-breaking trading that, it's even a greater impact that's negative on you than you might even realize. This type of flawed chart reading can wreak havoc on your ability to profit in the markets. When the setup looks correct based on the information that you have, and you jump in expecting it to run, but only to have it go against you. And I know some of you have felt this. It's one of the most frustrating experiences that all traders face. And when you have this happen, You brush yourself off and vow to be right the next time a setup comes. But when the next trade setup comes along, the doubt creeps in and you skip the next trade as your confidence still beaten up. And of course, that's the one that runs without you. If this sounds like it's something that you've experienced, I know I have in my own trading. It almost feels like the market is out to get you. When this keeps happening again and again, when multiple trades you get in start to fail and the ones you skip run, it quickly kills your motivation, and you even start to wonder if you're cut out for trading in the markets, and you really feel down about it because you're working really hard and you've earned the right by working so hard and putting so much time in to make money in the markets. But why won't it work? You feel after a while that maybe the markets are out to get you personally, and you start to think that when you put your order in that the market makers are actually waiting for you to actually go the other way. It's so frustrating. Now that's, of course, isn't true, but that's how it feels. We're too small to influence the markets in almost all cases here. Now, if this is something you've experienced, you're not alone. Like I said, I felt it. I bet that all of the best traders out there have felt this at some point. All of them have probably blown up one or many accounts. And this is especially typical for new traders or traders that aren't able to identify the real route through the market. And doubt is just one of the negative energy sapping anti-trading things that traders deal with. Doubt leads to a whole bunch of other negative emotions that you see here. These wreak havoc on your ability to be profitable in the markets. And this doubt and lack of confidence create negative emotions that rob you of getting to your goals. And remember that you had dreams at some point when you first started trading. You were going to have these goals and achievements. And when you have that doubt, all those other negative feelings start holding you back. They stop you from being able to follow through on the trade. What you want to have is a system that you trust, where you can move on a trade and not have that doubt. Those negative emotions have no place in a successful trader's mind. So what are we looking for? Well, it's clarity. That's what traders need more than anything else in order to give them that confidence for them to know when to get into a trade and when to get out of the trade. We need that clear signal that's going to give us that. And it's not a black box signal. I've bought systems before where there was a black box signal. In other words, they said, all right, when you get the signal, take the trade. And I was like, was that a good setup or was it an okay setup? Just take the trade was the answer. I'm like, well, I didn't have enough money to take every single trade. So I wanted to know what were the best trades. And when they sell you a black box signal, you can't evaluate whether something is good or not. You need something more than just get in here, get out there. You want to have some understanding of what makes an excellent trade versus an okay trade. Okay, because it'd be nice if that would work. Where you just get a single black box signal and you jump on it. But like I said, I couldn't do that with the account sizes that I had. What we need is that clarity. And with clarity, we finally have something that can help get that confidence back that we know we need as successful traders. And it's something that can help any trader be a better trader. So we've all heard the axiom, the trend is your friend. And Zaheer was talking about trend in the previous presentation. It was a great presentation, by the way. Now, if you're not able to hear all that the market is telling you, trade entries and exits remain murky to you. Right? Do you ever feel like it's not really clear? It's not absolutely clear. Like you don't look at a chart necessarily and say, all right, there's a good entry. You might think that, but then you start to doubt it. What you want to know is look at a chart, see an entry and saying, yep, I'm ready. Okay, now we built this tool to give traders that clarity because we know they're struggling because we've been there too. Now clarity comes from being able to see and understand what's behind the chart's movement, because the market's not really out to get you. It is actually telling us what it's going to do. We just have to find a way to hear it and see it so we can know what a stock is going to do next. So there's all kinds of things the market is telling you. We want to look at the right things to know what the market is telling us. That's what this GPS technology does. It interprets that hidden information for you. It helps traders navigate their way through the charts to find those optimal entries and exits, just like a GPS guides us to find the best route through an unfamiliar city. Now, once you start using this tool, You'll see notifications that at first you may not expect. We have new users a lot of times will come to us or contact us and say, why is this indicator telling me it's bullish? Shouldn't it be telling me it's bearish at this point? Is it broken? And every time our answer has been, it's working correctly. The algorithm is just looking at the right things that reveal what's going to happen next. And that's not always what it might appear at first. You know, it's just like when you're driving and you think you know the fastest way across town is via the same roads that you've been taking for years. And then you get a GPS and it finds a hidden way that you never knew was there, a way that gets you there in half the time. That's what it feels like when you're using hedge fund quality tools like this. It's like finding the best route right on your charts to get you where you want to be with confidence and speed. So what is this powerful technology that I keep referring to? It's called MQ Trender Pro 2.0. You'll hear me refer to it under a bunch of different names. Maybe it's Trender Pro, or a lot of times I just call it MTP2 for those initials up here, MTP2. So let me show you how this works. Now, MTP2 is going to help you by, first of all, it's going to map out actions right on top of your chart. Like it's like having Google Maps right on your charts on virtually any type of chart or symbol on any time frame. Okay. Second thing, it's going to show you what to do with very simple, logical color coding and signals that'll make sense to you immediately because it's using color coding that you're already familiar with. You'll instantly know what to do and when to do it. And remember that part about eliminating doubt in your trading. Remember we talked about how important it is to get rid of that doubt in your trading? Well, with this tool, with MTP2, your confidence is going to increase, which will help you get to bigger gains because you'll not only get in at the right time, you'll be able to stay in trades longer, maximizing your profits. And that will boost your confidence even higher because you'll have tools you can trust and trust in your ability to execute winning trades. It's this aspect of staying in trades longer that our more seasoned traders appreciate most about MTP2. And once you get your hands on this, you'll see what I mean, because it helps you extract even more out of the markets in fewer trades with less risk, fewer commissions, and less stress. I mean, think about it. Every time you get into a trade, you're at maximum risk, right? Because you haven't had any gains. You know, let's say if you had a position, you get into a position and you're going to have 3 parts of your exit. At some point, you'll hit your first target. You take a third off, and then you move your stop up to break even. Now you have a risk-free trade. So you're no longer at risk. So every time you start a new trade, you're at maximum risk. If you can stay in your trades longer, that's what's really important. You're going to be wanting to set up your trades where you get out in parts. You know, maybe if you're just starting out, you might have 2 parts to your trades, you know, where you get out at a certain target and then move your stop to break even and let the other one run. Maybe you'll do that with 2 targets and a 3rd runner, or 4 targets and a 5th runner. Right? You'll see what I mean when you start using the tool, because you're going to want to hold on to those winners. Those runners are just like, I don't know, like eating honey, I guess. I don't know how to describe it, but they're just wonderful when you get them. So what does all this mean when you pull all this together? Well, it all means another important thing is that we get rid of that fear. It's just like that GPS on your dashboard gives you the confidence to get where you want to go, even in an unknown area. In other words, because you have a GPS, you know, you could drive into Philadelphia, for example, and find where you want to go. Whereas before, you wouldn't know your way around the city. Well, the GPS will guide you. Just like the MTP2 tool added to your charts will guide you to your success in your trading. Okay. Now, if you don't believe this, remember this tool comes with a 30-day money-back guarantee. Give it a try. I suggest you paper trade to start it out, but give it a try. And if it doesn't work for you in those first 30 days, don't use it. If it works for you, make sure you transition carefully into real trading and then sit back and enjoy it. Now, how does MTP2 do this? Well, it uses a number of different base camp trading technologies to help us see the market in a new way, a way that simplifies understanding of what the market's already screaming at us and telling us. So Just like a GPS system is telling us which way to turn to reach our destination, Trender Pro lays out a route for us right on our chart that tells which way the market's heading. It's very simple. We use green coloring for bullish, blue for sideways, and red for bearish. Right? You already think green as being bullish and red for being bearish, and neutral. Well, if that's new, that we use that blue. Okay, so you already have an idea how to use this tool. The core point behind MTP2 is that it helps simplify your trading so you can easily know when to get in a trade and when to get out of the trade. It even tells us when it's best to stay on the sidelines. That is, it gives you the clarity you need to reveal the market movement and anticipate where it's going. Now, we've been using Trender Pro for many years, and it's gone through several iterations to increase the accuracy of the tool and provide new features. Some of those new features are, or all of those new features are built into the MetaStock version. MetaStock has the very latest innovations that we built into the tool. In fact, the MetaStock version has things in it that aren't even in the other versions of our tools for other platforms. So MTP2 on MetaStock includes some special color codings. In addition to bullish and bearish and neutral, it's got the gray extended color. That's when MTP2 detects that a market's getting extended and indicates, we indicate that by coloring the bars gray right on top of the green or the blue or the red. Okay? That is, it gives us a heads up that we've been running in this direction for an extended period and that we may not continue in this direction much longer. Now, we don't want to just jump out of the trade when it's extended, because even extended stocks can run even further in extreme cases. You know, you get a really good piece of news. It might be that even though you're extended, you're going to keep going. Okay, so you don't want to just jump out, but when we see that kind of a signal, we can tighten up our stops to preserve any of the gains, perhaps take partial profits, but we let it run because we certainly want to capitalize on any additional move on, especially on our runners. The thing that we wouldn't do, though, if it was extended, we wouldn't get into a trade when the market's so extended. So even though we will tighten things up when markets turn gray, we wouldn't necessarily get into a position once we're extended. Another technology that's been added to MTP2 are the golden bars. These are trailed stop indicators, and they appear when the market has a pullback against the overall trend. This indicates the trend's pausing and perhaps even reversing. We use these pauses as an opportunity to trail our stops and to help us get out of the position with some gains. They're like mileposts along the highway where we lock in profits. Now, we call these trailed stop bars golden bars because not only they're yellow in their color, but it's also where we often take our profits. Now, all of these colors that you see here appear automatically right on your chart. It's almost like having Google Maps overlaid right on your chart to show you exactly how to get where you're going. Now, let me show you how it makes a transformational difference in the way that you'll make money in the markets. Let's go back to that same example we saw a little bit ago. Remember where we got into the trade at the wrong time, the wrong side of the mountain, when the market was ready to fall, but we couldn't see it. Okay. Remember, just a reminder, we jumped up, we pulled back, we got in here, it rode up a little bit, and then it crashed, right? And we got stopped out. Now, let's turn on MTP2. We'll activate the GPS overlay. There we go. Now, once we have Trender Pro lighting the way, we can immediately tell a few different things here. Look up here. Does anybody see what the color is where we were looking to get into the trade? If you're saying gray, that's the right answer. Yeah, gray. If you remember what gray means. Yeah, gray means extended. Gray means extended. Okay, so if it's extended, we wouldn't want to be jumping into position. Now do you see how if we had Trender Pro showing us that we were extended at this point, we would not have wanted to open up a new long position right here. Okay, instead it fell down here. Here was a golden bar right there, which was the trailed stop part. That'd be take our profits if we had gotten in back over here. And then by the time we get down to the point where we got stopped out, this is where it was giving us some signals to get in, and we could have made profits going the other way. More importantly, over here, remember this was the spot where we said there was an inverted head and shoulder neckline break to the upside. And we said right here, was a good point to make an entry. Look closely here. You can see we're blue here, but green here. We changed from neutral to bullish right at that point. That's one of the signals and how you can interpret this, that it's a good point to get into the trade. Now, instead of being cautious because we took a loss on this one, we are getting not only the head and shoulder break, but also Trender Pro giving us a signal to get in that this is a good entry. So instead of us being afraid to take the trade, we could take this entry right here with great confidence because it just changed to bullish right at the point it was ready to break out of the inverted head and shoulder. And this time, with Trender Pro's help, we could take advantage of this gain. Now, with Trender Pro guiding the way, we can see where to hold off on getting into a trade and exactly when it's the right time to get in. This is exactly why we love Trender Pro, because it helps us know when to get in and when to get out and gives us a reason and confidence. It's not a black box, meaning that you can see the colors changing and getting you close to it. It's not just a single signal, right? It's actually telling you that the markets are evolving and changing here. This is why hedge funds use this kind of technology. With this kind of added info, we know when to get in, when to get out, and we can maximize our gains. But a lot of people will then say, how does this work? What's so great that makes this, or what is all the technology that makes this so great? Well, the tool itself is full of Basecamp trading technology, and it brings together several of our best proprietary indicators, but also some non-proprietary indicators into consideration. And it determines those trend and colors the bars. It uses different technologies in different situations, so it's adaptive. For example, it may pull from momentum and price action in one market condition, or it might use linear regression lines and adaptive moving averages in another. Yet another one, it might use a comparison of bar extremes and candlesticks patterns. Any of or all of these things are all being calculated all at once. And then the results are being analyzed to be able to select one of 49 different states that the indicator can be in based on those calculations. That's what drives our accurate results. That's part of what the version 2 is that it went from 9 states to 49 states. Now, by looking at these different factors, we can accommodate accurate trend identification across just about every type of chart. And we use, like I said, adaptive filters, and we measure the current stock movement in all those different ways and score them. If we have 10 of 12 filters active, for example, we're strongly bullish. If 7 of 12 were neutral to bullish, or if 7 of 12 were active, it's neutral to bullish. If just 4 were active, then we're just neutral, etc. It's a little more complicated than that, but that's the idea behind it. And just like a GPS, where there's a ton of technology and complexity going on in the background, what it ultimately presents to the driver and to the chart reader is simple to learn, intuitive, and you can act on it. It boils down to the simple color coding you see. So it's easy to use and you know what to do, when to do it. It's kind of deceptively simple to use. Makes you not think about all the stuff that's going on behind it. So let me share a little bit more about using Trender Pro and how to help you transform your trading. Now, many traders struggle with staying in a trade that's been running for a while. They get nervous as they start to get profits. And you know these kind of people, maybe some of you know this, but you will, cut off all your winners with just a little bit of profit, yet you'll let your losers go to max loss. And that, you have to break that cycle. And this tool can help you with that. Now we can do simply enter long when it's green. So over here, we're blue, neutral. We switch to green and just stay in until it's no longer green. Okay, or you could wait until it's red. Okay, it's up to you to decide which one you want to do. Maybe it'll change on which market. It's okay, either one works. Sometimes you'll switch immediately to red, but in this case, had you entered here on a switch to green, you could have held it all the way through here, and then exited here on the completion of a blue bar. Okay. So another way to do this is to start use those golden bars. And this helps us get more out of the gains here. This is one of my favorite parts because this helps us stay in trades longer while we lock in gains. So the idea here is this is the same setup here. We got an entry here, and then we start to ride up, and then we get a golden bar. At the golden bar, we trail our stop. So you move your stop up to here. So initially you might have had your stop here. You could have moved it up. Maybe if you had a first target, like say at a dollar amount up here, you could have moved your stop to break even. But once you get the golden bars, now we can start to trail to that. We get another run higher, another golden bar, trail your stop up here. Another run higher, another golden bar, trail your stop up here. And then at the close of this bar, we would have gotten out right on that trailed stop right there by trailing up to the golden bars. Okay, now I actually like to use these in a different way. One of our trader and room instructors came up with this other approach, which I love, and I'll share that with you. And that is what we do is we look at the golden bar, okay, and then look at the bar that follows it. In this case, that is a bar right there that the arrow is pointing to. See how that bar closed up? It closed in the direction of the trade after the golden bar. This rule is that if you get a golden bar, look at the bar that closes after it. If it closes higher than it opened, you would stay in a bullish trade and let it ride it out. If it closes lower than it opened, then you just close out the position. Okay, that's just another way of using the golden bars. So here, this closed up, we'd stay in. This one closed up, right? We closed higher than the open on the next bar, we stay in. And this one here closed lower. See how this one closed just a little bit lower than it opened, so we'd be out at this position here. Any of those ways can work. Okay, so here's those rules again. Exit if the bar after a golden bar closes against the trade direction. If it closes in your trade direction, then you trail the stop and stay in for the ride. I hope you understand that this can be very clear. When you have these kind of rules to get into your trades and get out of your trades, there's no more guessing. Okay, you can see that the market's rising here. You see the signal change. That's your entry. You can take your first target, move your stop to break even, get your first golden bar, trail it, trail it, trail it, and then exit on the color change or those other conditions, whichever ones you want to use. All of them work well. But what's important here is that you have a system, not guesswork. So you don't jump out like right here because, hey, it moved lower after this. You don't guess that. You just stay in. That's your rule. Your stop is down here below the golden bar. You didn't break that stop, so you'd stay in for the ride. You would have got more money out of it. Okay. Now, you might have noticed that it gets even easier in the MetaStock version because what I just showed you works great for other versions, but in MetaStock, you have these expert advisor signals. And then we get a text entry showing us these different things. We've got not just the color coding, but actual signals that can help us with those decisions. Okay, so this is something MTP2 loves because it helps you bring more attention to what to do in these. And you'll see that in the expert advisor commentary, it actually gives you the information again. Now, speaking of additional features included in the add-on, you probably also noticed a trend ribbon at the bottom of the display. The trend ribbon is using another Basecamp trading technology called MQ Trend, which calculates trend a little bit differently than the way MTP2 does. MQ Trend is a popular indicator at Basecamp. We sell that on its own. I think we sell it for, I believe, $3.97. Now in MetaStock, we use the wisdom of MQ Trend, which has a longer term view of the market. And we built that into the ribbon. So you can use it as a confirmation along with your other signals. And you can tell if you're in a bearish phase, a bullish phase, etc. So it's another thing that's built into the tool. You can just keep it simple and use MTP2 all by itself. It's all you really need. Or you can bring in the wisdom of the longer term MQ Trend. Okay. Now here's another example of using MTP2 guidance and staying in with those golden bars. You can see the expert advisor giving us signals along the way. So here we have an MTP2 entry right here. See the long entry signal right here. Here's our long trail. We closed up on the next bar, so we stay in. Then we move our stop to beneath here. We move to the next golden bar. This one closed up. That's in the direction of our trade. We trail our stop here, stay in. This one closed up. We'd trail our stop to here, stay in, and we'd still be in this one. Okay, very simple. Now, this is a comparison of a chart with and without MTP2. This is Meta on a daily chart without MTP2 lighting up the chart. It's difficult to find where an optimum entry exists here. You know, many traditional methods of finding the red entry would require that we break through a previous resistance, so we'd wait to break above this previous high before we got in. When we turn on MTP2 over here on the right, now we get the wisdom of the GPS, plus we get our entry signals, and this would get us in sooner than waiting to break through there. In this case, that was a $20 per share improvement on the move, and if we're trading 100 shares, that's an extra $2,000 in your pocket just because we're using MTP2. This is what I mean about transforming your trading. And we can make even better decisions with MTP2 when we use it on multiple time frames. We call this multi-time frame convergence. Well, that's a fancy name, but all we're doing is we're using Trender Pro on the higher time frame at the same time we're using it on the lower time frame. So for example, here we have the weekly time frame with a long entry signal here. At the same time, we're getting a long entry signal on the daily time frame. When we get the signal on the daily and we already have it on the weekly, there's two forces pushing it higher and a greater likelihood that we're going to see success. So we have multi-time frame convergence when this happens. And we're using the same tool just on two different time frames. You'll get this template as part of your package when you buy it today. Now, you can also see that, see how we pulled back a little bit here. Look how the daily signal that we got extended at point C here, and that would be a great point to have taken your profits and locked in profits on your golden bar. Okay. Notice also that the bar that followed the golden bar closed lower, so we would have gotten out there anyways. Okay, see how the system works again and again. So when you get this tool, you're actually going to get a few extra things. We talked about the trend ribbon. Of course, you get the highlighted bars, but you also get MQ momentum. I use MQ momentum in every single trade. I hope you use a momentum indicator as well. You're getting our best MQ or our best momentum indicator, MQ momentum, built into this tool set. And we look for all of them to be in agreement. We look for things like divergence, etc. This is an example of divergence right here, where price is going higher, but momentum is not. See, we look at the swing high here and the swing high here, and look what happened. This one's going higher, but the momentum is not with the second one. It's not as high as it was over here. So that's a sign that we're not going to keep going higher. Okay, I'm going to skip through some of this stuff. Here's another divergence example where price was moving lower, but momentum was moving up. So it's no surprise that it reversed right here. The signals are still there, but it's nice to get a little bit of advance notice of why it's going to change direction. Now you get even more in Trender Pro. You get, I mentioned this earlier, you get the expert advisor commentary. So when you get setups in different colors and golden bars, it gives you the details of what to do and how to interpret what the colors are telling you. So it's really laid out nicely for you to decide what you need to do. It even gives you the MQ trend info as part of that analysis. We already mentioned that you get the advisor signals, the expert advisor signals. You have the long entries and exits, short entries and exits, and also the trail signals. Our tool does have the explorations built, so you can scan for conditions across all markets, whatever markets you want to look at. And we've got 4 bullish and 4 bearish explorations. What these are doing is they're looking for new entries where you're changing from blue to green or blue to red, and also looking for an extreme move over the past week or the past 2 weeks, or on a daily chart, or just 5 or 10 bars here. So these are looking for good breakout points where they're just starting to move and you're looking for those entries. So these are ideal points that you can use a lot of times to find an entry that's really going to just start to run. We also give you a user's guide. I hope you don't have to refer to it too much, but I do hope that you'll at least look at it and understand it. If you don't know anything about how to detect divergence, I wrote a really good section in here about how to use divergence in here. And if you ever have questions on it, you can also reach out to our support team and ask that it be routed to me, and I'll do my best to answer whatever questions you have about it. Okay, we have an awesome support team. We get so many compliments about our ability to support the indicators that we have. And I know our people really appreciate that a lot. And we prioritize that in our company. So now you know more about MQ Trender Pro's abilities that can help you with your trading. You can see how, hopefully I've succeeded in showing you the potential this has to provide that clarity that you need that'll get you to greater confidence and increase the likelihood of consistently larger gains. Because when you have both that clarity combined with the confidence, that's what leads to those transformational changes in your ability to achieve your trading goals. And it makes it easier to be a successful trader. And yes, I wish I could have shared this with my dad. He would have loved it. Because you know what, in a lot of ways, this is something you might have forgotten about in trading, is having fun. Because when markets start to make sense, it brings back the fun. You don't feel like you're being taken. You feel more in control. Just like you can take a new adventure in your car to anywhere you want to go when you got your GPS. When you have this stock market GPS, you can gain the confidence to get where you want to go again. So you can relax and put the enjoyment back into trading. It's amazing how this indicator does that for people. And just imagine that for a moment, enjoying trading and having fun doing it again. So I told you that we would unlock a stock market GPS for better trades. And I told you that I would show you how our deep technology to trade like a hedge fund exposes that hidden information that's screaming out at you in a chart and lets you achieve those massive profits. Now you have the opportunity to completely transform your trading by getting this tool today. Here's some examples in solo where we had a 47%, a 27%, and 29% gains. All quickly here, we love the FANG stocks as well. But solo is one that we've been watching, and it's actually a very low price stock. It's way down again now. By the way, this stock is, we're still waiting for it to turn and start going up based on its fundamentals, but technicals are still driving it lower. Beyond Meat lost its shine and had a $116 per share gain. Okay, this trade was still going with a long entry signal when we took this screen capture. Here's Carvana. It signaled 3 times here after peaking out, giving us a gain of over $300 a share, which is a 91% return in less than a year. Now, why should only hedge fund traders have access to these tools? Why shouldn't you have it? And now that you've seen what the hedge funds have access to, can you see that you're at a disadvantage if you don't have it? Because now you can get these too. So what does this cost? Well, the tool itself is not cheap. It's $1,200, $1,197. MQ Momentum we charge $297 for, and the Trend MQ Trend also $297. Combine that $1,791. We normally will make that available as a package for $14.99, but in today's, if you act today, you can take advantage of the special conference pricing, and that is you can get this for $997. Okay, now that's a $500 savings off the regular discounted price that we have for this suite. And just trading one share of some of the examples I showed you today would more than pay for this. And then you'll have the ability to find your own trades for your own massive gains again and again and again. And like I said, who knows, with the added confidence and predictability you have, you might even start to have fun trading again. All right, so we have a little bit of time for questions here, Jeff.
We have some. Are you ready?
I'm ready. I'll do my best.
This question came up, and I'm going to show it, so don't worry about kind of swap into the MetaStock. But this came up a few times. Can you use candles instead of bars? And the answer is yes. I'll show that on the chart in just a second.
All right.
Glenn says MQM is a fantastic momentum indicator. Not really a question, more of a compliment, I think.
Oh, well, thank you. Yeah, it is. It uses something called Trusted Strength Index to be able to do its calculations. And a lot of people think that we're just repackaging MACD because they look a lot similar to each other. But once you use it for a while, you're going to notice that it's like just a little bit ahead of MACD. MACD works by comparing two averages together to get its convergence and divergence. Trusted Strength is a whole different algorithm, so it outperforms MACD. So it's a great indicator to have.
Lee said, Lee had a good question. This comes up all the time, and he wants to know, do you think it's a good idea to look at a lower time frame while you're trading, or do you stay in the same time frame all the time?
To me, when I was looking at a whole bunch of different things for years, I finally settled on Basecamp Trading because their technique was the same across all time frames and all charts. So I could apply the same concepts on a 5-minute chart that I would apply to a daily chart. It just means that your targets are further away and your stops are further away and your gains are bigger on a daily. But you do the exact same analysis on the 5-minute chart. In fact, this is an example here where Tesla had an intraday gain here of 4.4%, which doesn't sound like a lot, but I mean, that would take you a whole year even in the best bank account today, but you could do that in one day here. That was a signal up here on, I think this is let me see what time chart this is. This is a low time chart. I'm probably use a 5-minute chart. I don't think I can see.
Yeah, upper right.
Yep, there it is. Yep, there it is, 5-minute chart. So wouldn't it be nice to take a 5-minute chart here? You get in at 4 and out by 2:30 and you got a 4.4% gain. So you can do it. What I would do is when you're trading with 5-minute charts, keep the 30-minute chart and the daily chart in mind. So if the 30-minute and daily chart have changed to red as well, you're in even better shape. You're swimming with the current.
Couple questions along this same line. Brian wanted to know how and when do you get stopped out? And then somebody asking what does trail mean? And so those are kind of related. So I figured I'd ask them at the same time.
So what were they again? I'm sorry, I missed something there.
When would you get out? And then what does L trail mean?
Oh,
there's a reason I tied those together.
Yeah, let me see if I can find where those signals are again. So let's look at this one here. So here's a short entry signal, S entry for short entry, and then S exit means short exit right there. Okay, and then you got into a choppy zone here. Another short entry here with a short trail here. So on those trails, that's where you would, do your analysis to lock in the gains. So you get this golden bar here, okay, and then you would draw your stops along the top and then keep trailing the golden bars until you finally get taken out or until you get your short exit signal. What's interesting about this one right here, though, is that you got your signal by changing to blue, and then it went right back into red again. So there was another entry that followed it right here, and that one had a couple of exits as well.
Cool. Let's see. I know we've talked a lot about how like the scanning and the expert advisor and the functionality that just MetaStock kind of brings to the table is better. But Raj wants to know if it works in Thinkorswim.
Yeah, I think Thinkorswim is probably our most popular platform. And Thinkorswim is a very difficult language to be able to get something to do what you want it to do. But that is one of our primary packages, and that is available in Thinkorswim. And if you buy the MetaStock version of this, contact me and I will get you the Thinkorswim version of it as well. And of course for TradeStation and other platforms as well. But yeah, you want the MetaStock version though, because you don't get all these signals and all this extra functionality and the scanning and stuff that MetaStock provides.
Yeah, so you did when you designed this, you totally got like all the stuff that we had built and implemented, and the idea of how nice scanning is, and that commentary I absolutely love. Marie asked a really good question. She wants to know if you can get an alert signal. And so I can answer that one real quick. The answer is yes, you can set up an alert. The way that the alert functionality works in MetaStock is you just turn on the alert. You can have it like pop up an alert on your screen or play a sound. If you have a MAPI compliant email program, which you can get for free, you can actually have it email you when there's an alert. So that is functionality that is built into there. You just have to turn it on. David wants to know, does the indicator do cycle analysis?
Cycle analysis is not one of the things that, I don't think it's one of the algorithms built into Trender Pro. We have Cycle Finder as a separate indicator on some platforms, but I don't believe it's doing cycle analysis in the normal way that like a cycle indicator would work.
Vivek wants to know if you have an idea of what percentage of the calls are correct.
I've never done an analysis of that because, you know what, I personally, I trade a lot in other platforms and I don't have these signals. So I just look for the conditions that generate the signals. And when I'm looking at them, I use them in combination with other tools like MQ Momentum. So even though the signals themselves can stand alone, you'll see that you'll get some false signals sometimes in choppy areas here. But the consistency is really good. You can see right here, this is an example of IBM. This is a live chart right here. And you've got a signal right here. See how you came down, you got a short entry, short entry, short entry all here. And you could have waited until you broke through the low of this area here and jumped in. And now we're seeing the drop. The other thing that we got was that on the higher time frame, we finally got a short entry signal on a higher time frame. So when you combine these together, then your signal likelihood of success is going to go up even further. That's that multi-time frame convergence I was talking about.
Brian wants to know, this offer is good to win. All of the offers at the conference this week are good for 1 week. Marie asked a really good, interesting question. If you upgrade this in the future, is it going to be a paid upgrade?
That is an interesting question. It depends on how much upgrade there is. So with the Trender Pro, we went from MQ. This product has gone through 3 iterations. The first iteration was MQ Trender, I think it was called, and then it became MQ Trender Pro. That was a free upgrade. But when we went to Trender Pro 2.0, there was so much functionality put into it that we decided to give a discount for those who already owned it, but it was a cheaper upgrade. They still had to upgrade a little bit of a price to it, but they didn't have to pay for the full indicator because they got credit that they already owned the first one. But there was so much functionality improvements that we did require a little bit more money.
Yeah, that's typically the way we do upgrades too. Like, if it's something that where we just kind of go in and tweak things and maybe change visuals and stuff like that where we like it, a lot of times those updates and patches will be for free. But if we had a lot of good content, we usually provide a really good upgrade offer. So, because we want to reward you for buying it and being a customer and that kind of stuff, and we want to make sure that that feels like a fair bargain for you too. So
yeah. Any fixes are free, but significant functionality additions might have a cost on it. One time it didn't, one time it did in this case.
Yeah. Do you remember when the last upgrade was?
I don't. Time has just flown, especially with this COVID stuff. So I don't really. It's maybe a couple years. I don't know. Maybe it's a little longer than that. But we still think of it as being new. This indicator's been out for quite a while. And it still feels fresh. It doesn't feel dated at all. It's still working great.
I mean, it's one of those things like when, we look at add-ons and we're like, well, could we make it better? And we're like, well, it's really good. What would we do? So this kind of falls into that category as well. Frederick asked a question on YouTube. Is this a one-time price or is it annual? It's a one-time cost. So you do own it forever, Frederick.
Yeah, but if you want to pay me annually, I'm okay with that.
Cool. Is this good? Okay, I think we can do one more question. You did a really good job of showing everything. The last question, Marie wants to know. Oh, Marie, I'm not sure, but she wants to know: is this good for derivatives, options, futures, etc.?
Oh yeah. Remember I said earlier is the reason why I went with Basecamp Trading is because you could do the same thing on all chart timeframes. It also works across all symbols, so it's almost like it's a universal thing. Maybe Renko charts might be a little suspect, but if you're trading Renko charts, that's a synthetic chart. You really want to be pairing that up with the time chart anyways, where you have your Trender Pro running. Our best Renko trader was the biggest fan of Trender Pro because he was able to make, in his best month, I think he made over $30,000 trading, futures contracts and crude. And he attributed that gain to Trender Pro because it helped him stay in the trades and get every last cent out of those moves.
All right, very cool. We have just enough questions and just enough time. John, I am going to show that how to change the daily, and I'm going to kind of reiterate the offer. But you did a great job. I really appreciate your coming and spending some time with us. And thanks for coming.
All right, it's my pleasure. And don't forget, we have a really good support team, and so does MetaStock. So you guys are supported, and you have that 30-day guarantee. Try it out. If it doesn't work, get your money back. But if it does work, congratulations, because you got a lot of fun ahead of you.
And I love how, I think it was Glenn earlier was talking about how great of a system it is. I love to see that from people. So thanks again, John.
You're welcome. Have a good one.
All right, we're gonna do this. Okay, and then it's so easy. Let me go ahead and kind of make me the presenter. We will get this thing showing. Can I use it with candles? I promised to answer this. He talked about like the commentary that exists over here. Oh, I'll turn on my, while we're doing stuff. The scanning, you can scan for any of the patterns that you want. And you know, MetaStock has just that. One of the things we hear all the time is MetaStock has the best scanner. You can scan anything you want. It does such a really good job. I did promise to kind of answer this one. If you want to look at these in candles, here's this is a little known stock called Tesla. If I want to just change it to candles, just double click on it like this. Just change it to candles. It's that easy. You can go ahead and click on OK, and there you go. Now, I probably, that's a little thick for me, and you could decrease the thickness, but you get the idea. Like it's you can use anything that you want with it. You can put other indicators on top of it. It's a great little add-on. And John, again, thank you for showing it to us. So, and it is just a one-time cost. There is not an ongoing, this question keeps getting asked, so keep answering it. It's a one-time cost, 30-day money-back guarantee. Let's talk a little bit about that. So, John went through all of this stuff and showed the scans and showed how things are there. It's a one-time cost. $14.95 is normally what it retails for. This site is doesn't have the actual discount price on it, but the discount price is going to be $9.97. You can get that right now. You can get it with a 30-day money-back guarantee. Do I have a site that has a discount? No. All right, must be slacking. If you don't have MetaStock, as John said, there's so much stuff that's advantageous with MetaStock, with scanning and the testing and the expert advisor, the commentary, all that kind of stuff. It's stuff that just is easy to do with the MetaStock engine. So if you get this, you can use it with the other versions if you've got a different software program. But I'd encourage you to also try out MetaStock. There's a reason it's been rated 30 years in a row best software in its price category. We'll give you a free trial with that. We'll give you a 30-day money-back guarantee on this in addition to the 50% discount. You can do that at metastocks.com/valuechartsb. You can give us a call at 800-882-3040, and you can also visit us online at metastock.com/saleschat to do that. So there you go. Let's go ahead and talk. I'll talk about stocks and commodities and how grateful we are for them sponsoring our events. They've done a great job of sponsoring us for 11 years now. We love our relationship with stocks and commodities. If you buy Trender by giving us a call at 800-882-3040, we'll give you 2 years of free stocks and commodities in addition to that $500 discount. Actually, I should say they give it to you because they don't even charge us for it. It's free as part of their sponsorship package. So we appreciate them. They've been doing a really, really good job. So Lee says, very good webinar. Thank you very much. Have to run. That's okay, Lee. It's good to have you here, and you can come back and watch the YouTube later if you want to. So, one of the things that we did do is I had somebody in YouTube actually give us a number so that we could kind of speed along the process a little bit. Next time I'm going to take a number from GoToWebinar. So if you're watching in GoToWebinar and want to give me a number between 1 and 12,255, very well could be the next number I pick. So, but in any case, Tavonda gave me a hand. She picked out a winner for our next prize, which is going to be Tom S, number 888 on my list. Tom S is in the Netherlands. He has a Gmail account, and he's going to win a prize right now. The prize that he's going to win is we're going to go ahead. I'm just picking one here. We're going to go ahead and give him a 1-year access to the Disciplined Trading Masterclass by Norm Hallett. The Disciplined Trader Mastery Program is the leading resources for trading discipline, and it'll help you with your trading behaviors and those detrimental trading behaviors. One of the things that we talk about consistently is discipline. You know, MetaStock's great about helping you find trading ideas and trading strategies and seeing what works well. You need to be able to have discipline and respect your stop losses and stick to your plan even when things are going wrong. So hopefully that helps you. It's a really, really good prize from North Hallett, and we're going to go ahead and include it. Charles, pick the next number. It's going to be 181. So whoever that is, we'll find out after John. So let me go ahead and do this. We're going to go ahead and talk a little bit about John. I consider John a friend of mine. I love his accent. I love I remember doing a lot of work with John over the years on kind of like the scans that he writes and kind of helping him with that. He does such a great job. I'm going to go ahead and bring him in here. John's website is Acorn Wealth Corporation. Let's go ahead and have you come in here. John, how are you doing? I see your microphone just turned on, but I can't hear you.
How about now?
Oh, yeah. I would say you just came in with force. All of a sudden, I was just like, wow. I'm
down under.
I'm awake. Let me go ahead and make it the presenter. Oh my gosh, that just came in really, really loud through these headsets. You should be able to see the questions, and let's go ahead and make sure we can see your screen. And as soon as that happens, we'll go ahead and get you going. How you doing today, John?
Absolutely awesome. I had my first ever day snowboarding 50 centimeters of powder on the weekend, so my legs are feeling quite sore. But it was a once in a lifetime experience.
That's very cool. Where were you?
Up at Sunshine Village in the Banff National Park in Alberta.
Oh, cool. Very, very cool. Well, welcome to the show. We can hear you. I can see your smart money trading. You can see a handsome, I don't know if it's your picture, but a handsome gentleman there in the corner. It's yours. I'm going to get out of the way.
Look, I've been sitting here all morning listening to the other speakers. It's such a great time to be talking about smart money trading, and what a wonderful event. What a wonderful guy, Jeffrey. We love you. And of course, love MetaStock. So thank you everyone for being here and showing up. We're going to talk about some pretty fascinating stuff, I think. And we'll start off, of course, with a quick disclaimer that this is for educational purposes only, not a recommendation to buy or sell any securities discussed. Acorn Wealth and Smart Money Trading is not a registered financial advisor in any jurisdiction or province. Always be aware of the risks of trading. There's no guarantees with any investment, not stocks, not options, not real estate, not anything, just death and taxes. Any stocks discussed, however, may be being held by myself, Acorn Wealth, or the employees and contractors of Acorn Wealth. We will be talking about live markets today, so always speak to a financial advisor before determining the suitability of any strategy before making any investments. Okay, so we have a lot to talk about today, and I'm going to kind of go a little bit off script today. I don't like using a pre-planned deck and things like that. I like to talk about live markets, and so if you'd like to dive into the live markets and what's going on right now, throw a 1 in the chat box. Let's get fired up. Let me know if you want to just go straight into live markets and talk about what's going on. Put a 1 in the chat box. Before we dive into that, just a quick little introduction. We've been doing this since 2007 when I started Acorn Wealth in November 2007, right before the global financial crisis. And since then, we've trained 5,800 students. And that number is growing every day. We've been awarded the Best Stock Market Educator of the Year last year by Traders World Magazine. And it's for reasons like this. We called the 2020 crash. Back in December of 2019, we talked about some of the key smart money indicators that I'm about to go over and what they were showing us. The crash came. January of last year, we were back talking about, right here in MetaStock as well, we were talking about this a very large correction that we saw coming in 2022. Of course, that panned out. So it's not because we have a crystal ball or any kind of reading the tea leaves or anything like that. What we do is we track the smart money. Thus, the whole name of the brand, Smart Money Trading. And that's why Acorn Wealth and Smart Money Trading were awarded that Stock Market Educator of the Year accomplishment, was some of those big calls like that. But as I said, it's not from a crystal ball. It's from tracking what the big money and the smart money is doing. Because at the end of the day, when I got started in trading as a young lad, what attracted me to investing or trading was this idea of money working for you, right? The idea of being able to deploy a strategy and have your money that you work very hard for go out and work twice as hard for you in return. That, in my opinion, is what investing should be. It's money working for you. And that's why I got into trading, because I wanted to travel, I wanted to see the world, but I fell into a trap pretty early on of working twice as hard for my money in the trading industry. Right, I had a ton of screens, I had every indicator that I could find, and I think at the peak I had about 15 indicators on my screen. I was watching my trades all day long. I was micromanaging everything. I was trading options, stocks, forex. If cryptocurrencies had been around back then, I'm sure I would have probably been trading them as well. And pretty quickly, I realized after 2 blown up accounts, an anxiety attack, I realized I'd gone so far away from what I had originally got into trading for, right? I bought myself a job, and that was not what I signed up for. Who here feels like that? Again, throw one in the chat box if you feel like you have you're looking for a simpler way to find the answers you're looking for. It sounds like a silly question, but again, throw one in the chat box if you're there now, where you feel like you're spending too much time to find what should be a simpler answer. And it should be a simpler answer. And my mentor is really, kind of what brought me back to the basics in that regard. He was my Warren Buffett. And he said, Johnny, you've got to get rid of all this clutter. This is not how the market works. The market isn't looking at all this stuff, right? You need to be focusing on what really moves the market. And he said that's the smart money. I mean, even JP Morgan, just a year or so ago, estimated that up to 95% of the volume every day in the market comes from algorithms, right? Smart money. That's what we need to be on the right side of. It's not all of this noise and all of this news and all these bright, shiny objects. If you want to make money in the market, you need to be on the winning team. The winning team is the smart money. But I mean, we know that. That's nothing new to, I'm sure, anyone in the room. So for me, the big aha moment was to dial back all of that complexity and focus on what's really moving the market, which is the smart money. And simple doesn't mean less sophisticated. It just means focusing on what's, as one of my other mentors said, the small hinges that move the biggest doors. That's how the previous speaker talked about making trading fun again. Absolutely. Trading should be fun, but trading can't be fun unless you have a way, or dare I say it, a strategy to make decisions with, a rule book that you can sit down with every day and say, what should I do tomorrow? What are the rules telling me I should do tomorrow? If you're sitting down every day recreating the wheel and going through analysis paralysis and trying to and overcomplicating things, trading is going to be stressful, it's going to be emotional, and it's going to be riddled with mistakes and regret. And even worse, humiliation. Because that's the worst thing about taking a loss, is when you're humiliated because you did something stupid. You broke your rules. You took a gamble. And again, that's not trading, that's gambling. And the way we replace gambling with strategy and smart money is by having a system. And I'm going to show you what the system we follow is saying, and how we tap into that insight instead of following information, right? There's too much information out there, not enough insight. Who would agree? Throw one in the chat box. So while you're in the chat box, let's go for this question. Before we dive into these live market charts and some of the smart money indicators I'm going to show you here, I'd like to get an idea of where everyone's at right now in terms of your thoughts or opinions. What do you think the market's going to do? What does everyone think the market's going to do from here? Put a 1 in the chat box if you think it's going to go straight up from here. Put a 2 in the chat box if you think we're going to have a 10% pullback and then head up. And put a 3 in the chat box if you think we're about to have a market meltdown. Yeah, put a 4 in the chat box if you've got no idea. That's also an answer. A couple of the 3s turn to a 4. Okay. Oh, hey, why not be honest, right? Let me show you what the data is showing, because ultimately, no one's opinion matters, including mine, right? Not the talking heads, not all the news pundits on TV. No one's opinion matters at all because they're subjective. What matters is the data. So we have to have a way of qualifying the data, tracking the data, and because data is telling us an unbiased view. And so when I look at the data, when I look at the patterns, this is how smart money works. If as much as 95% of the volume's coming from algorithms, how do algorithms make decisions? They make decisions based on rules. They make decisions based on patterns. So if we want to be on the winning team, we need to understand how and when and why they make these decisions. And patterns are a very, very large part of that. So when we look at the S&P 500, I just took the screenshot minutes before we started today. This is the S&P E-minis. What everybody is talking about was that the S&P had broken out of this long-term downward channel. The S&P, therefore, has been incredibly bullish really since kind of mid-December. And we were very long from December through till about February 2nd. And so this is a valid chart. This is a valid pattern, and it was a valid reason to be long since December. So I'm sure most people have heard the analysts and so forth talk about this. But what most technicians and analysts that I've observed have missed, and what very few people have spotted, is the upward channel that has also been in play. Put a 5 in the chat box if this chart that I'm showing you here is new to you, if it's the first time you've had someone show this to you. This is really important, and this is why I'm so passionate about doing things right, because the devil is in the details. The small details really do matter, and understanding and identifying this pattern was a really critical part as to why we sold all of our longs 2 weeks ago, except my long-term illiquid investments. We liquidated all of our longs 2 weeks ago. And this was part one of why, because we were right at resistance in a bearish upward channel, right? So that's part one. Part two, right, now we're getting into smart money indicators. Part two of why we liquidated our longs 2 weeks ago was, and started to go short, was because of high yield bonds. Now, this is a really, really powerful leading indicator, because most indicators are lagging, right? When you look at moving averages and most of your traditional, kind of stock market for dummy type of indicators, they're all lagging. High yield bonds is a leading indicator, and it's been a critical part of the major market calls when we call the 2015 crash, 2018 crash, 2020 crash, 2022 crash. This is some pretty big accomplishments that I'm very proud of. But again, it wasn't because we had a crystal ball. It's because we were tracking smart money. This is really smart money. The bond market is substantially bigger than the stock market. And high yield bonds is an indicator that tells us what smart money thinks of the economy, of the bullish or bearish risk of the stock market. Because when the bond market thinks, hey, now is time to take risk. The economy looks great. The market's going to rally. What the bond market does is they buy high yield bonds. Okay, and what high yield bonds are is it's a mechanism for lending money to high risk companies. Another word for this is corporate junk bonds. So if the bond market or the smart money says, hey, you know what, let's take some risk. Let's go lend money to that startup company. Let's go lend money to that company that hasn't made revenue for 10 years, but is a super speculative tech company. Let's go lend money to them. What they do is that they buy high yield bonds. That's the vehicle for lending money to high risk ventures, right? And so when the smart money takes that risk and they buy high yield bonds go up. When they want to get out of risk, when they said, hey, let's slow your horses here, let's get out, things are looking a little worrisome, they sell those bonds and high yield bonds go down. So high yield bonds should correlate with the market. In other words, high yield bonds should look like the S&P 500. They should be following each other. Markets going up, high yield bonds go up. Markets going down, high yield bonds go down. So when you see divergence, that's what we really want to pay close attention to. So in 2018, in 2020, in 2022, before the market crashed, in all of these major market crashes, high yield bonds went bearish first. That's the really cool thing about this. It went bearish first. It either started dropping well before the market dropped, or you saw a very clear bearish pattern on high yield bonds before the market dropped. So before I go on to just explain this chart, is that explanation clear so far? Give me a 1 in the chat box if I'm making sense and my Australian accent isn't convoluting it too much. Excellent. Okay. So what's the pattern we have here? We have an upward, well, like the S&P, we've broken out of, this is the S&P again, we've broken out of a downward channel and formed an upward channel. But if you look at HYG, this actually happened sooner. So take a look at where we were, right there on around February 13th, we had already broken down through this upward channel support. Go back to the S&P 500. On February 13th, we were still sitting at the top of that upward channel. HYG leading indicator. HYG broke down bearishly well before the S&P did. And that was one of the reasons we went to cash and started shorting. And full disclosure, I do own HYG puts in my personal account, just for a legal disclosure purpose. I do own HYG puts. And this is why. This is why I bought them a couple of weeks ago. So if the HYG pattern continues as the rules of an upward channel would dictate, this would bring us down to around here, which is your October lows, right? Nothing's guaranteed, right? No matter how good a pattern is, nothing's 100%. But the rules of an upward channel is that it's bearish, and that's the target, right? So this is again another smart money system that we've been following, and a key warning on what's going on in the market. Now let's move on from HYG. Let's talk about another very fascinating tool that we use to track what the market's really doing, and this is our second smart money indicator, which we have tracked many of the major market moves with. And what this chart is, and what it's telling you, is it's looking at, instead of looking at the S&P, right, which is a distorted look at the market, because keep in mind that all of these indexes are weighted. So, you know, the 5 largest companies, the FANG stocks, account for 20% of the S&P 500. So it's a distorted look of what the market's doing, because 1/5 of the index's movement is just 5 of those 500 companies. And even if it wasn't weighted that way, if you're looking at the S&P 500, you're only looking at 500 stocks of the, you know, roughly 8,000 of them out there. So rather than looking at the indexes, I would challenge you to think of the market differently. And this is, again, one of the things I learned 20 years ago from one of my mentors, was that it's not a stock market. It's a market of individual stocks. Unless you're just trading the S&P 500 and buying and selling the SPY, what matters more than what the S&P is doing is what these stocks in the market are doing. Does that make sense? Right? And this is what this indicator does. It looks at every stock in the market and tells you what percentage of them are above their 50-day moving average. This is a really important smart money level. 50-day moving average is where mutual funds buy, hedge funds buy. It's a key smart money support level. And so what you can see here is on the right-hand side, there's that number is the percentage of stocks in the entire market that are above the 50-day moving average. And you'll see this red zone. That is the sell signal. That's the warning signal. Because if you look back over 15 years, whenever you get to 70% or above of stocks in the market being above their 50-day moving average, typically that's where you have reversals within 1 week. It's roughly about 80% of the time when you get to 70% or above, the stocks in the market reverse within 1 week. That's a pretty damn cool statistic. So whenever I see the percentage of stocks in the market above their 50-day moving average getting to that 70% level or above, to me, it's a ticking time bomb. So if it's not 1 week, it's usually 3 weeks is the next level of those statistics. And so what you can see here is not only did we hit that top of that upward channel early in February, but we also triggered into that overbought territory, being above 70%, into that red zone. And so for those of you who may have been in some of our recent workshops or follow us and some of the warning webinars we've been doing since late January, this is one of the things I've been talking about, one of the reasons why we liquidated our longs. And as you can see, since then, we've dropped straight down and currently sitting around 56% and declining still today. So, look, as I said, nothing's 100%, but when you have an indicator like HYG that's been a leading indicator in almost every crash in the last 15 years, and when you have MMFI or stocks above the 50-day moving average also present, which has been above 70% in the weeks before every major crash in the last 15 years as well. What's the theory of insanity? Doing the same thing, expecting a different result. These indicators have been present in all of these major market crashes, and they were saying the same thing going into February. And so this is why we shared this video again 2 weeks ago on February 10th, and also the week before. This was the most recent one when we talked about why we went to cash. And these are the systems that, again, rather than opinions, that have been indicating so. And last but not least, the smart money. When you look at the insiders, which is what I'm going to talk about in a moment, in a little more depth, because the insiders are the I mean, they're the only experts that really matter when it comes to individual stocks. You know, Warren Buffett, Peter Lynch, George Soros, all these gods of the stock market, you know, amazing people, right? Ultimate respect for them. But no one knows more about the stock you're about to invest in than the insiders that run the company. Right? Everyone else is just guessing at varying levels of educated guesses. The only people that aren't guessing are the insiders that run the company. And so when you look at the insider buying versus selling that's happening across the market, what you'll also see here is that these peak levels of selling activity have all come before 10 to 20% pullbacks in the market. I'm just showing you back to March of 2022. That was a 20% drop that followed that selling. This was a 10% drop, another 10% drop, and of course, February 3rd, we saw that same level of selling. So, look, I mean, you don't need to be an expert in fundamental analysis or an economist or someone who reads quarterly reports to understand that data. When we see insiders selling at those significant levels, combined with those other smart money indicators, you're seeing a perfect storm. Now, whether the market's pulling back or on the brink of another crash, it doesn't really matter. The point of being able to interpret that data is to understand when the risk is high. And when the risk is high, and when I see all of the red flags that have been in play in every single market crash we've observed in the last 15 years, when I see the same things printing, that's enough for me to say, all right, let's sell the longs, let's go to cash, and maybe pick up some shorts. And the moment that data changes, whether it's tomorrow or whether it's 3 months from now, we can go back to long. And that's trading. Trading is understanding when the probability, where the probability is pointing day to day and what it's telling you to do. Would you agree? Tell me how I'm going so far. I want to make sure I'm not getting overly complex. I don't want to be, hoping this isn't going over anyone's head. Just let me know if this is all clear so far. Excellent. And again, look, I'm not suggesting that the sky's falling. I'm not telling you to go liquidate your portfolio. I'm just sharing my opinion. I'm not a financial advisor. I'm here to share the data that I look at so that you can make better decisions, so you can make informed decisions. And looking at what the smart money is doing, I think, is a very important part of making an informed decision. I found out the hard way. I found out this lesson the hard way because when I was a young lad, when I was learning how to trade, I got scammed. I was sitting at a bar in Vancouver. I was building my first real portfolio, and I was sitting next to a table of impressive gentlemen. They're all wearing their bright shiny objects. They were all wearing their Armani suits and gold Rolexes, drinking champagne, laughing it up. And I thought, wow, this is the image of success. What do these guys do? And so I cozied up next to them and I barged into their conversation, and I said, well, what do you guys do? Tell me about who do you guys work for? And of course, they were all too happy to share. Turns out these guys were running some stock market company, and they were talking about how they were going to be the next best thing since sliced bread. And my ears pricked. I was young, I was naive, and I was lured in. And I said, well, guys, wow, how much money do you think I should invest in this stock? And they said, well, how much do you want to invest in a company that could go up 1,000%? And I thought, all of it. And off I went, and I put my entire account into it, throwing every rule that I'd been building away. Days later, stock tanked. My stomach going with it and my account going with it too, almost to zero. And this was my blown up account experience. The humiliation of this was that weeks later, I came to learn that these same insiders had been selling all of their shares. In fact, they'd been selling their shares at the same time I was buying. So the way I felt, I bought those Rolexes. I paid for their champagne. I bought their suits with my life savings because I was probably buying their shares off them at the peak before it dumped to zero. But what I had to admit was that it was my fault, right? It was my naivety that led me from as a lamb to slaughter, because that information was public. They were publicly, as insiders have to, it was publicly reported that they were selling. I just didn't look. Most people don't. And so this bitter pill, as hard as it was to swallow, was what led me on my journey to track smart money and to trust but verify information, right? And I vowed to myself that I was never going to be that lamb anymore. I was going to be the lion. I was going to be patient. I was going to look behind the news, behind the stories, and look at what really matters, which isn't the story, which isn't what people say. It's what people do. That's what matters. That's the truth. You want the truth? Look for the data. Look, and the best data of all is what people are doing with their own money. Who'd agree with that? Who'd agree that there's no better truth than what people are doing with their own money? That shows people's true intention, right? So when you start to look at some of these major market reversals and the role that smart money plays, when you go back and look at the 2020 crash, right, where the news was full of emotions, full of greed, full of fear, right? Behind all of that stuff, the data laid a pretty clear path. The data told us that the insiders were selling. We saw significant insider selling versus buying in the 3 months before we even knew what the word COVID meant. Right? Put the news aside. I honestly believe the market would have crashed whether we had that catalyst or not. It probably would have taken longer, but the market was poised for a significant pullback anyway. The insiders certainly thought so. They sold $13 billion worth of stock in the 3 months leading up to the 2020 crash. And more importantly, they sold significantly more than any buying activity. The ratio of that selling to buying was really skewed in a seller's direction. And then when the market bottomed, perhaps more impressively so, they bought back. They bought back in the billions, and they bought back in the billions 5 days, five days off of the absolute lowest the S&P ever got to. Talk about timing. Now, what this signifies is what you would expect, that the insiders have a pretty good idea of when their companies are reaching rock bottom value. The insiders know whether they're about to go bankrupt or not. Right? Now, whether you feel this is fair or unfair, or whether the market is rigged, of course, let's say the market is rigged. Probably is, right? Why not use it to your advantage? It's only unfair if you ignore the data that's screaming at you. It's publicly reported information. And so, we can say, oh, it's, the rich get richer, the poor get poorer. Well, but again, this is for us to bring into our toolbox. We can harness this. Thank gosh that this is happening, because it allows us to piggyback off of it. To me, this is a small hinge that moves a very big door. And when you track the smart money, when you track the insiders, we can piggyback off the infinite knowledge that they have about their industries and specifically about their companies. Right? It's one of the worst kept secrets, if I can put it that way, because there's been so much research done on this. The Wharton School of Business said that insiders seek exceptional profits. Insider purchases have abnormal returns. Harvard and Columbia did a study on it, saying that insiders make market-beating returns when trading before big events are announced. Wall Street Journal said that insiders have a persistent edge. It should be common sense that insiders are and smart money in general is something we should be focusing on. And and in a market like this, obviously smart money buying is incredibly interesting when we're going long, but it's also incredibly valuable when we're looking to go short. Right? So ALGN is a great example of both a long and a short setup. ALGN, which makes those Invisalign braces, great product, right? I know a lot of people who've used it, love the company, and I'm waiting to buy this back. In fact, I'll get to that in a second. But if you take a look at the ebbs and flows of smart money, this is a terrific example of utilizing this strategy. When ALGN Align topped out in 2021 at $750, the senior vice president of HR sold 94% of their stock. The senior vice president of chief legal regulatory sold 97% of their stock. The senior vice president of global operations sold 87%. The chief financial officer sold 78%. And the president, the CEO, the top dog, sold $45 million worth of their stock, liquidating roughly a third of their positions. And 4 other insiders also sold. I didn't want to put too much information on one screen, but you get the picture, right? We also, if you look there, that little red arrow, we also had our smart money divergence sell signal print there in MetaStock, which is a really valuable indicator. If combined with this, is something we look for as well. It's tracking when a stock is going up and money is flowing out of the stock behind the scenes. That's what that red arrow is. So we had a little perfect storm. And so this, again, insider selling doesn't guarantee a stock's going to go down. There's many reasons an insider might sell, like tax, or maybe they need to buy a new car. But when you see mass selling, when insiders are selling almost 100% of their positions across the board, that's really something I think you should be aware of. Now, this might seem like common sense, but I want to point out that this stock is trading since those insider sells, billions of dollars worth of shares were bought after that. The whole way down from 750 to 150, roughly, people bought that stock, despite the fact that it was public knowledge that the insiders had sold theirs. Would anyone here in this room buy a stock if you saw the top dog selling all of theirs? Anyone? Or put a no in the chat box if you wouldn't. I just want to make sure we're all on the same page here. If you saw a company that all the insiders were selling, would you buy it? Would you stay in it if you held it? My point here is that there's billions of dollars worth of people that did disagree with the insiders and did buy the stock. So the point I'm trying to make here is that common sense is one of the least common senses we have, and this is why for those of you sitting in the room thinking, "Gosh, shouldn't this be obvious?" This is It's not obvious because there's so many people that don't use this clearly, right? And so great shorting opportunity. When the stock bottomed, because when a stock drops, a stock like ALGN, which is I think personally is a great company, when a stock drops from $750 to $160 and change, I mean, this is market meltdowns are where great buying opportunities occur from. Don't fear the meltdown. This is how money's made. So when the market melted down and the stock crashed, well, now we've got a terrific buying opportunity. How do we know where the bottom's in? Well, we wait to see that buying interest come back. And so the same person that sold, president and CEO, bang, he's back in for $2 million. Another director buys 46% more. Another director buys $200,000 more as the stock bottoms out. Of course, December was where we also had our bullish signal on the market. Following the smart money indicators I talked about earlier, they gave us the go-ahead to go long. And so we're scanning for insider setups on the buy side. And this was actually the largest position I took in January. I loaded up on this personally. We also alerted it to our students on January 16th. And again, as with all of our trade alerts and ideas, it's all set and forget. And what that means is we pre-program our entry, our stop loss, and our targets before we get into a position. And so we pre-programmed, if it breaks above 240, 213, that would be the condition we'd look to get in. Our first profit target would be 293.83. So like the previous speaker talked about, we're a big advocate of what we call house money trading. So again, when you get into a position, that is when your risk is the highest, right? It's where your capital is at risk. When you've already gone up 30%, why not take a third of the position off, move the stop loss above your entry price? Now you're playing with the house money. Now you're playing with profits. Anxiety level reduced significantly when you're playing with profits, right? So with all of our setups, no matter how high we think they could go, we always have a conservative first target to take some profit off the table and make it a house money trade. Anyway, and so this thing just skyrocketed. It went up 49% from our alert. And when it popped like that, I sold 50% of my position immediately, and then moved our stop loss right up underneath $330 to protect that move. And as it pulled back, sold it, out of it. And now I'm waiting for the next time to get in, waiting for that pattern to give us the next entry point, whether that's tomorrow, whether that's 3 months from now. You know, that's smart money in a nutshell. And to me, that's what makes markets exciting. That's what makes trading exciting is there is a very specific set of rules that we use to look at the market and where it's likely to go, and then find the best trades to complement that market environment, whether it's long or short. Does that make sense? Right? Who here is seeing the power of this? Right? And once more, when we combine the strategy and the insight that tracking smart money gives us with the set and forget execution, we then also are eliminating the biggest threat, in my opinion, to your trading, which is you. The biggest threat to my trading is me. It's the emotions. I love trading. I love the market. I love puzzles, right? The stock market is a puzzle that when you put the pieces together correctly, you make money. Right? It's so cool. But the biggest threat to that is breaking your rules because of emotional reactions. So I try not to look at the market when it's open. Crazy, right? I was talking about my skiing. When the Fed was doing their announcement on yesterday, I was up the ski hill. I didn't want to be near my computer. I didn't want to risk reacting to a volatile day. Instead, I programmed in my stop losses and my targets on my puts, on my shorts, and I let my strategy do the thinking, do the work. Right? Set and forget is all about letting your rules do the work. That's that, again, as I started out talking about today, is what trading is meant to be. It's what investing is meant to be. It's about your money working for you. You don't need to micromanage your trades and sit around watching the grass grow if you know why and where you want to be getting in. If you know why and where you should be getting out based on rules, you don't need to sit there and watch it happen. You can program it in. And then that's what I do. And then every day, at the end of the day, when the market's closed, I look at my positions and update my stop losses. If I need to move my targets, so be it. But I'll do that management when the market's closed. And that allows me to make calm, cool, and collected decisions based on rules instead of emotional reactions. Now, I get very passionate about this stuff. So I've been talking longer than I probably should have. So I want to get to the offer we've got today, because this is an offer literally we've never, ever, ever done before in Acorn history. And because Jeffrey's such a legend, we're doing it for the first time today. I don't think Jeffrey even knows what we're about to announce. But it all comes back to these 3 rules of smart money trading, which is it's not personal, it's patterns. Ignore the news, ignore the stories, and focus on the data. Right? Double down on the smart money. Follow the data and follow ideas where the people that know are backing their own companies with their own money. Makes sense, doesn't it? Right? And then automate it. If you have a strategy, if you know where you should be getting in and where you should be getting out and where to get out if it goes bad to reduce risk and minimize losses, why not program it in? Why not try to eliminate those emotions as much as possible? And that's the smart money playbook. Patterns, insiders, and set and forget. So ask yourself, if you've started to focus only on high probability patterns with that type of insider activity, and then you started to program in where to take profit, where, or at least partial profits, do you think you'd be doing better? Right? Can you see that a lot of the mistakes you make are because of lack of discipline, lack of strategy? If you're answering yes to that, then what we've got to offer here might really be a great solution for you, right? So let me talk about how you take that next step and what the offer is today. What we're doing today is we're giving you an opportunity to dive deep into the smart money system for a full month. First and foremost, this will get you our smart money insider alerts. In this market condition, this will get you right off to the races. The moment you fill out the form, in a few moments, you'll be able to go straight into our smart money dashboard and check out our most recent alerts that are backed by the strategy I've been talking about throughout today. We send out 5 ideas on average per week, and these are looking for the stocks that have the most significant levels of insider buying or selling, combined with the highest probability patterns that we follow. We talk about, we break down the patterns, the entry idea, the stop loss idea, the first, second, and third targets. We go through the insiders. We even go back and research what the insiders have done for the last 10 years in any stock they've been involved in, and we track what happened after they bought and sold over the last 10 years when they've had this type of activity. So we're not even just looking at the insider activity itself. We're even looking at the track record of when they've done this before. Like ALGN, a great example where you've got a credible insider selling at the top and buying at the bottom, right? Worked both times. This adds more weight to when we see it happen again. So again, it's up to you to make your own decision. We're not financial advisors, but we break down all of the things that we're looking for so you have all the information at your fingertips. And we send out that video every week. And we also then send out daily written updates on every idea throughout the week. To give you an idea of one of the ones we've just published, this is a stock that I own puts in also. This is, again, as you can see, just to have an idea of the type of research we do and what we're looking for. This is one of the ideas you'll get access to right now if you sign up. Upward channel, head and shoulders, and bear flag. 3 bearish patterns. So it ticks the technical box. Smart money indicators are bearish on the market. And you've got significant insider selling. Right? President sold 30%, CEO sold 29%, director sold 63%, CEO sold another 28%, executive vice president sold 42%, CFO sold another 45%, president COO sold another 27%, and just last week, another insider sold for the first time $630,000. I bought puts on it. I bought the April $120 puts, which last week were worth $3,780. I put into that trade. If it hits my set and forget target of $85 roughly, that put position will be worth $31,500. It could also fail, right? As with any trade, maybe it's a loss, but it's got all the things I'm looking for. Here's another one, another alert we just published, which also has insider selling. Again, smart money divergence sell signal right at the top there, as you can see in MetaStock. Upward channel, breaking the channel. This is today's chart. Also looks awesome. So you'll get those alerts. You'll also get live trading rooms. These are our training sessions every Tuesday, Thursday at 4 p.m. to 5 p.m. Pacific. They're recorded and uploaded to the customer portal, and you'll be able to access that. So over the next month, that means you'll get 8 live training sessions where we teach you the smart money system and the smart money indicators and everything I've talked about earlier today. Those eight live training sessions are invaluable. They're recorded and uploaded to the portal. We'll go into depth on everything I've talked to you about today, and we're also going to be including that for a full month as well. And last but not least, what makes this offer extremely special is you're also going to get your own personal one-on-one coaching concierge. They're going to help you get everything set up, show you how to use the portal, and get you off to a quick start. And last but not least, as a really big bonus, we're also going to include our smart money divergence indicator. This is $997 on its own. We've offered it in MetaStock workshops before, and so this is also going to be included. It's available in MetaStock, Wealth 365, Wealth Chart, TradingView, TradeStation, Thinkorswim. That's normally $997. We're going to include that as well. And you'll get lifetime access to that smart money divergence indicator and the training on how to use it. And you're going to get all of that for only $47 today. That's a full month of the alerts, 8 hours of live training, 8 sessions of live training, a full month of our 5 favorite alerts every week, and lifetime access to our smart money divergence indicator. That's a huge value. Right? If you only stay on for a month, you keep the indicator, you keep the recordings of the training, right? All of that is included for you. And at the end of the 4 weeks, if you decide that this is really a fit for you, you can continue on with the alerts only for only $97 per month. Or if you're really getting value out of the live training sessions, then you can continue on with the live training plus alerts for only $197 per month. Most important thing is focusing on these next 4 weeks in this very critical time in the market, and seeing how important these smart money plays, how important of a role it plays. So there you go. This is the first time we've ever done this offer, and it's all yours again at acornwealthcorp.com/meta. And that's only $47. So I hope that gives you a kickstart to really rock and roll in this market.
All right. Okay. We have a couple questions, Sean. We'll do them real quick. How's that sound?
Sounds good. Yeah.
Okay. Let's see. Vivek wants to know, is your system on autopilot?
No, I wouldn't put anything So it's not a autopilot in the sense that we're not turning on a trading bot to decide when to buy and sell for us. What we're doing is we're finding a pattern that has a very specific set of rules, right? If you have a downward channel, there's a very specific set of rules of where you get in and where you get out and where your stop loss should be. Certainly in our opinion anyway. So we pre-program the entry, the target, and the stop loss based on the rules of technical analysis. So in that sense, yes, it's on autopilot once we program it in, so that if the trade hits our profit target, it gets us out for us. If the trade goes the wrong way, it pulls us out of that losing trade for us, based on where the rules tell us we should take action. So in that sense, yes, on autopilot.
Do you, let's see, does it work in the Indian stock market?
Well, it works on all markets, because I look at the Canadian markets, Australian markets, and the US markets. It really, the only reason I focus more so on the US markets is that we're looking for a perfect storm where there's massive insider buying or selling with an ideal pattern. So the US market has a lot of stocks, so it's easier to find something perfect when you've got a lot of candidates applying for the job, so to speak. So really, it doesn't matter what market, it works on any exchange.
Yeah, and as you know, with MetaStock, you're going to get it. We have really good NSE data, so you can use it in the Indian market, no problem.
Exactly, and the smart money divergence indicator in MetaStock will work on all of those other exchanges.
Marie asked a really good question. Marie has been full of good questions, like all day long. She wants to know that, in your experience, if you get the alert signal, do you go all out or do you invest in increments?
That's a good question. So I like to get in early when we get a smart money signal on the market. So you'll see this in our. So actually, one of the really big bonuses of signing up today is I just did a very special training session on Tuesday on all of our smart money indicators. That's normally a whole course in itself. You'll get it for free as part of this offer by watching our Tuesday trading room that we did this week. And so when we get a fresh smart money signal on the market, I like to get in as close to that signal as possible and scale down as the trade succeeds rather than scale up. So I think of it like an option. The longer you're in an option, it decays in value. When we get a new signal on the stock market, for me the probability is highest the quicker you get in when you get a new signal on the S&P direction. So I like to get in. I go full position at the start and scale out as it moves in my favor, rather than scaling up, because the value and probability of that trade decays over time, much like an option. And you'll learn all about that in the special Tuesday session that we will be sharing with you.
Carlos wants to get your flag scanner. Can he find that at acornwealthcorp.com?
You can drop us an email at info@acornwealthcorp.com. If maybe we can share that in the chat box.
I'm typing it right now.
Yeah, info@acornwealthcorp.com, and that works extremely well in MetaStock. So yeah, Carlos, just drop us an email. But you will see obviously our flag alerts as part of this program.
All right, final question. We just don't have time for any more, but this is a good question that a lot of people ask. Minimum account size.
My answer would be the same as any one's answer. There's no minimum account size for any strategy that I'm aware of except day trading. Day trading, you have your $25,000 patent day trader rule in the US. That's the only minimum account size I'm aware of. The minimum account size to start with any trading strategy is, whatever your broker would suggest. A trading strategy shouldn't say you need $10,000 to make this successful versus $500 or $1 million to make this successful. No matter what you're trading with, it's about quality rather than quantity. And what we focus on in smart money trading is finding high quality setups. So whether you're trading with $100 or $100,000, it really shouldn't make a difference, because this is not account size specific.
All right. Thank you, John. I appreciate your coming in. That was a great presentation, as expected. We'll see you again very, very soon.
Right on. And I'll leave there's a link one more time, acornwealthcorp.com/meta. Thanks so much, Jeffrey.
All right. Thank you very much. I appreciate it. All right. Let's go ahead and do this. And we'll do this. All right. Cool. Before we move on to the next John, I didn't realize I'd put all the Johns in a row. We've got John Osborn, John Thomas, and John. So many Johns. Yeah. In any case, I do want to say thank you to CMT Association for sponsoring the events today. They've been a great sponsor of the event. And we really appreciate all the stuff that we do. John Seville, all of a sudden his name popped out of my head. All right, we're going to do a prize real quick. While we do that, I'm going to kind of show you this offer real quick from yesterday. The prize, I want to thank, let's see, Terrell in GoToWebinar for picking a number. It is making us go faster through these prizes. Terrell picked 3333. And that number corresponds to another trader. Oh, no. That's not the right one. Let me go quickly do this. Okay. That number is going to be Howell V in actually the Philippines is going to win the next prize. You might want to know what the next prize is. Well, we're going to give away Jonathan Rose's Swinging for the Fences course. Yeah, John Rose came in yesterday, spoke about kind of some of the option strategies, did a great job. He has a course. It's $197 called Learn to Buy Cheap Out of the Money Options. The idea being to risk a bit to go after big gains. So we're going to go ahead and give that away. Going to highlight this offer from yesterday. Yesterday we talked about Vince Vora's victory method. $1,002 off if you want to get it. It's our best-selling add-on of a couple of years ago, actually. Very, very good for these markets. We'll give you a year of his trading membership, the add-on, all the scans. You can get that, as well as all of the stuff that we're talking about today. Give us a call, 800-882-3040, metastock.com/promo. And John Thomas is next.
Hello, Jeffrey.
Hey, John, how are you doing?
It is snowing in Silicon Valley.
Oh, wow. We had like 12.
For the first time since 1977.
Wow. I hope that doesn't mean it's on its way here.
It is, actually. You can get hit in the next day or two.
Oh, my gosh. Yesterday we did it from our basements because we couldn't get to work. It was so bad. Anyway.
Well, be happy you're not in Lake Tahoe. There's 75 feet of snow up there. And I have a car that's buried somewhere in the parking lot.
Oh, wow. Lake Tahoe?
5 feet of snow.
Yeah, that's a lot of snow. I know it gets really deep up there. That's a lot.
We're supposed to have a World Cup race at Squaw Valley this weekend, and they're canceling because nobody can get there because of too much snow.
Wow. Crazy. All right, John, I just sent the presentation over to you. Is it asking you to share your screen? I can see it.
Hey, I see you too. Love that beard.
Do you have a beard right now?
No, I went through a beard phase in the 80s, I think it was.
Let me give a brief intro to you. John always gives a very, very interesting look at the markets. I remember we had him on initially right after Trump was elected, and he had such good advice in terms of what that meant for the market. And so ever since then, I've been bringing John back. John, I can hear you. I can see you. I'm going to get out of your way. It's your turn.
Do you have my link?
I do, and I will get that ready and typed in as well.
All right. Well, hello, everyone. Thank you for joining me on this cold and snowy day. I have every heater in the house on, so the pipes don't burst, interrupting our webinar. I'm going to talk about the big plays for 2023, all big reversals at hand. Let's get on with the show. Take out your pen and paper to take notes or start typing into your smartphone. What I'm about to tell you will blow you away and change your life, for I am in the early retirement business, your early retirement. Why listen to me? Well, I have 50 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, 14 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a founder of the modern hedge fund industry, and I have the scars to prove it. So let's go flying for a minute. You can see what I can really do. All right, that was me flying a 82-year-old British Spitfire over the White Cliffs of Dover. It was a Battle of Britain veteran which shot down 2 Messerschmitts. Not exactly what you expected in the middle of a financial summit. Anyway, the next bull market has already begun. We are running 80.26%. Trailing 1 year return. We basically have been going straight up for a year with the odd 5 or 6% pullback, and we were just short of an all-time high right now. During the same 12 months, the S&P 500 is down 9.55%. So if you're going to listen to me for a few minutes, who is John Thomas? My family origins are very humble. Growing up as the oldest of 7 children on a remote farm in Southern California. I lived the all-American childhood playing Little League baseball and becoming an Eagle Scout. There wasn't much to do in the old days in California but hunting, so I picked up a job as a paper boy for the Los Angeles Herald-Examiner. I found the stock pages, bought IBM at 20 and sold at 30, and suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I had visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site. Boy, that resume entry has proved very handy recently. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see much of a future in that, so the government sent me to Southeast Asia for a few years of intelligence missions, where I learned to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist magazine in London. When they learned I had a math degree, they switched me over to covering the Asian stock market. And ta-da, that enters the stock market. This is my box of metals, which after 10 years worth of Government service is all I got, and I trot them out once a year on Veterans Day. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to Asia. I figured out very quickly you didn't have to be that smart to make money in the stock market. So I got into the industry, joining Morgan Stanley. After 10 years, I started my own hedge fund. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has an impact on your lifestyle. You get to buy the latest hot car, collect vintage Rolls Royces, fly your own private plane around Europe, and go marlin fishing in Mexico. I sold my hedge fund in 2000, retired to go into the oil and gas industry. After making a killing there, I missed the stock market and started the Diary of a Mad Hedge Fund Trader in 2008. I now spend my days pursuing my first love, finding winning trade alerts, but I now do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There's far more job satisfaction in leveling the playing field for the average guy and teaching him how to trade, and that includes you. If I can take a $50,000 account and turn it into $500,000, that is more job satisfaction than I could ever get anywhere else. However, every silver lining has a cloud. In 2021, I owed $8.2 million in taxes on $22 million in trading income. I just fall down on my knees and give thanks I can pay this without making a dent in my lifestyle. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London these days, it's probably me. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to Wounded Warriors. When the wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. So this is the method to my madness. The final bottom for the stocks in this bear market is in, but we may have to bounce along a bottom for a few months before a true bull market develops. Bonds will be the top performing asset of the year, thanks to soon to be falling interest rates. Gold, silver, and commodities will follow. Date but don't marry. Energy trades, there are trades available there right now. Tech isn't dead, it's just resting. The global economy is struggling right now. We're getting daily contradictions of the economic data as we run from hot to cold and back to hot again. Recession risks fall from 98% probability to only 73%. According to JP Morgan, and other banks are calling for either a 50% chance of recession or no recession at all. Tech layoffs in Silicon Valley have now topped 100,000, or 2.5% of the tech workforce, but most people are rehired immediately for more money. And when they get laid off, they say, whoopee, go to Europe for 6 months and apply for a job when they get back. Fed may return to a 50 basis point hike at their next meeting on March 22nd, given the unemployment rate at a 50-year low of 3.5%. China is back with a 3% GDP print for 2022. Reopening accelerates there and may well head off a global recession. U.S. consumer inflation's expectations are falling with the one-year view at 4%. Inflation also to drop to 4% at the New York Fed. So inflation dropping from a current 6% level down to 4% in a year, that is hugely stock positive. Stocks, in fact, are better than they appear. This year won't be as bad as last. After a sideways period, we'll probably go up sharply or so. Hope the bulls have been piling into stocks since January 3rd. Weakness in tech actually understates the ballistic moves in value, metals, financial stocks, all of which Mad Hedge has been long since the beginning of the year. Banks disappoint on earnings. 2023 started with a massive short cover And now that it's done, we could see a narrow range trade for months. Eventually, we do break out to the upside, probably after the debt ceiling crisis is resolved in June. Commodity plays will lead, energy plays will lag. Financials will also be a strong sector with biotech as a safety trade. Look for sideways first half, strong second half scenario to unfold in 2023. So this is what's in the market now. High inflation, oil shock, COVID spike, labor shortage, supply chain headaches, Fed interest rate rises, quantitative tightening, and poor earnings. What will the market discount next? Plunging gas prices, plunging commodity prices, stabilizing supply chain, record 3.5% unemployment, better than expected earnings, 1.25 trillion in stock buybacks, soon to fall interest rates, and a weak dollar. Now remember, when you're trading in stocks, you're all in the what's going to happen next business. Here is our algorithm, which makes predictions on where the market's going to go with a 95% accuracy. And we see a series of rising bottoms and eventually breaking out probably sometime in the spring or summer. Last high was at 418. We're looking for a year-end target of 480 in the SPYs, or up another 20% at least from here. So we run barbell portfolios, which are 75 big tech right now. 2% of the workforce is accounting for 25% of the market cap, an incredible 25% of all U.S. stock earnings. The other 25% goes to domestic recovery stocks, including railroads, airlines, cruise lines, couriers, steel companies, banks, commodities, construction, credit card companies, hotels, casinos, and online ticket sales. Boeing has been one of our favorites for a while. We cut the bottom here back in October. Stock has since doubled or more. Actually, we're up about 120%. And we expect a long sideways move, maybe a pullback to 190 or so. Eventually, we see the stock hitting $450. The 737 MAX is flying again. In fact, I flew it from Hawaii last weekend. The U.S. airlines are now suffering from a major aircraft shortage, and Air India just placed an order for 450 planes, the largest such order in history. JP Morgan, we love the banks. It's the quality value play. Banks love rising interest rates and falling default rates. They're hugely overcapitalized now, moving into online banking and closing their expensive branch networks to cut costs. Next time you go into a bank branch and see if they have any offices left or any desks. At Wells Fargo, they're removing the furniture as fast as they can. Algorithms and call centers don't need furniture. They don't need branches either. Anyway, JP Morgan has had a tremendous run, up 45% since October. We expect a long sideways move and then a breakout to the upside. We're looking for $200 a share for JPM. Visa, another big winner of inflation, catching exploding online commerce, COVID-19 recovery. 15% of all credit card charges are for travel charges. We know, like last summer, this coming summer, we'll see one of the epic travel booms of all time. All of that goes on to credit cards. We've had a big move since October from 175 to 235, and we're looking for $300 by the end of the year. Union Pacific, in any economic recovery, you move lots of big stuff, and Union Pacific is the preeminent east-west route in the United States. That means we import a lot of stuff from China, ship them a lot of commodities back. When both ends of the transaction are recovering, it's a great stock to buy. Looks like we're going to get a double bottom here around 185. After that, we expect to move in UNP to $300 a share. Federal Express, not only do you move big stuff, you move small stuff. and that is Federal Express. There's being a massive increase in overnight deliveries. They also got a lot of vaccine business during the pandemic. And again, we've had about an $80 move since the October bottom, or about 50%. We're looking for $300 by the end of the year by FDX. Berkshire Hathaway is the one-stop barbell portfolio, heavy weightings in the banks, also in industrials, and they're the largest outside owner of Apple. We've had a nice $60 move, or 25% off the October bottom. And notice that all of these stocks are massively outperforming the main indexes and will continue to do so. Also, Berkshire is a massive buyer of its own stock whenever it trades at a discount like it is now. So we're targeting $400 a share in Berkshire. Second half of the barbell bets on a massive drop in interest rates and a global recovery to begin by the end of 2023. The upside potential for recovery stocks is far greater than tech. Some of these stocks have not moved for 5 or 10 years. Focuses on economically sensitive cyclical industries, makes a great counterweight to high growth technology and other stocks. We could spend years rotating between the two groups. So here's the main index, the NASDAQ. Just had a heroic run to the upside, some 25%. We're looking to give up at least half of that, since this is the most volatile sector in the market. And then you want to be a buyer. We're looking for 18,000 in NASDAQ by the end of the year, or a gain of about 40% off the lows. Microsoft, big leader here. Accelerating economy means more PCs and operating systems. They're also moving big into the cloud with their Azure service. Moving to subscription services. Notice that your Microsoft bill keeps going up every year. Pandemic drove a huge rise in PC sales and gaming. I'm looking for 350 by the end of this year. Apple, 5G fever is here. 1 billion phones need to be replaced to move into a 5G, and you can expect Apple as a major buyer of their own stock. We're targeting $200 for Apple by the end of this year. And yesterday they just announced a new breakthrough technology. Your iPhone can now monitor your glucose level if you have diabetes, which is about 11% of the US population. And that's just the beginning of a major move by Apple and the other big techs into healthcare. Amazon has their global online sales presence, looking to buy on the dip here. We're looking for 150 in Amazon. And again, all of these big techs, major players in artificial intelligence, which has become the theme of the year, it seems. By the way, likely the government will file an antitrust suit against Amazon. If they end up breaking up the company, the value of the individual pieces are worth double what Amazon itself is worth. And we certainly saw that with the breakup of other monopolies like AT&T. Google has a near monopoly with 92% of all search, 15% of all searches for travel. Advertising is the first dropped and the first that recovers in recovery. So again, if we get a double or triple bottom here in Google, I'd be a major buyer. We're looking for $150 a share by the end of the year. Salesforce, big in customer relationship management on the cloud, the sector that's growing exponentially, just announced major staff cuts and cost cutting. We want to buy this one on the dip also after its $50 or 45% gain from October. Again, you really want to be watching those that had the biggest moves since October, because they will have the biggest gains when the next leg of the bull market returns. Again, we're looking for $250 a share in CRM. Tesla, which we love, I've been in the stock since it was $2.35 after the IPO blew up. They cut prices 20% for the Model 3 and 35% if you include the federal subsidies. Tesla now has the #1 and the #2 spots in the California car market, which is 22% of the total U.S. economy. After about a $50 pullback, we're looking to buy Tesla again. We bought it down here at the 105, 110 level. And our target for the year is $300 a share. And Elon Musk's target for the stock is $1,000 a share. And so far, he's been pretty right. Bonds, another major asset class we play. We're probably the only online service that makes bond recommendations. And as a result, we have that market to ourselves. And we make a ton of money on our bond trades. Treasury Secretary is warning of a coming U.S. bond default, saying the government runs out of money by June, capping bond prices for the foreseeable future. Stock guru Jeffrey Goonlock at DoubleLine says you want to overweight bonds with 60% of your portfolio against 40% in stocks. TLT should reach 120 in 2023 without any political interference. That'll probably happen after the summer. Keep buying TLT calls, call spreads, and leaps on dips. Junk bonds will also do well, the JNK and the HYG. And then last year, the U.S. budget deficit dropped by half, one of the sharpest drops in government spending in history, and that eliminates a major supply of bonds to hit the market. Here's the TLT. Short of the century is now the long of the century. We got the double top here. We got the 10-point pullback. We're now going in right now at this current level, targeting 120 by the end of the year. By the way, if you do 100, 105 leap in the TLT, the 1 year return on that is 100% with very low risk. So if you want to know how to do that, just sign up for our service. Before this bottom, we shorted bonds from 180 all the way down to 92 and made fortunes for our customers. Here's the yield. We expect yields to peak out around here. We just ran from 330 up to 4%. We peak out around here. The next target by the end of the year is 250 on the 10-year Treasury. And that equates to a move of about 20% or 25% in the TLT. Foreign currencies, you want to be fading the dollar at every opportunity. Japan inflation hits a 4%. A 41-year high, exceeding the central bank's target for 9 consecutive months. Expect another interest rate rise in Japan. Japanese yen spiked up to a new 4-month high at 128. Japan has reversed 30 years of easy money policy to engineer a strong yen, allowing interest rates to float up from 1/4 to 0.5%. So you want to be buying the euro, the Australian dollar, the British pound, and the Japanese yen on every dip. China lockdowns will keep the yuan lagging, but it will eventually join the rest. Strong currencies will also deliver major bull markets in emerging market stocks and bonds. So here's the Australian dollar. We see a move from 68 going up to 1-to-1 against the US dollar. The Aussie economy, with their major commodity exports and food exports, is essentially a call option on the recovery of a global economy. And the best way to play that is by buying FXA. Japanese yen will also do better after its recent 5% pullback. We're looking for a 25% gain in the yen. Euro also, we're looking for 25%. Even though World War III is going on in their doorstep, we see a major recovery in the economy happening. And the British pound will go up 15%, losing 10% of their performance to Brexit, which will be a drag on the economy for the next few decades. By the way, this is the new British pound with King Charles III on the coin. How about that? Emerging market currencies also will be huge performers, up 40%, and the way to play that is with the CEW ETF. Energy commodities, there's great trading opportunities. Long-term, this stuff all goes to zero, even though it may take 30 years to get there. And on the way to zero, you'll have several doubles and triples. So it is a trading instrument, not an investment one. Sudden Chinese economic recovery is providing some support for oil prices on the back of COVID herd immunity. Russian oil hits a 2-year low when priced in rubles, setting off a budget crisis and 500,000 barrel a day production cuts. $60 cap on oil purchases from Russia is succeeding. There is a short-term play here in the UNG, or natural gas, which is down 80% in 8 months. Even if you hate it, you have to buy it for a bounce. U.S. now the world's top oil producer, followed by Saudi Arabia and Russia. That puts us in the driver's seat. Massive supplies from the U.S. headed off Europe's expected energy crisis, which is why you had this giant 80% move down in nat gas. So oil short-term looks like it's setting up another head and shoulders top here, looking for lower lows, probably $50 a barrel. And it has, in fact, been in a downtrend for 20 years. The return on oil stocks on a 20-year view is effectively zero. And you can see here's a double top here. Eventually, we go back down to the pandemic lows of $10 a barrel. And if you were in the futures market, we traded then as low as negative $37 a barrel. I bought futures at -5 and lost money on the long side. Go figure. But that's how volatile these markets can be. And here's your nat gas move. Gas shortage, gas shortage, gas shortage, gas shortage. No, oversupply, 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 oversupply. It basically, the time it took from here to here was how long it took to redirect ships from China to Europe. We moved all of our nat gas exports from China to Europe. That headed off an energy crisis in Europe, kept the Europeans warm and the Russians at bay. That said, we're now at the pandemic low right here. So I'd be buying nat gas on dips, targeting a double from here at least. Precious metals, we are in a new bull market. A massive silver shortage is developing, with demand up 16% this year to 1.2 million ounces, with EV production increasing from 1.5 million panels to 20 million panels a year. Within the decade, its share of the market will rise from 5% to 75%. Solar panel demand is also rising. So you want to buy the SLV and Wheaton Precious Metals on dips. And my next leaps will be for silver on the next dip. Gold will be a good performer also in 2023. Collapsing interest rates will be the big story here. So gold, this is the metal, and we're down to $18.41 an ounce, which is down about 7% from the recent high. We're looking for $2,200 an ounce by the end of this year. And of course, we've been buying the dips and putting out leaps since October. You like gold, you'll want to buy the world's largest gold miner, which is Barrick Gold. We see Barrick moving from $16 up to $50 by the end of 2023. That's a 230% gain. And silver is another big play. It has roughly 2 times the volatility of gold. We're targeting a move from $17 up to $50 an ounce by the end of this year. So don't play with matches. You could probably do okay just buying all the stocks I mentioned above and forgetting about them. However, the reality is that conditions for these companies change every day. They're all viciously competing, trying to put each other out of business. If you don't get daily updates on the fundamentals, you could easily get wiped out. Today's big winner could instantly become tomorrow's loser. That's why you need somebody like me to guide you through the thicket to avoid an out of the blue blow up. I gained financial independence for life. And so can you. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. And that's me sending you a trade alert from the coast of North Africa. I'm struggling as hard as I can to smile because it's 120 degrees right there. The harsh truth is you really need my help. The majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that problem is to get educated. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why do dead people do so well? They never sell. Yes. And that's the last broker I had. His name was Pinocchio, who I found in a souvenir shop in northern Italy. You need a real pro to guide you through the maze. The market is not monolithic, and 95% of it can be completely ignored. You just need to know which 95%. There are a lot of there are a few great sectors and a lot of awful ones. You can earn a 10x return on the great ones, but get wiped out by the losers. Let a 50-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. This is our secret weapon, the Mad Hedge Profit Predictor. That's our market timing index. It's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators and took a team of mathematicians 1,000 hours of calculations to create. And this is this morning's reading. We're at 62. Anything approaching 80 is a strong sell. Anything approaching 20 is a strong buy. So we're right around the neutral or do nothing territory. The next move in this index most likely is back down to the 20s. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms become so dominant in the market, you should never trade without one. Does the work of a seasoned 100-man research department in seconds, runs fast, runs real time, and optimizes returns with the addition of every new data point far faster than a human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your profits. And I'm not the only one using algorithms. Some 80 to 90% of all current trading is algorithm driven. I was walking on the Miami waterfront a couple of years ago and I saw this mega yacht. Look what it's called, algorithm. Obviously, it's working for more than just me. Here's 3 years of profit predictor performance. Lots of buys at market bottoms, lots of sells at market tops, buy, sell, buy, sell. It's like a money-making machine. This is our average annualized return for the last 15 years, 46.84%. That is 2.66 times the S&P 500. Richard made millions religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them over. Let's see, let's get this up here. Flying them over the California coast. Greg turned his $100,000 into $1.5 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, Tesla Powerwalls, and a Tesla Model 3, and still had enough money to send 3 kids to college. And this is another one of our happy subscribers. Oops.
Hiking on top of the Continental Divide. 9 months ago, I joined John's Global Dispatch Service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it. And I couldn't be happier. Life is good. John really helps. The other day I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. I hope you all do well trading yourselves. Thank you.
So what do we do about all this? Stocks, you want to buy the next dip. Bonds, you want to buy dips. Commodities, buy dips. Energy, stand aside. Currencies, buy foreign currency dips. Precious metals, buy dips. If you are not up 80.26% in the past 12 months as I was, you are reading the wrong newsletter or following the wrong trade mentoring service. 80.26% is our current trailing one-year return, and 46.84% is our average return over 15 years. You get that kind of performance, you get to do things like other people don't do, like take the owner's suite on the Queen Mary from New York to England. When you get to England, you can take the Orient Express to Venice. And once in Venice, you can go island hopping to save time. Here's the very long view. The 2000s, the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That'll create an economic boom that'll last another decade starting in 2023. The last time we had a demographic push, this is how the stock market did. It went up 20 times in 18 years, from 600 to 12,000. Are you ready for a replay? Well, if we get the same kind of performance, you can expect stocks to go up 20 times from the 2009 bottom in 18 years to take us to 120,000 by 2030. And if you think I'm crazy, we're already 3/4 of the way there. This is where we are now if you superimpose one chart on top of the other. Except this time it's different. We have a tech supercharger. Technology is hyper accelerating across all fronts simultaneously, and the pandemic will greatly speed up the rate of change. The development of a function quantum computers means that computational ability is about to increase a trillion-fold at no cost. The world's major computational challenges will be solved, all major human diseases cured. Barbell stocks dominate in this scenario, so the future looks great. So who'll show you how to play the next 90,000 Dow points? Sit with me, John Thomas, the mad hedge fund trader in my global trading dispatch. Discover how you can tap into the top performing trade mentoring service up 80% in a year. Follow my research and market beating trade alerts and you will rake the profits in. Let a Marine Corps combat pilot steer you into big profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical month, trading month. We do about 200 trade alerts a year, and 95% of them are profitable. Just a matter of time before barbell stocks break out to new all-time highs. Watch this space melt up going into the end of 2023. Get ready to start reeling those whoppers in with Global Trading Dispatch as your guide. Here's how our algorithm works. It predicted an imminent breakout in Tesla when it was back at $66. So we sent out a trade alert. It said buy Tesla at 67 or best. And here you had 149 shares, give you a $10,000 weighting in the stock. What happened? We had a 63% move in Tesla in 20 days, up to 109. So we sent out another trade alert saying take profits. And on this particular trade, we made $6,258 in 20 trading days. And what do we do after that? We kept buying the dips in Tesla, and we rode it all the way up to the old split adjusted price of 445. So here's a history of our 10 baggers. Zoom, we got a 10x return. Lam Research, 10.6 times. NVIDIA, 16 times. Square, 25 times. Moderna up 40 times. And of course, the granddaddy of them all, Tesla, up 180 times from our original $2.35 cost. With the Global Trading Dispatch, you get instant trade alerts sent out at market sweet spots, about 200 a year, and all the reasons to execute them. Live bi-weekly strategy webinars like this one with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, more educational videos and webinars than you can consume in a lifetime, and access to a 14-year database. I'll even give you the name of a good surfing camp in North Africa. Warning, it's harder than it looks. This is a one-stop shop for individuals who want to understand what is happening with their retirement funds, people who want to learn how to trade for a living, for smaller institutions and financial advisors, and get in before the next melt-up begins. This is what you get, my global market comments, which are in your inbox 5 days a week. You also get Mad Hedge Hot Tips, the 5 most important things that happened today, also before the market. This is what I'm not going to charge you for this service. I'm not going to charge $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions. And I'm not going to charge $10,000. That's what we used to charge for our concierge service. And I'm not going to charge $3,000. That's the lowest price you will find on my website. Today, only through this webinar, creating this product cost me millions. With the best customer service in the industry, running it cost me millions more. 6 months for just $997. That is a 66%, which you can only get today through this webinar. It's a limited time offer. We only take 25 new subscribers at a time, so it's first come, first serve. I can't wait to make you a top drawer trader. Just click in the chat box on the right, and there will be a link to a dedicated sales page, which you can only obtain through this webinar. Let me make the money for you to pay for your own subscription. You make the trades, discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on the chat box on the right, and Jeff has just put it in there. madhedgefundtrader.com is the link. Here's the offer you can't refuse. 6 months for just $997. Let me show you how to make the money to pay for your own subscription. 95% of our new subscribers cover the cost on the first trade. By now, you will instantly receive a trade alert with an extremely high probability of success that you can execute immediately and make some of the most serious money in your life. Don't leave good money on the table. And just to give you a tease, this is a recent chart of the trade alert on your way the second you buy our service. So this is one of my other concierge members. He collects vintage Spitfires for a living after retiring from as a pilot. And let me tell you his story. When you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. So it was in that spirit that I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hedge concierge member Peter Monk. Peter was a poorly paid pilot for Ryanair when he first signed up for my Global Trading Dispatch. After doubling his money in the first year, Peter upgraded to my concierge service. Then the money really started to pour in. Peter plowed his Mad Hedge trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging and borrowing parts from all over the world. He eventually built his fleet up to 16 flying aircraft, which they are worth over $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Even though the plane was 82 years old, we managed a brisk 250 miles per hour over the countryside. The Spitfire could outmaneuver any plane the German Air Force threw up against it. This particular plane is credited with shooting down Messerschmitt Bf-109s, and it's easy to see how. We found a clear piece of sky over the white cliffs of Dover between two big fluffy cumulus clouds and commenced a full-on aerobatic flight test. Pilots always want to see what I can do with these old planes, and this time was no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wing overs, careful never exceed the 1G limitation, or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 feet to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and the traditional pint of beer at the local pub. Let me make millions of dollars for you as well as I've done for thousands of other followers over the last 14 years. So here's the offer you can't refuse, 6 months for just $997. And let me go back. And let me check my email and see if we've had any orders come in. We do have one from Rodney in Sydney, Australia. Thank you very much, Rodney. Please check your inbox and execute the trade alert right now since the market is open. It's easy to do. We've had one from Jay in St. Petersburg, Florida. Welcome to the club, Jay. Best investment decision you ever made. And we've just had a ton of new orders come in. And it looks like we're going to hit our 25-minute limitation really soon. Let's see who else we have here. Okay, let me get into the right inbox. Okay, we have Adam from Durham, South Carolina has just come in. Thank you very much, Adam. We have Tracy from Grand Junction, Colorado. Thank you very much, Tracy. Promise to work hard for your money. Let me open up a few more of these. We have here David from Duxbury, Massachusetts. Thank you very much, David. And we have Lance from Bemidji, Minnesota. Okay, let's see. There are more coming in. Jeff from Plattsburgh, New York. We have Judy from Memphis, Tennessee, and Seth from New York City. And let's see, they're starting to pour in, and we're almost at the 25 limit right now. James from Hillsboro, Oregon just came in. Thank you very much, James. If you don't have your trade alert already, James, please check in your junk folder. That's where brand new subscribers go sometimes. Once you enable our address, then you'll have no problems in the future. Okay, Jeffrey, I see my time is up. Thank you for bringing me over, and outstanding summit. I love listening to all the fascinating speakers that you have.
We love having you, John. Can I ask you just a couple of questions from the chat?
Sure.
Vivek wants to know what he says like this, spoken like a leader. I love the confidence. What percentage of your assessments are technical and what are fundamental?
You know, there are about 100 factors that go into every decision on the trade alerts. Several of them are technical in nature. Obviously, we look at the 50 and 200-day moving average, RSI, overbought, oversold. Plus, we have our own in-house algorithm, which aggregates a lot of these. But a lot depends on fundamentals. The fact is, money-making trade alerts use every single tool they can get their hands on, anything to improve their performance. We also spend a lot of time doing fundamental research, meeting with companies, getting to know technologies. And a lot of these companies I have been covering for 50 years. You know, companies like Boeing, like Freeport-McMoran, like Apple, I know like the back of my hand. So a lot of them, I knew the founders, like Elon Musk at Tesla. I've known him for 25 years. And I knew Steve Jobs from when they did the IPO with Morgan Stanley. So I've been in Silicon Valley ever since it was a peach orchard. So cool. It's been fascinating to watch the history develop.
David wants to know if there's a 12-month option, and he says, I'm in.
Well, you will be grandfathered at this price. So at the end of 6 months, you can renew for the same $997 price or upgrade to our other services like our technology letter, our biotech letter, or our concierge service, which is now $12,000 a year. But there's a waiting list for concierge members. We want to make sure you know what you're doing before you get to the higher levels.
Let's see. Ashit says he wants to buy, and where's the link? And I gave it to him. He also wanted to make sure that you provide exit information as well.
We do. We run this. We basically take the software from my old hedge fund and apply it to the trade alert service. So we have a daily position sheet with entries, with exits, with P&Ls. So a lot of services, too many services put out alerts, say buy this, and you never hear from them again. We say buy this. If it works, we tell you where to take profits. If it doesn't work, we put out a stop loss alert also, but that only happens about 5% of the time. And we tend to stop out very quickly, usually when the loss is only 1% of your portfolio, because it's easier to dig yourself out of a small hole than a big one.
Salik says he also wants to buy, so that's a great thing. Last question, and then I think we have to move on. There's tons of questions, but Marie says, what is the mindset you have when things don't go the way you expect them to?
You have to approach markets unemotionally. I have rigid stop loss rules. They hit my stop loss, I'm out of there and go on to the next trade. And that's easy to do when you know the next trade 95% of the time will be profitable. Risk control is one of the most important parts of asset management. Out there, we have the risk controls of a major hedge fund. I know because I built it from scratch 30 years ago. So making money is one thing, hanging on to it is another. And we're almost at 25, so if you're sitting on the fence, hemming and hawing, get your order in there before we shut down the store.
Marie says, how much is it after 6 months? After 6 months, you are grandfathered in the same price.
Yeah, you're in there for life at $997, and we have a lot of people who do exactly this. They just keep rolling over their $997 subscription year in, year out. We still have some customers from our original offer 15 years ago.
All right. Very cool.
And by the way, Jeff, I think I knew you 15 years ago because you were making those offers.
Yeah, probably. Yeah, probably. I've been here 26 years, if you can believe that. So, yeah.
It's hard to believe. You predate the internet.
Well,
you go back.
I do, actually. I was like, Gmail's cool, or email is cool. I remember learning about that when I started here. So,
in 1996, I told the head of research at Morgan Stanley, I said, in 5 years, all research will be on the internet. And he said, no, never happened. And at that point, they were just sending out hundreds of tons of research on paper every month. Anyway, great to see you again.
Thank you, John. If you guys, I know there's a lot of questions that we won't get to. You can reach out to madhedgefundtrader.com. And thank you very much, John. I appreciate it.
All right, you take care.
All right, cool. Let me go ahead and do this. Oops. All right, yes. And then we'll go ahead and make me a presenter here. Share the screen. Talk about CMT and how good they are as sponsors. And move on to the next speaker. So again, thank you, John, for coming in and spending some time with us. Before we move on to this next speaker, I do want to say thank you to CMT for sponsoring the event. We have Tyler coming on in a little bit to talk about how important having a CMT designation after your name might be if you want to trade for banks or manage money and stuff like that. He does a great job. It's really interesting. He's in a few speakers, and we do really appreciate CMT for sponsoring today's event to getting being part of it. So in any case, one of the things that I did want to talk about is yesterday, the offer we're going to spotlight here. Yesterday, Ed Downs came in and talked about artificial intelligence and using artificial intelligence in your trading. And he offered $1,000 discount on his add-on. So if you want to get it at the conference price, it's a fantastic add-on. Does a fantastic job of doing AI analysis. $997, 30-day money-back guarantee. You can take advantage of that at metastock.com/conf promo. You can give us a call at 800-882-3040, or you can also visit us online at metastock.com/sales-chat. So, of course, we are MetaStock. You can read this side while we do a prize. I want to say thank you to Terrell. Terrell is actually the person that gave us this number. It was 3333. So I'm going to figure out who that is and give him a prize. I do want either, if you're on YouTube or on GoToWebinar, guess a number. Give us a number for the next prize. It could be anything between 1 and 12,725. There's been some questions like, how do I know what my number is? We don't really the numbers are assigned based on the order in which people are registered for the event. So I just have a big old spreadsheet that I got to go to the right cell on. And I'm going to do that now. And we're going to find out who 3333 is. What I want you to do is guess the next prize, or actually give me a number and I'll use it as the next prize contest. Anything between 1 and 12,000. Okay, we got some. David, I'm going to go with your number of 1250 next time. All right, here we go. Let's see, the winner of the prize, 3333, is Howell V in the Philippines. Howell V in the Philippines. We are going to give you a very special prize. And that prize, actually, that was the same number we just picked, and I already gave him the swing from the fences. Let's go with David's number of 1250. Control H. I went in there and I was like, wow, I'm already on that. Must have been prepared. A1250. Okay. The winner of this prize is Sharon S. Sharon S. Let's see. In the USA, we are going to give you a prize. So Hal already won. He won last time. With this one, what I'm going to do, if you remember yesterday, Anne-Marie came in and she did a really, really good talk towards the end of the day. I believe it was yesterday. We are going to give you a signed copy of her book, the Trader's Book, and in addition, one of her courses. Very, very cool prize. I'm going to go ahead and kind of give that to you. Congratulations on that. And thank you for all the numbers. I'll take another one for the next one. Again, if you have questions for us about any of the specials that we're running, metastock.com/conf promo, 800-882-3040, or metastock.com/sales chat. So thanks again, everybody. Our next presenter is Bubba Horwitz, Todd Horwitz. I ran out of John's, I guess. But Todd does a really, really good job. He's going to come in here and talk about trading. I love Bubba's style. He does such a good job. I keep inviting him back, and we really appreciate him coming today. Bubba, how you doing?
Doing great. How are you, brother?
Good. We're having a really, really good conference. Everybody's been doing.
Why wouldn't you always have a good conference? You're one of the best.
Let me go ahead and make you the presenter here. I'll make sure we can see you. Looks like
So now I got to figure out which way. I don't want to show that screen. Hold on a second. I got to go. I always have this problem when I'm doing this. Here we go. Come on.
I can see your email.
Listen, what number do I want? I want that one, and I want that one cleaned. Okay, so you're seeing my presentation now?
Yeah, but we also got a glimpse in your email, your instant messaging, and your trading platform. So
that's all right. I mean, you get everything. I don't care. I get in the hide. I'm all good. I'll even show my face for a minute, but since the camera's sideways, it's hard. So I'll wave there.
Yeah.
How you doing, everybody? Great to be here. But I got to look the other way because I've got 6 monitors and I'm trading at the same time. But anyways, am I ready to go? After listening to John. I've been behind John before. It's like a time slot hit.
Yeah, it's all you. I'll get out of your way. Go.
All right, go. What's up, everybody? Welcome aboard. And of course, today I'm going to talk about our Day Traders Dean program. And of course, that picture is me done in cartoon with my dogs and my camera. And that was actually sent to me by one of our members. That was at one of my in-person conferences. But, I'm a trader for 44 years and professional only for myself, my own money for the last 44 years. And really enjoy it. And when I came off the floor, I wanted to teach other people and educate others on how to do this. And there's a few things we talk about. Nothing can stop the man with the right mental attitude from achieving his goal. Nothing on earth can help the man with the wrong mental attitude. And that's what trading is about. Okay. It's about attitude. It's about understanding that every day ain't Christmas. Nobody's on the street corner handing out $100 bills. Okay. It takes work. It takes focus. You got to make sure that you understand what you're trying to accomplish. So remember that always, because if you treat this like a casino, if winning trades give you a buzz and losing trades make you depressed, you belong in a casino. And we are not in a casino. We are in the edge business. Okay. If you play any games that are designed on mathematics, poker, gin, bridge, and backgammon are 4 that I play, that the better player will win. The better trader will win. Not every time. Okay. And if you're a poker player, I had 3 hands in a row the other day. King, king, lost ace, 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 king suited, lost, queen, queen, lost. 3 row, bang, bang, bang. It happens. It's part of the game. It's part of the numbers. But if you play the best, over time, the numbers will always play in your favor. In the meantime, I'm sure you've seen the disclaimers 1,000 times. I'm going to always tell you the straight up story, as Jeff will tell you. I don't believe in bullshit. I don't believe in giving people bad information. I want you to understand exactly where we are and what we do. So the futures, options, whatever you're trading involves risk. Okay. Past results are not indicative of the future. That's just the way it goes. And that is the formal disclosure. And speaking of that, I don't care how good of a trader you are. I don't care what kind of information you got. I don't care what kind of magic you think you have. We all go through drawdowns. Drawdowns are a part of this business. Okay. It is impossible to avoid. Anytime you have risk capital and you're trying to make a lot of money on your capital, guess what? You have risk. You are going to have drawdowns on an occasion. Sometimes they're extended. But the key to understanding the drawdown is how to use your equity curve and how to add to your positions at the proper time and how to make the best use of your money based on probability, which is basically everything that I do is based on a probability model. And for those of you who don't know me, and I'm sure most of you don't, but I have been doing this. This is my 44th year. Okay. I was one of the original market makers in the SPX. And the thing I pride myself in most is every trade that I send out, I am in with you, right next to you. Okay. And I'm not in before you. I'm in at the same time you are. And what you'll find out about Day Trader's Dream is that everybody gets the same fill. Okay. They're done in bulk orders. So in the meantime, success is planning plus execution. You've got to have a plan. You've got to understand what you're trying to do. You've got to put your capital to work for you. Okay. That's the key in this industry. It's the key in investing. And again, and whether you become a member with me or not, that's up to you. I don't care. But at least I want you to take away a few very important factors for yourself, for your own trading, so that you're always in control and always prepared for what happens next. Because be patient, good things take time. You never want to sacrifice your long-term goals for the instant emotional gratification. We like to talk about delayed gratification, about building a business, because let's face it, trading, investing is a business. It is another business. If you're working and doing trading, great. If you're trading only, great. If you're just investing for your retirement, that's still a business. That is money that you are depending on later in your life. So do not put yourself in a position that you're always looking for the immediate gratification. Delayed gratification is what you're looking for. Get the process correct, get the program right, and then you will be fine and you'll have no problems. It's those who always try to grab that always end up with nothing later. Now, today we're going to talk about just the facts, the BS we all must contend with, price discovery, manipulation, algorithmic trading, margin and leverage, the mental game of trading, letter of direction trading, real results. Actually, that date is wrong, but it's real results as of Saturday, and how you can take advantage now. And of course, a Q&A, which I'll always answer all your questions. I guess some news must have just come out because the markets are flying. Well, of course I have a plan. Okay. Again, if you ever saw Sergeant Bilko, look, planning is very important to everything that you do. Okay. You know, if you're in the day trader's dream, that's one plan. That's a model. Okay. If you're investing at the same time, that's a different model. Not everything follows the same exact rules. Everything follows the same principles, but not the same rules. Okay. So remember that when you're allocating your funds to what you're going to do, understand what you're going to do with those funds and what your expectations are. Okay. And when you're goal setting, okay, your goals have to be attainable. Do not make unrealistic goals. If you think that you're going to start with 5,000 today and have 50,000 tomorrow, that's not going to happen. So don't look to get rich quick. This is not a get rich quick scheme. This is a building block approach to use your money to grow your account, to trade bigger, to grow more, and to continue forward. When we talk about the facts, we all have seen the nonsense out there, the advertising, the gigantic returns that are unbelievable, that who can possibly believe that those are possible, because they're not possible. Okay. It's the same as we've all heard that goofy guy, if you know who that is, on TV. Okay. And I got kicked off that network for telling him he was full of crap on TV once. But in the meantime, at the end of the day, okay, it ain't easy. That's the bottom line is this is not easy. This is work. This is understanding. It's a very emotional, mentally based business that goes through ebbs and flows. But when you learn to be what I like to call even keel, you put yourself in the best position to be profitable. Okay. You don't want the highs to be too high or the lows to be too low. You want to be able to go steady. And if you've ever seen me, either if I've made 100,000 or lost 100,000, you wouldn't know the difference unless I wanted you to know. Okay. Now, markets themselves are based off of price discovery, right? Buyers and sellers meet, they exchange, the exchange of wealth takes place, and that's what creates a chart in a market, right? That's what creates the chart is buyers and sellers making trades. Okay. You've got information going through right now, and they're buying and selling. And of course, right now, in a very short time frame, we know that the buyers are being more aggressive than the sellers. Hey, no big deal. Doesn't matter. That's how they eventually develop a trend, because you understand that markets go through many different phases, but you can actually break it down to 3 phases: consolidation, breakout, and blow off. But at the end of the day, it comes back to price discovery. And as a retail trader, which we all are now, there is no more floor traders. Okay. You are looking to be with the trend, because that's where you make the biggest amount of money. It's too hard to scalp in these tight market conditions. So you want to learn to be with the trend. Okay. Now, lessons that you need to learn: predictions and forecasts are a waste of time. I mean, do I have a prediction? Yeah, I think the market's going down 70%. Okay. But right now, I'm not short because of that. That's just an opinion that I've seen in the market, but I don't trade off of that opinion. Focus primarily on stock picking rather than timing. Okay. You can't time the market. That is, again, that's a laughable joke. Anybody who says they can time the market, as any advisor will tell you, now they're not telling you because they actually understand it, but the fact is, it is time in the market, not timing the market. Right? That's the perfect example that John showed if you were here. The best investors were dead people that didn't sell. Okay. Stay disciplined and cultivate the power of selling. Use charts as a framework for trade management. Be aggressive at both cutting losses and chasing gains. Okay. And that's what you want to use. You want to use the tools that are available to you. Don't fear losing trades. Losing trades are a part of a process to finding winning trades. Okay. Learn from your losses. Don't let the losses rule you. You rule them. You take a lesson out of every loss. Profits occur unevenly. Okay. We day trade every morning, and we might make no trades, and then bang, catch a couple of winners that are big and go back to the grind. I don't know when I'm going to have a big winning day. I just know that I'm always going to be in the game, because I'm always going to be protected against adverse conditions. Okay. Now I have losing days, don't get me wrong, but I'm always ready to hit the home runs. Okay. No trading approach is inherently superior, so develop your own style. Work to keep your accounts as close to the highs as possible and maintain a positive mindset. Those are just basic guidelines. These are for you. Okay. These are things you need to do. What we do is we use an algorithm, and we're using basically a mathematical model that trading is about, because the truth of the matter is trading is what? If you look at a chart, what level of math is in a chart that you could use? A lot of it's geometry, is it not? Triangles, rectangles, the whole deal. So again, remember, it's about the numbers. It's about the math. It's about where are we in the phase of the market, okay? Are we breaking out to a new trend? Are we consolidating? And that's what our algorithm is determining as we're using it. And we use it in an overnight model, but the one you're looking at today is a day trading model, which trades every hour if there's a trade to be made, okay? It trades on an hourly basis if there's a trend that is developing, that is breaking out. But you first have to also understand the margin and leverage. So what makes the day trading model better than the overnight model, for example? And of course, it is the ability to use less margin, because brokerage firms offer day trading margins, okay, versus overnight margins. Like you can trade a mini S&P during the day for $1,000. If you want to hold it overnight, it's $12,000. So you get much more leverage during the trading day. And leverage is a great tool, but only when it's used properly. Okay. When you get over leveraged, it's wonderful if you're making money. Okay. But it wipes out your gains at a dramatic speed when it's going against you. So it's not worth the grief and aggravation when you are using too much leverage. You are putting yourself in grave danger of failure. Okay. So we're using margin power, buying power for margin, and we have trading 8 different products that we have access to. And we're going to be able to use a smaller amount of money to go ahead and leverage those up. Why? Because we're not going to carry overnight. We don't take overnight risk in this particular model. We simply trade during the day, and we only trade during the regular market hours. So as you understand, and we'll get more into that, but as you understand the mental game of trading or gaming the market, okay, remember that when you're playing a probability model, okay, you are playing a game. Remember, trading is just a game. Okay, that's really what it comes down to. It is that simple. Okay, you know, everybody wants to make this very complicated. It is not complicated. The complication is the person that you look in the mirror every morning. That's what makes trading complicated. The individual emotions, those who can't handle the either the speed sometimes of the market or some of the things that are going on, and you have to understand the mental side of this. Okay, and it is time to invest in yourself. And this is one of the issues that I've always found challenging, is that you have tools in front of you that you can use, but you continue to fight and want to listen to news items which are worthless. Remember, if you trade the news, you lose. And by the time you read the news or see it on TV, it's already, you're the 1 millionth person to get that news. What do you think your chances are of creating a successful trade off of that? Okay. Why are futures the best option? Because they're highly leveraged. Okay, you get the benefit of using leverage over a short period of time with a stop in place, with a stop that is designed from an algorithm. Okay, the futures markets are much more liquid than any other market. Okay, commissions and execution costs are much lower. There's no Reg T. There's no massive amounts of margins, as you'll see in the equity markets. Okay, the futures markets are much more efficient. Okay, they're open 24 hours. Again, we don't trade 24 hours, but some people do. I don't recommend it, but short selling is easier. You get day trading margins, and one of the biggest factors is there is no FINRA day trading rule. Now, I don't know if anybody here has ever got caught up in that FINRA day trading rule when you're trading options or something like that, but remember, The FINRA day trading rule is not put in place for your benefit. It is put in place for the broker's benefit. Okay. They don't give a rat's ass about you. Okay. They're not protecting you because think about it. They were protecting you. They would allow you to exit a trade that you were losing money on, but because you've already capitalized on your 3 day trades for the week, you can't do it. Okay. Think about it that way. Now, the benefits of auto trading, which is what we'll be doing. It'll be actually letter of direction trading, but automated trading systems minimize emotions throughout the process, right? Again, I go back to your biggest enemy is the person that you see in the mirror. You preserve your discipline because you're not making the end decision. Your trading is diversified. You avoid those mechanical failures. If you've ever had the internet go down at home, okay, and you don't have redundancy, of course, we have redundancy in all of our models, okay, which means that if one goes down, we have a backup, okay? You have somebody monitoring your trade, you can monitor yourself. You never miss a trade, and you don't have the biggest temptation, which is to cherry pick. Everybody wants to be the genius that picks the next big winning trade, okay? And it just doesn't work that way. 44 years, I'm still trying. Now, algorithmic trading is what? You have to have a clear plan. What was the algorithm based on? Okay. And what are we doing? Well, we based it on the phases of the market. We based it on what I trade manually every single day for an hour with my day trading members that trade very short term. Okay. And I'm doing that manually, but what we're using in our massive system is to use an algorithm that sees things as they are without any emotion, without any outside information. And it's not high frequency trading. You know, let's be clear. Let's teach you real quick what high frequency trading is, because every major network, whenever the markets go down, they always talk about the high frequency traders. The high frequency traders, apparently they never buy markets, they only sell. In the meantime, really what a high frequency trader is a computerized market maker. That's why there are no floors anymore, because you've got computers making markets very narrow, very short, looking to make fractions of a penny on billions of transactions. Okay. Ours is not that. We're looking to catch the trend. We're looking to repeat. If you remember the turtles, Richard Dennis was a good friend of mine. We traded together on the CBOE in the 80s. And we made a better model than the turtles model because we've automated. Okay. Now, again, short-term fluctuations, what can I do about it? I can't do anything about it. So should I be worried about it? Should I fret about it? Should I be sweating? Or should I say, I understand, it happens. Okay, I have to deal with it. Again, that goes back all the way into your investment, your capitalization, your percentages, and the whole thing. You can't worry about what happens in day-to-day or minute-to-minute. If you do, you'll have a nervous breakdown. Now, the day trader's dream, what we do is we trade the original pit hours only. Although markets are open, some 23 and a half hours a day, some a little bit less, we are basing our trades on what the original pit hours are. Why? Because the volume itself still sits within those hours. And if you look, for example, in the currency markets, they open at 8 o'clock Eastern time and they close at 3 o'clock Eastern time. If you look at your volume chart, you'll see that that's the highest concentration of volume. Equities, 9:30 to 4 o'clock. Okay. Crude oil, 8 o'clock to 2:30. Gold, 8 o'clock to 1:30. So again, those are the actual hours that we would be trading and issuing signals, because that's where the liquidity lies. That's where the volume lies. That's where the opportunity lies. Okay. We use micros and mini futures to make our trades. All the trades are done in block orders. Everyone gets the exact same fill. Okay. There is no, he got a better fill, she got a better fill, they're front running. No, everybody gets the exact same fill. They're done in one big block, and then they're dispersed to all the individual accounts after that is done. And all trades are executed by Capital Trading Group. This program has to be done via letter of direction, because I could not possibly get you the signals out fast enough from when I got them to when I would email them to you or somehow message them to you. Okay. So because they're on it and they're executing as they appear. Okay. Now we can go worldwide, including Canada. Okay. So that's a good thing because Canada's a very tough place for all you Canadians to understand it. And Capital Trading Group has been friends of mine for over 30 years. I know them when they used to work for Chicago Corp, and they actually went into the brokerage business, and I'll get more into them in a bit. This is the actual performance as of last Saturday. Okay, we've been flat and stagnant for about 6 months. Okay, but we are up 44% since this program started about 14 months ago. Okay, and again, we've been fairly stagnant. The markets, if you've noticed, have been a very much of a challenge. They've gone absolutely nowhere. And if you look at any chart, okay, you will see that markets have basically learned to stand still. Okay, they've gone absolutely virtually nowhere. I can't think of any real market that has had any real movement whatsoever. Okay, here you're seeing markets that are stuck in ranges that haven't gone, that there's been no real trend. Okay, that makes trading a much bigger challenge. Okay, so again, remember that we're basing that we need movement out of that channel and not stuck within that tight little range. And that's, if you're looking at the equity curve, it almost mirrors the market, which is the idea. Trend trading is meant to mirror the market. Okay. So what is letter direction auto trading? All execution process where trades are executed on your behalf automatically. You still control your account. You can add or withdraw funds at any time. You can stop trading and close your account at any time. A letter of direction is simply exactly what it states. It is a letter signed by both you and the broker that they are only allowed to execute those particular trades from that particular model. Okay. And if you do more models with them, then it takes, each one has to be signed off by themselves so everybody is protected. Okay. Now, you don't pay data fees. Okay. You get to remove all your emotions. You maintain control of your account. All clients see the same price. No pattern trading, day trading restrictions, and Rule 1256 tax. And if you understand what that is, futures are taxed at a better rate than equities. Okay. And those of you who are in the equity business who may trade the SPX, they're taxed like the SPX at 60-40. Okay. But make sure you talk to your tax professional about it. And you have to take my word for it. Check it out. Okay. But Capital Trading Group, who does the stuff, they began their firm in 2006. Okay. Nell Stone and Pat Lafferty are the two owners. They will answer the phone. You call, they will be probably answering the phone. Okay. They will handle your needs, which to me is the most important thing that I could ever find in this business. Is if I have a problem, I ain't calling to say how you doing. Okay. I'm calling because I got a problem and I need somebody to answer the phone. And I can give you horror stories of things that have happened to me in the past with other places when markets had some difficulties, but I won't go into that today. Okay. And this is the 60-40 preferential tax treatment. Okay. Again, make sure you check with your accountant or your tax attorney, whatever. Okay. To verify, I'm giving you facts, but I want you to be able to verify it. Okay. But that is what 1256 is. Okay. Now you open an account with Capital Trading Group. Okay. Capital Trading Group executes a trade for your account. You can log in and see them in your portal anytime you want. You get a statement every day. Okay. Any live trade variance across our clients are blocked, are all leveraged to all clients to ensure all receive the same net results for each trade. Client can see trades once trades are allocated and can follow along through the online portal. Okay. And I will also post them in our chat room. Okay. How do you keep track of your account? You can look at it anytime you want. Okay. It's all, you can log in just like your account now. You can log in, you get a 1099, just like everything is the same is what you do now. The only thing different is somebody's actually making the executions for you. Okay. And that is something that you want to understand, is that they're only by law legally allowed to execute exactly what is told or what is directed by the model. Okay. Now, for those of you who have traded, futures versus options or futures or options, listen, I started as an options trader. Options are a wonderful tool. And in fact, I still trade them every day. Okay. But there's different purposes. And as they say, different horses for different courses. Okay. I use options if I'm going to carry a position a little bit longer, if I want to take a shot somewhere, if I want to sell some credit. Okay. I use options. But because of the fluctuation and volatility, okay, I don't get for example, I don't get a market like this, okay, where I'm in a one tick wide market, okay, that never changes. It's always going to be 1 to 2 ticks wide. I mean, obviously there's a news item coming, it might be a little wider, but I don't have to worry about the implied volatility. So I don't have to overcome the bid offer spread and the implied volatility. That is why futures are far superior to options when it comes to that. Again, options, every investing vehicle, if you understand them, has a value. They have a place. But what you want to be able to do is you want to be able to put the right trade in the right place, because if you ever look, for example, I'm going to go back to this for a minute. The bid offer spread, this is the mini Dow, okay, is $5 wide, okay? Now think about it. If you trade an option that is 5 cents wide, that's $5, but most of them are not 5 cents. A lot of them are 30 and 40 cents. Think about the amount of edge that you're giving up on every trade, okay? Again, there's things you have to remember, because when you're trading in a market, it is your job to get as much profit as you can and pay as least expense as you can. And expenses are, again, giving up too much in the bid offer spread. Your brokerage fees are your brokerage fees. That is a cost. And of course, those that self-direct, some brokers are less than others. CTG is by far the least expensive for execution ability or letter of direction trading than any other broker in the country. Okay. And I'm talking about for somebody to do the actual executions for you. There's nobody that is at less cost. And their normal stuff, they fall mid-range. They're not the most expensive, they're not the cheapest. Okay. But again, we're not looking for cheap, we're looking for service. And they do a phenomenal job. So what we want to do is we want you to understand, how to let the algorithm do the job for you. And of course, like for example, today, we were short the Russell, okay, today, okay, we were short the RTY, and let me just put up the right chart so you can see it, okay, and we got short right here, okay, we got short right in here, okay, and of course, the market fell down, and we've already covered, taken our profit, and we're gone, and we use one time frame for a stop and one time frame for an entry. The shorter time frame is the exit point on the stop. We will take profits at small blocks on the way up using another model that determines X amount. So we'll take 25% profit at X, another 25 at X. And if we get to the 50% mark, then the trade stop goes to break even, and we let the trade run until that market closes, because we will exit. If I have an open trade, for example, the currencies are closing in 22 minutes. If I have an open trade that's closing, then if I have it on at 3 o'clock Eastern, it gets closed at 3 o'clock Eastern, okay? Or somewhere in that time frame, a minute before or a minute after. But right at that time when there is still volume and liquidity, because when you watch these markets, and here's what I wanted to show you anyways, you can see where the volume lies. This is the overnight trading. Here is the trading during the day, okay? Here is the overnight trading. Here is the trading during the day. So you can see the dramatic difference in volume, which is why the liquidity issue is so important for you to be involved in and understand, okay? Now today, also, I'm gonna, when I show you what I have to offer you, I'm gonna offer you a free membership into my day trading, which I do every morning from 9 to 10 Eastern, okay, for an hour every day, which we're using a 4-minute chart and a 1-minute chart, okay? And we're trading 8 different markets, okay? And I'm using the phases. This is all done manually because I couldn't possibly, automate this myself. So I actually teach it every single morning, and this will be an add-on that you'll be able to take a look at if you should choose to come and decide to be a member with us. Because again, my goal is to teach as many people as I can. I've been very fortunate. I've done very well. And in fact, I have a high school program that, of course, unfortunately since COVID, that I had donated to over 600 high schools that I was paying for myself. And now you with the new COVID, when they came back, you can't even get them to take it for free, which is financial literacy for high schools. I've written 2 books on options trading, which will also be given to you if you would like to have them if you do become a member. Okay. But again, everything we do is based off of the same principle. It's all based off the same algorithm. But of course, when I was trading on the floor, there was no algorithm. You had to be able to calculate fractions and get the common denominator between the fractions all within a matter of seconds to make a market so that you could get the fill. That is no longer the case when we have become what we call retail traders. Okay, again, there is no floor edge anymore. That has disappeared. So your job is to find the programs or your own style that lets you get the highest amount of benefit from the market structure. And the best way to look for it is the longer you're going to hold trades, the more that you want to be involved in the longer term trend. And we do have models also that are much longer term that carry trades overnight. Okay. And of course, it's something that you can use as if it's something that fits your schedule or your risk tolerance. And this is one of them right here. Okay. And of course, this is up a few percentage points, but again, this is up over 1,000% since it began in 2015. Okay. Just based on one contract in 29 different futures. Okay. And again, what you're trying to establish for yourself, okay, remember, you want to have a plan, and no matter what you're using, whatever products you use or whatever you do on your own, each thing that you do must have an individual plan, okay? Because again, the risk factors to each different thing that you are using are different, okay? My risk is much lower on a 4-minute trade than it is on an hourly, and less on an hourly than it is on a daily. Okay, so I have to allocate, and those are the lessons that you need to learn, okay, as you become a trader. But we say, let the algorithm work for you. Sit back and relax. Okay, it doesn't mean you can't trade, but there's a lot of times that there isn't much to trade. So why waste your time sitting there? Okay. Now, what others have to say, I've got thousands and thousands of testimonials, but I love this one that I just got the other day. I wanted to take the time to write you this note and thank you. No one has ever tried to help me build wealth. People have talked to me about principles of savings, but no one has shown me how to build it. I'm most likely your worst student. I'm far from being financially independent because of my past mistakes. It's taken me so long to realize that what you teach, it's a grind of love. I believe in you and appreciate what you are doing for me. Thank you, and God bless you for you and your family. Now, think about that for a minute. Does any of that apply to any of you? Okay, because that's exactly the problem that I find more often than not is people are their own worst enemy. Okay, and I've done it myself, so it's not like I'm telling you that I'm better. I've made every mistake in this industry. Okay, so if you'd like to join me and become a member, okay, take advantage now. Day trading futures, all executions by CTG, no overnight risk. All trades determined by a proprietary algorithm, no emotion. For the first 15 people, it's $99 a month or $1,000 annually, and that price is locked in forever. Okay, you go to bubbatrading.com/dream. If you do become a member today, okay, you can trade live with me for 30 days as my guest. Okay, so you get to come and day trade with me every day if you'd like. You want to hear me? You want to hear me yap every morning and bitch and moan when there's nothing going on? You're welcome to come. No, but you do get to come with me for 30 days. Okay, and there's more. Okay, today only. Okay, I'm going to give away 1 year free of our futures portfolios. Okay, which are position carries that can either be executed by yourself or they can be done by a letter of direction by Capital Trading Group. Capital Trading Group actually sponsored the giveaway of these portfolio models. And there's one thing more. Okay, if we do not make money in calendar year 2023, okay, you will not have to pay for 2024. You will get a free 2024. Any year that we don't make money, you pay no fees to us. You pay no subscription fee. Okay, so that's where we want to be because I believe in it. I've got 12 different accounts myself, okay, that I trade. I trade every model that we have. And again, I want you to be able to be successful and enjoy the fruits of a good model and a good system. So if you have any questions, feel free to fire away. You can always email me at bubba@bubbatrading.com, or you can go to bubbatrading.com/dream to become a member today, and you can start as soon as tomorrow. And if you have any questions, please fire away. Also, taxes are much better with futures. Okay. Again, futures, I love everything, right? I was a floor trader. My start in my career, I worked for Pitney Bowes in the 70s. I got pissed off. They wouldn't promote me. They said, you're too young. And in the 70s, they could do that stuff without getting sued. So I told them to stick the job up there, you know what? And I quit. I went down to the trading floor and became a professional trader in 1980. Okay. And I was a member of this. I was a member of the CBOE the longest. But what I learned when I went to become a retail trader or off the floor trader, a screen trader, so to speak, that I had to find better products that I didn't have to take as much risk on and deal with the implied volatility, because again, it's a much bigger challenge and you have to know all the different strategies, which I actually know. Okay. And I've been trading the daily options quite frequently. And while you're with me, there is also a Monday night call that I do, just a general webinar every Monday night that you get to be part of. And for those of you here today that do become members, you can have the 2 books I've written on options, plus a 6-session option course that I did for a brokerage house. Okay. So I'm giving away the shop today because I'm in a good mood and I'm getting ready to go play poker after I'm done, after the market's closed today. It's because when I live in Vegas part of the time, and that's where I'm at today. So I'll be playing poker this afternoon and the rest of the weekend. So
dinner at the Bellagio?
I'll be playing at the Red Rock, but I played at the Bellagio yesterday.
All right, cool. Let's see. Penny does have a question for you. She wanted to know what the minimum investment is to open an account.
The minimum is 10,000. We take 10 to 30 in those 2 accounts in the Day Trader's Dream. And then, of course, in the model portfolios, which if she signs, becomes a member and she gets that if she wants, that's a 10,000 minimum as well. And that's not, we don't use all the 10,000, but what we believe is having enough over margin so that if we do go into a drawdown, we don't need money right away. So it's 3 times the margin is what we kind of carry. And of course, in the Day Trader's Dream, we never know what the margin is going to be during the day, because if we have no trades, there's no margin. If we get 5 trades on it, it could be, more margin. So that's just, it's to balance out and make sure there's always enough funds to trade.
Kirti in GoToWebinar wants to know, what is the trade amount of each trade? Thank you for the question, Kirti.
Thank you, Gertie is right. The trade amount is 1 contract, okay, of either a micro or mini, okay, and obviously the margin is what you'd be really asking about, because, for example, a mini S&P is worth in real money right now live $206,000, okay, but you can trade that for $1,000 margin, which is, so you're really concerned about what the margin is on the trade, because obviously it's not going to 0 and it's not going to double, okay, and we're going to have a stop or a profit target, so we're not going to be in it that far. So the most amount of margin on anything that we trade would be the NASDAQ, okay, but on a day trading basis, they're all the same. The maximum on any day trading product is $1,000.
All right. Brian says the market moves really fast, usually at the open. Do you try to trade the open or wait till it settles down a bit?
We try to wait. It depends on what's going on. We won't make an equity trade usually until 10 o'clock Eastern time. Of course, the currencies and crude and gold and bonds already open before that, so we might have been trading those already. And when I'm doing my own day trading with my members, okay, I will set numbers. We typically don't trade the exact open, but I will set parameters because the volume spike is so big. Here, you can see every day, here was the pre-market, overnight market, and here was the opening print, okay? And so I'll set parameters on those numbers that will make entries if we reach those levels, you're up or down. We don't care which way because we're playing a different model there. We're playing what they call the blow-off model. So yeah, but we try to stay away from the open because the open is more amateur hour and it is all market orders. You know, if you ever decide to trade the open, my recommendation to you is if you're trying to enter something at a great price, then put your order in and let it work. And if you're trying to exit something, then I would use the opening. I would not recommend trying to outsmart the opening because it really moves really fast, and they can rip your heart out in 5 seconds.
Bill wants to know what products are you trading?
In the day trader's dream, we trade the euro currency, the Canadian dollar, the Aussie dollar, the S&P, the Russell, the NASDAQ, the 10-year notes, the Dow. Did I say the Dow future? I forget. We're trading 9 different products. Okay, in the day trader's dream, 3 currencies, 4 equities, crude, and bonds or notes.
Preston asked a question in YouTube. Would the returns be enough to do this full time?
Potentially, but here's what I'm going to tell you. I'm going to tell you what I tell everybody who comes to me and says, I want to be a full-time trader. Before you can ever consider being a full-time trader, you must have a minimum of 18 months to 2 years in a separate account that's going to pay your bills. Okay, that you cannot touch and you can't draw out of your account. Okay, again, it's a phenomenal business, but it takes time. You have to. There's a lot of pitfalls that you will fall into if you're trying to make a living. And if you ever have to take money out of your trading account to pay a bill, you're going to find out that it throws everything out of whack. You must have enough money elsewhere that will pay all of your bills as if you were working a job while you're building your trading ability and your trading account.
All right. You know what we came to the end of? Questions. No more questions.
Well, no more. Listen, I get you back on time all the time. That's my job.
All right. Well, so with that,
either I talk a lot or I have to cut it short, and I can't quite get the timing right. But again, I always leave room for plenty of questions just in case. But
I have that struggle too all the time. Like it's like you either think it's going to go really long and it doesn't, or you look down and you got 5 minutes left. I understand what you're saying, but I do.
Anyways, I want everybody just the event's been great. I've listened to a lot of the speakers. Just take a lot of the notes for all yourself, and remember the one key thing here: patience, discipline, always win the day. Or as they say in sports, defense wins championships, and that also makes great traders.
William wants to know what you use for stops, or how much are your stops is his answer.
My stops are based on the algorithm. I don't have an exact amount. The algorithm trails up. Okay, so if I enter, let's say I enter the S&P, which is trading right now at 40.14. Okay, the stop might be right now at 40.01. Okay, but if the rally continues, then my stop will follow it up. Okay. And depending on, there's a lot of factors, speed and volatility help determine what the stops are going to be too. But there's always a base stop that we start with that is designed by the algorithm.
All right. Let's see. One more. Okay. Views on the current market and any forecasts from Albuquerque.
On the current market, I think we're going much, much lower. My call of about 6 months ago is I think we're going down 50 to 70%. That is my prediction. Again, I am not necessarily trading that prediction, and I am always long equities and hedged no matter what. I'm 100% in the markets at all times. My retirement is hedged with my options models that I built. Again, I don't try to predict, but I do think that the economy is in a lot of trouble, and I do think there's a lot of issues out there. And I think that we're going significantly lower, which will be another great buying opportunity.
All right. Thank you, Bubba.
Jeffrey, thank you, brother. Thanks for having me back. I always appreciate it. It's always great to be with your people. And thank you, everybody, for listening. Thanks for taking the time. We'll see you next time.
Right. Talk to you soon.
Thanks, sir.
All right, let's take a look here, and let's kind of get back over here, and let's just kind of make some changes. All right, thank you, Albert Peck. Peggy, I'm sorry, I missed your question about the bond market. But you can definitely reach out to Bubba. William says, Bubba is awesome. I'm glad you enjoyed him. I'm glad you did a good job. And I appreciate him coming in. Another group I appreciate is Stocks and Commodities Magazine. Oh man, let's kind of see if it got a little bit lighter than it was this morning. Stocks and Commodities has been sponsoring our events for 11, 12 years. They've been a great partner of MetaStock. We certainly appreciate all the work that they've done. And that looks like a little closer. I'll go ahead and tweak that a little bit later more. At least I don't look like I'm glowing. Let's see. But we do appreciate all of the work Stocks and Commodities done. If you do like our extended trial where you try MetaStock, our award-winning software that's been rated #1, I don't know, something like 30 years in a row, they'll give you actually a 5-month subscription. If you buy any of the indicator packages that are more than $300, they're going to give you a 2-year subscription. We really appreciate the work that they've done with us, and they've done a really, really good job. So they support us since the beginning of them. I do want to kind of talk a little bit about other add-ons that we've been talking about. If you remember yesterday, Tushar Shandy came in and he talked about the Tushar Shandy toolkit. It's got 3 methods in there, a short-term, a medium-term, and a long-term method, as well as a breakout method. It's a really good add-on. He's a very, very talented technician. It's $100 off, $399 at the conference. So with that and all the other offers, you can get free access to our award-winning MetaStock. You get a money-back guarantee on this one, and you can get more information. You can give us a call, 800-882-3040 or metastock.com/saleschat. You can also do that at metastock.com/Shandia Shandy. There you go. Or you can just go to metastock.com/conf promo. All of the offers are available there. Ed is telling me that my audio went dead. Can you guys hear me? Just let me know if you guys can hear me so we know that they're... All right. All right. And in that case, I'll just give Ed a little bit of advice to refresh his browser. If you're watching on GoToWebinar and the audio ever cuts out, it does have a tendency to do that sometimes between presenters. Hit refresh and just reload your browser, and that generally works. Or if that doesn't work, join us on YouTube, youtube.com/metastock. So there you go. Okay. I did ask for a few numbers just a few minutes ago, and what I want you to do now is guess some numbers for the next round. So if you if you're watching now, thank you, Felton. I'm glad you can hear me. Thank you, Charles. Thank you, Brian. I appreciate your saying that you can hear me. I'm now too dark. What I want now is a number between 1 and 12,755. Go ahead and give me one, somebody, and we will choose the winner of the next prize. While you are typing a number, let me tell you what that prize is going to be. Let's pick it out right here. I've got a spreadsheet of really cool prizes that are being given away all day. And let's see. This one we're going to give away is called the Portfolio Accelerator Call by Anwari Zaheer. It's his complete methodology. He taught very first thing today, and he gave us a presentation. This is going to include a compound calculator, the tools that we've developed for MetaStock, and a recording of one of his classes. It's a value of about $200. And the number that we're going to go through is the one that was given by Brian. You can go to webinar 10,222. So let me go ahead and figure out who that was. Make sure I'm getting the number right. Okay. And the winner for that is actually Dinesh in India. Dinesh in India, I'm going to go ahead and kind of send your information over there. And we'll go ahead and get you that prize. Congratulations for winning. Great job. Okay. Congratulations on being lucky. No, I mean, good job. Congratulations on winning the prize. Our next guest today is Daniel Sinnig. Daniel has been a partner of MetaStock for a while. I love his indicators. We've given away a couple of copies of his Trend Radar, which is awesome. But today is going to actually come in and talk about a suite of indicators called the Power Bundle indicators. And if there's one thing that I'll say about Daniel, there's a lot of nice things I could pick to say. But I really like the way he pushes around MetaStock in his code. He really knows the engine in and out. He does a really, really good job with it. And it's amazing what he can do with it. So Daniel, I can see you. Can I hear you? Yes, I can hear you.
Yes.
Cool.
Hey, Jeffrey. Hey, guys. How's it going?
Good. Where are you joining us from today? You're always in some place different.
Montreal.
Okay.
Yes. And I know MetaStock is coming to Montreal soon, and Bobby will be here. I'm just missing him by one day, unfortunately, because we're going to be at the Expo, Traders Expo, but we try to hit him up in Toronto. Yeah.
Okay, I'm going to turn you into an organizer because I know you like to be able to see those questions, and there's a lot of them. I can't see a scan. Well, I can see a wonderful, that looks like a full market scan that I just saw.
Yeah.
So, all right.
Part of my prep work for today.
Cool.
All right, so I'm going to switch off my camera. I just want to say hello in person to everyone. Excited to be here. And
it's on your floor. Go for it.
Let's get started. All right, so today's topic is today's market. Where is the sweet spot? And I think that's a problem that many traders have, or a question that many traders have. How should I trade today's market? And the answer is, well, it depends. It depends on the symbol you're trading. It depends on your asset class, on your time frame. I mean, you may think, oh, it all depends. Can you give me something concrete? And the answer to this is yes. And today we're going to be very concrete. And I'm going to show you a set of tools which will find the sweet spot for you. They will tell you exactly how you need to trade a particular symbol on a particular time frame with MetaStock. All right, so let's get started. I'm going to switch off my camera so I'm not distracted by my own image, and then we will get right into it. Now, if I can figure out how to do this. All right, there we go. Jeffrey, can you guys still see my screen? Jeffrey?
Yes, sir. I can't find the
perfect. All right, so thanks. Let's get started. Today's market, where is the sweet spot? And before I talk about the market sweet spot, let me talk about something else first. So what you can see here is what seems to be like a poker game going on. We have two players left on the table who are playing against each other. 4 cards have been dealt. The 5th card is yet to be dealt. And we can also see, before this 5th card is being dealt, every player has the chance to, put a wager in, depending on how confident he is of winning this pot. And this confidence, of course, it depends on what kinds of cards he has and how he can predict the odds of winning the pot. But of course, a poker player cannot be fully certain because he does not know what the other player have. So the odds displayed here, these are only visible to the viewers on TV, which would estimate the odds of this player here for winning this pot is at 80% and for the other player at 20%. But let's pretend just for a second that you are a card cheat, you know how to stack the deck, and for some reason you know what the other player's cards are. And therefore, you can predict the odds of winning this pot. How would you play this hand? Oh, well, I would bet you would only wager if the odds are in your favor. You would fold or perhaps wager less if the odds are less favorable. It doesn't guarantee that you will win this hand because there's still odds, there's still a chance of losing, but in the long run, it will give you a significant advantage over the other player if you were able to calculate these odds. Now, we have tried in our research lab to bring the very same concept to the world of trading. What if we could predict with some intelligence what are the odds of winning the next trade before entering the trade? And now imagine if you for some reason knew these odds, how would you trade? Well, I bet you would only engage into a trade if the odds are in your favor. And if the odds are not in your favor, you would step away. You would not trade. And sometimes, actually very often, not to trade is the best trade advice that you can get. This is exactly what this talk will be all about, because we have developed a set of what we call self-aware and intelligent indicators, which are capable of predicting the odds of your next trade before entering it. And in combination with MetaStock and its super powerful scanner, this can really give you an advantage in trading. All right, so before we dive into this, let me perhaps talk a little bit about myself, because you may ask, who is this guy? What is he talking about? Well, let me introduce myself. As Jeffrey said, my name is Daniel, and I am the founder of tradingindicators.com, which is an online store for our innovative trading products. But I should tell you, I have not started out my career in trading. I was quite the opposite. I'm a trained software engineer, and my life's objective was always to become a professor in software engineering and computer science. And to achieve this objective, I went through all the levels. I did my PhD, a postdoc. I was teaching at the university for several years. I even have a profile on Rate My Professor, if you guys want to look me up, with some constructive reviews about my performance in teaching. But at the same time, trading has always been a hobby of mine. I was fascinated by the markets, and I was trading at the side. And when I started off, I probably made all the mistakes that everyone does when starting out. I overtraded. I took too much risk. My position size were way too big for my account size and risk appetite. I revenge traded and so forth. And after donating quite a bit of money to the markets, I came to the hard realization, man, trading is hard and I need help. And for me, needing help meant I need better tools which help me make better trading decisions. And this is really how the story behind tradingindicators.com started. Because most of our indicators in this online store, they have been first created to help me with my trading. And only then, once I found them useful, we add them to our store in the hope that perhaps others may find them useful as well. Now, right now, it's not just me anymore. We, in fact, have a whole team, a very versatile team. We have mathematicians on board. We have traders. We have quants. We have designers, user experience experts. And we all form, a versatile team to create innovative trading products. We offer indicators, dashboards, apps, automated strategies, and so forth. And today, I would like to introduce to you one of our most recent products, which, as mentioned before, has the capability of estimating the odds of your next trade. All right, but before we start, just a quick reminder that if you trade, keep in mind that trading can carry substantial risk and it is not suited for every investor. When you trade a margin account, you may lose all or even more than your initial investment. And when it comes to hypothetical performance, keep in mind that this is not necessarily indicative of future performance. Okay, so now that the lawyers are happy, let's continue. Okay, so here is my trade, the one I chose just before this presentation, just a couple of minutes before, which I am interested in engaging. This is a long trade of MGP ingredients, long around the market level with a profit target and a stop loss level. And I've picked this trade for a very particular reason. And what that reason is and how I picked this trade using our tools and MetaStock, I will show you in this presentation. But before I can do this, I need to, give you a little bit of a background story of how this was possible, so you can follow along. So let me go back to my original thesis. Is it possible that we can somehow estimate or put some statistics onto the chart about the likelihood of your next trade? Can this be done? This is the first question we should ask ourselves. what we've done to answer this question is, well, we have created a set of indicators which will perform an instant back test as soon as they are applied onto the chart. And this back test will tell you what are the historical odds for your long signals, what is the win rate for your long signals, historically speaking, and for your short signals. So it's based on historical data. Now you may say, well, it's really a back test. It's based on historical data. How useful is this? Of course, we just had the disclaimer. I just read it to you that historical performance is not necessarily indicative of future performance. I just said it. So am I conflicting myself? Am I contradicting myself? Well, to answer this question or to address this question, we have run a very comprehensive case study, which I will quickly talk about right now. So, and the conclusion will be, yes, there is some truth to these odds. But why that is, let me explain to you. Now, we have run this comprehensive back test. It was what we call a portfolio test, where we tested or back tested 84 large US stocks, Tesla, Apple, Microsoft, and we started this back test at the beginning of this year, and we ran it up until the end of, the beginning of last year, and it ended in around October last year, so around 8 months of duration. So every stock in there was traded in a swing trading style, and every trade on average lasted about a week. In total, we had 6,827 entry signals, both to the long and the short side. All right, so, and we ran this test in several configurations. So the first configuration was we take every single entry signal, all of them. So 6,827 signals resulted in 6,827 trades. And this is what we had as the performance. And you can see this was quite underwhelming, not impressive. We lost money in the end. So nothing spectacular. But then we did something else. We added a filtering mechanism to this back test. And we only took the trades when, at the time of the trade, the odds were statistically in our favor of winning this trade. And this is the result of this. A big difference. And we were not cheating because we were taking the odds at the time of the trade, not at the end of the back test, because that would be cheating, because that would require, or that would basically requiring us foreseeing the future, which we can't. But we were considering the odds at the time of the trade. So for example, if we took a trade, let's say on the 12th of April, 2022, we were considering the odds at exactly this time of the year. What were the odds of winning this long position, or perhaps if it was a short signal, of winning the short position? This was based on historical performance prior to April 20 or April 12, whatever I said. Therefore ensuring accuracy and not biasing this back test. And as you can see, the difference is quite astonishing. So this was the unfiltered performance, and this is the filtered performance. This gave us a lot of confidence that there is some truth of considering historical backtest performances. It doesn't hold true for every single symbol, but for the most part, it can increase your trade performance. And this was the basis of building a set of indicators, which have exactly this built in. They have built-in intelligence of estimating the odds for your next trade before entering it. Now, what are these indicators? Well, we have built 3 indicators, one for each market cycle. We have an indicator for the trending market, looking for trend entries. We have one indicator for identifying pullbacks or reversals, and one indicator which is particularly good in trading the sideways market and finding breakouts. So what are these indicators? And by the way, the hope was that by having these 3 complementary indicators, you're fully covered. With one for trend trading, one for reversals, and one for breakouts. So that basically covers most of the trading styles out there. Now, what are these indicators? The first one is called 1, 2, 3 strike. this is our trend trading indicator, an indicator designed to identify strong trends. And it does so by looking at 3 different dimensions. We look at directionality, so price must have been going up or down for quite some time. But in addition to this, we also look for a spike in volatility and a spike in volume. And if all 3 things come together, an entry signal is generated. The second indicator is divergence cloud. Now, most of you probably have heard about the concept of divergence. It's a telltale sign that a pullback or reversal may be imminent. Now, everything we do in our lab, we try to give it a bit of a twist. So our divergence is not based on the classic forms of divergence that you may find out there. For example, stochastic divergence or MACD divergence. These are all good forms of divergence, but we have actually found there's something that's even more accurate. And we call this volatility momentum divergence, where we contrast price move with underlying volatility. And if they contradict each other, we either have bullish or bearish divergence. And an entry signal either to the upside or the downside is generated, indicating that a trend reversal may be imminent. Okay, so this is our second indicator for finding reversals. And then lastly, we have an indicator called volatility crusher, an indicator designed to detect strong breakouts. And we define a strong breakout as a breakout which will last for quite some time after the breakout. And you can imagine how you as a trader can take advantage of this. Well, if a breakout occurs, you would simply enter in the direction of the breakout in the hope that the breakout will continue for quite some time or for some time longer, and therefore you can take advantage of this. All right. Now, before I continue with my discussion of how our indicators can predict the outcome of the next trade, let's look at some charts together. So I'm going to switch over to MetaStock. All right. So this is MetaStock, and let me just quickly hide the commentary window. There we go. Okay. So here we have a chart of Broadcom, and it's a daily chart. You can see this here. And I have already went ahead and applied our 1, 2, 3 strike indicator to this chart. And if you remember, 1, 2, 3 strike was our trend trading indicator. Okay, so how does it work? First of all, the first thing you may notice is that the candles are either colored reddish or greenish. This basically indicates whether the current market is in a downtrend, if they are reddish, or in an uptrend, if they are greenish. Quite simple. But in addition to this, we also give you concrete entry signals. You can see these by these bigger arrows on the chart. Big green arrows are long entries, and big red arrows are short entries. Okay, and as you may imagine, a long entry may only occur if we are in an uptrend, of course, and the short entry may only occur in a downtrend, so if the bars are reddish. In addition to this, we also have exit suggestions. You can see these little red arrows in the opposite direction of the entry. So here with the long entry, here the indicator suggested to book partial profits. Here again, and then we are finally flat at this point. We call these LPEs or LFEs. LPE stands for long partial exit, and LFE for long final exit. How many exit suggestions you want? This can be configured in the settings of the indicator. All right, so for every long entry, we have a set of partial exits, and the same for every short entry. And you know why that is important? Because everybody can enter into a trade, but once you're in a trade, you have to exit it. You have to get out of it. You have to manage it. And this is just as important as entering into a trade. This is why all our indicators, they not only have these entry signals, but they also have these exit suggestions along the way. And we can also see that currently we are in a long position as far as this indicator is concerned. We had a long entry here. We already booked partial profit at this point, and now we're still long, waiting for additional exit suggestions to come along. All right, so far so good, and so far this probably looks like any other indicator for MetaStock. But let me now show you where the intelligence comes in. For this, I'm going to go to my expert advisor settings and go to commentary. All right, so this will open up a sub panel below. And we can see here, for example, that well, for the long side, the indicator estimates a win rate of 70.45%, and for the short side, 43.24%. So what are these numbers telling me? A couple of things. The first thing you can notice that they're quite different. The long efficiency is much higher than the short efficiency. This tells you as a trader that the long signals have been working out better than the short signals. This can give you an initial bias of which signals you should consider for your next trade. In other words, if these stats, like the short signal stats, are not in your favor, perhaps I shouldn't follow the short entries. They may work out, but statistically speaking, for all the bars on the chart, they were only at 43%, whereas the long signals have been at 70%. And this will give me, as a trader, a lot of additional information which I normally would not have. If I just look at these signals here, I can only guess how well they would have been working out. But now I have hard facts. I have hard numbers based upon I can, make my decision. All right. So to me, this is very valuable information, whether the next signal is likely to succeed or not. Now, what else can these numbers be used for? As like every indicator out there, like an MA or a MACD or stochastics, indicators can be configured with parameters. For an MA, for example, you would have the period parameter, like an MA20 or MA200 or whatever. This can be changed. And depending on what these numbers are, the indicator may function better or worse. But it's really up to guesswork oftentimes to figure out what is the best setting for an indicator. Well, now we have statistics. The statistics will tell you exactly whether a parameter change was in my favor or not. Let's see how this works. So I'm going to just tweak the settings for this particular indicator by going to my settings. I'm going to scroll down to our Power Bundle indicators, which are grouped under Power Bundle 1 to 3 strike. That's the name of the indicator. I'm going to double click. I'm going to change the settings just randomly. And if you're wondering what are these parameters, we have recorded an extensive masterclass on all 3 indicators, which will explain to you every single setting in detail. I will not do this in this presentation because it's out of scope, but it is well documented. But instead, I want to show you something. I want to show you how powerful these statistics can be. So let me change, for example, the volume period from 7, perhaps to, 21, let's say. Okay, that's the only thing I'm going to do. So I'm going to say, okay, all right. And I'm going to refresh the indicator on the chart. I'm going to click the refresh button. And before I do, let's just observe or remember these numbers, 70% and 43%. So I'm going to click refresh. The whole thing will now recalculate. And you can see that the numbers have changed. Now we're at 68% for the long side and 36% to the short side. So what does this tell me now? It tells me that this parameter change was actually not in my favor. It made things worse. My long odds have decreased and my short odds have decreased too. Again, before having these stats, a parameter change was really for guesswork. Wow, was it better or not? It's based on your intuition. But now you have hard facts, hard numbers to back up, your choice of parameters. All right. So this was one example. Let me quickly go and deactivate the commentary window. I'm going to switch over real quick to an intraday chart. So let's go to, let's say, McDonald's, MCD. And this is an intraday chart just to show to you that our indicators, they work on any time frame. Daily chart, which we just had, but also in intraday time frames. This is a 10-minute chart of McDonald's. But the principle is the same. We have our, we have our long entries, we have our short entries, and we have partial exit suggestions along the way. And of course, every indicator also comes with the built-in statistics. here at 72 and 75% to the long and short side, respectively. But you may wonder, okay, now I have the stats, that's great, and I can change the parameters and see how the stats change. But it seems kind of tedious to figure out what are the best settings. Would you agree with me? I mean, it is tedious work, and I could have played around with the statistics or with the parameters much more. But, you know, instead, I was wondering, or we were wondering back in the day, a couple of months ago, isn't there a better way of figuring out what the best settings are for an indicator? And the answer is yes, there is, with the right tools. So what we've come up with is a mechanism which will allow you to find the best parameters for you. Because doing it manually, finding the best parameters, I'm telling you, is extremely tedious. You know, I would have to play around with all these different settings, see which is the sweet spot, which settings are working best for the symbol at hand and the time frame at hand. And guess what? As soon as I change symbols, the whole homework starts from the beginning again. I again have to go back to my settings, finding the sweet spot for this particular symbol. And again and again and again. And this is super tedious. And if something is very tedious and time consuming, chances are that it will not be done. So we tried to, you know, overcome this issue, this problem, by introducing something called auto optimization. This refers to a feature built into our indicators, which will automatically find the best settings for you, so you don't have to. Let me show you how this works. So I'm going to go back to MetaStock. And here we had, what do we have here? We have McDonald's on the 10-minute time frame with the default settings of the indicator. We haven't tried to change them yet. We don't need to, because I'm going to show you now how the auto optimization works. So for this, I'm going to right-click on the chart. I'm going to go to Expert Advisor. I'm going to load the auto-optimized version of this indicator. So attach, going to Power Bundle 360. I'm going to use the AO version of the indicator. And AO stands for auto optimization. All right, so I'm going to click on it. And now the whole thing will reload. And as soon as it's done, we can see quite a few things. So first of all, let me just make this a little bit more condensed. You can see that we still have our short entries, our exit, our long entries, and so forth. That's great. We also have down here our statistics, as you can see now, which have improved significantly over the statistics of the default settings. I think the default settings had efficiency ratings of 70% or perhaps a bit higher. Now we have 85% to the long side and 83% to the short side across all bars on the chart. If we only consider the optimization period, the number of bars over which the optimization was performed, we were even at 100% for the long side and 90% to the short side. But of course, we should always consider what was the overall performance for all the bars on the chart. And ideally, this should be quite similar. So in this case, they are, they're not as good, but they are still very high and quite similar. Great. All right. So the indicator basically found the best settings for us, so we don't have to. All right. And if you wonder what these settings are, they're actually displayed here. So for this indicator, on this particular symbol and time frame, McDonald's on the 10 minutes, these settings worked out the best. Volume period of 30, volatility period 20, and so forth. So how did the indicator do this? Well, it has this built-in optimization feature, which will try out all kinds of combinations of parameters to identify the one that will give you the best settings, the highest win rate. So in this case, we optimized over 1,000 bars and we tested 144 different configurations. We have different optimization modes built in. In this case, the simplified mode was used. We have two different modes. We have a standard mode and we have an exhaustive mode. The standard mode will test around 800 configurations and the exhaustive mode around 2,000. You may wonder, why don't I always use exhaustive? Well, because it takes longer to load the chart, and also it takes longer to load scans. And for me, initially, when I start my work, I like to keep it on simplified because this will load the indicator much faster onto the chart. But if you have a bit of time, maybe 20 seconds or so, you can always use the other modes as well. It doesn't take too long. All right. And we can do the same exercise for our previous chart. Which one did we have? We had Broadcom. So originally it was at 68 and 36%. And now if I load up my auto-optimized version of the indicator, so 1, 2, 3 strike AO, let's see how it improves. As you can see here, everything is recalculated, and now we are at 76 and 68%. So it improved a bit. All right, so definitely the shorts that improved quite a bit, in fact. This brings up another good point. So the optimization target is to find the highest average of the long and short efficiency. So in this case, the average probably is around 71, 72%. That's the optimization target. But you may say, I mean, I'm an investor. I don't care about going short a stock. I'm never going to go short. Well, no problem, because you could configure the indicator in a way that only long signals are shown, and the optimization is done only for long signals. Therefore, the optimization target would be the highest possible long efficiency. We don't care about the short efficiency at all. So this can all be set in the indicator settings. And as mentioned before, we have recorded a comprehensive tutorial where all this is explained in detail. All right, so this was our trend trading indicator, but we have two more. I'm going to be a bit faster now. So the second indicator is called divergence cloud. I'm going to apply this one to different chart, which is Caesars Entertainment. And I'm going to explain to you quickly how this indicator works. Now, if you remember, this was our counter trend indicator for finding reversals. And the first thing you can see is that now our chart seems to be colored sometimes reddish, sometimes greenish, and sometimes it's just plain black. What does this mean? Let me just quickly take the commentary off so we have a bit of a better view. Now, these colors, they indicate something. So for our trend indicator for 1, 2, 3 strike, the one I've shown previously, these indicated either that we are in an uptrend or in a downtrend. It's very different in this case. For this indicator, for divergence cloud, these colors indicate whether we currently have bearish divergence or bullish divergence. As I said previously, divergence can be a telltale sign for a trend reversal. Now, so we have this candle coloring, either red, bearish, or green, bullish divergence, or no color, black, meaning there's no divergence, nothing special is happening. If you don't want to have the candle coloring, you can also have this. You can also look at the ribbon down here, which reflects exactly the same coloring across the board. In addition to these candle colors, we also have our long entries and short entries, along with partial exit suggestions. So here we had a short entry with 1, 2, 3 partial exits. Here we had a long entry with 1 partial exit, and then we had a signal in the opposite direction. Now, exactly like 1, 2, 3 strike, also this indicator comes with statistics. So I'm going to open up the commentary again. I'm going to scroll down, and we can see here that our long efficiency rating was at 81% and at 77% for the short efficiency. I should mention from now on, I will only use the optimized version or the self-optimizing version of the indicators. I will no longer try to adjust the parameters myself or use the default settings. I will only use the fully optimized version. All right, so this is Divergence Cloud. Let's look at another example. For example, Disney. Let me change charts real quick. So where do we have it? All right, Disney is here. I'm going to open it up. As you will see, it's exactly the same principle. The bars are colored, whether we have or when we have bearish or bullish divergence, and we have entry and exit signals along the way, along with our statistics directly on the chart. All right, so this is divergence cloud, our pullback or reversal finder. We have one more indicator, which is volatility crusher. I'm going to switch over to a chart which shows the indicator. I'm going to pick Tesla. Where do we have it? There we go. Okay, so Tesla on the daily time frame. And as soon as this is loaded, I'm going to explain to you how this indicator works. And personally, this is my favorite indicator. I'm going to explain to you why. Okay, so what do we have here? We have, just like the other indicators, we have long entries and we have short entries. And along the way, we have two exits. And this indicator always have two exits, no matter what, to the upside. So for each long entry, we have two profit targets. Or for each short entry, we have also two profit targets to the downside. Sometimes if the trade does not work out, as we can see here, we get a stop exit when our stop loss is hidden. And for every entry, we know exactly where these targets are. So exactly when the entry happens, we know where's target 1, where's target 2, but also where is my stop loss level. And this is our breakout indicator. And it excels really in, if we have a somewhat of a sideways consolidation, we finally break out. And the chances are, if that happens, then price will continue in the direction of the breakout for quite some time. At least the odds are towards that objective. And if you look at the statistics, commentary again, we can see that typically the odds for this indicator are very high. So here at 84% for the long side or 77% to the short side. And if I scroll, let me just quickly disable the commentary. So whenever I click on the chart, the commentary will update based on whatever the moment on the chart is. Let me just quickly take it off so it's a bit faster. If I scroll to the chart, you can see that most of the time, actually, the indicator is spot on and hits both targets. Of course, not always, but the way it's designed is that this gets quickly stopped out when the trade is not working out. So here we had a winner, 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 winner. As you can see here, it's quite spot on. Short winner. Sometimes we hit only one target and then get stopped out because it's actually a trading stop. And you can see those levels directly in the expert commentary. Okay, so this was volatility crusher. Let me just show you one more example. And I'm going to go back to my slides. This is, where do we have it? Archer Daniels, ADM on the daily chart. Again, volatility crusher is applied. And as you can see here, it is quite spot on with its predictions about hitting the targets. All right, so I hope this gave you an overview of our indicators. Now, let me quickly go back to the slides. So auto optimization. I hope you could realize how powerful this feature is, because figuring out the right parameters for any indicator, not just ours, but for any indicator out there, is super tedious. If something takes too long time, as I mentioned previously, chances are you will not do it. So our auto optimization feature will find the best settings for you. Now, we've already seen, oops, what happened here? We've already seen how this worked on the chart. So let me quickly summarize. Our Power Bundle 360 indicator, they not only give you clear entry signals, but also exit suggestions. Because entering into a trade is one thing, but once you're in it, you need to manage it. This is where the exit suggestions come in. They run anywhere. So we've seen some daily charts, you've seen some intraday charts. I've picked only stocks for this example, but I can tell you they also work on any asset class: FX, cryptos, futures, stocks, ETFs, and so forth. There's no limit on which asset class our indicators run on. Every indicator has the real-time statistics, which will tell you directly in the expert commentary what are the odds or the historical odds of winning the long trade or winning a short trade. And they have the built-in optimization feature, which will find the best parameters for you. But there's one more question we need to answer, Because I showed you a couple of charts, a couple of symbols, but the real question is really which symbols currently have signals. Because signals don't occur all the time; they occur sometimes. So how can I find out which symbols currently have signals? And perhaps more importantly, which signals of the ones found are the most probable ones of resulting in a successful trade? Now, teaming up with MetaStock was such a good idea because MetaStock probably has the most powerful scanner out there of any trading platform. You can quickly scan through thousands of symbols, lightning fast. I just ran a couple of scans right before this presentation to find some trade ideas. Let me show you how this can be done. So let's go back to MetaStock real quick. And all right, here we have MetaStock here. Let me quickly open up the power panel. So if I can find it. Oh, there we go. So power panel. Let's always open up on a different screen. There we go. Okay, so MetaStock scanning for signals can be done in the Exploration tab, which is this one here. All right, so all you need to do basically is to click on Explore. And with our indicators, you will get all these predefined scans. So you don't have to worry about defining them, they're already there. So for example, you could have picked the divergence cloud signal scan, which is this one here. You select it, then down here, you will select the symbols you want to scan through. And there are literally thousands of predefined symbols for you. For example, I could have selected, okay, all of the S&P 500, or all of the mid-cap, or all of the NASDAQ 100, and so forth. You simply click together what you want to scan through. You select the time frame you want to scan, in this case, the daily time frame. And then once you've made your selection, you click Start. And then MetaStock will perform the scan. Now, this will take a couple of minutes to do because we have a couple of thousand symbols here. So I won't do it live now, but instead I'm going to show you what the scan result will look like. So this was the result of exactly this scan of Divergence Cloud. We scanned through 1,300 symbols. And we can see here that of these symbols, 33 of them had entry signals right on the chart right now. Okay, we narrowed it down from 1,308 down to 33. All right, so let's look at some of the findings. So to the long side, for example, we could see here that this stock, this stock, this stock, and this stock, everything with a 1, that says long signal, currently has a long entry. All right. We can also see right in the scan results, what are the success statistics, historically speaking, for a long signal. So we can see for United Health, for example, the long efficiency was at 72% for the optimization period, and at 75% for all candles on the chart. All right. Oh, sorry, at 87% for the optimized period and 84% for all candles on the chart. So you can see directly in your scan results, without opening up the chart, what are these statistics. And this will save you a ton of time. Because now, before doing this, you would need to open up the chart first, select the symbol, open up the chart, look at the statistics, go back to the scanner and so forth. You no longer need to do this. You can see it directly in your scan results. And more importantly, you can also sort the symbols or rank your signals by those statistics, allowing you to focus on the ones which have the best statistics. I imagine you probably can see how powerful this can be. All right, so this is scanning, but there's one more thing I should point out. And let me quickly go back to my slides. Now, when a typically scan is run, this is, you scan for a certain indicator reading across a set of symbols. All right, that's a plain old scan. Now, what we've done, what you've seen right now is that we've run a scan and we could see directly in the scan results, what are the statistics? You can focus on the ones which are the most profitable ones. Okay, that's good. But we actually, I'm sorry, something happened. we actually brought it one step further, because the scan I just showed you actually does something else. It does a scan through a couple of thousands of symbols, but for each symbol, it will use the optimized parameters. This is something I believe there's nobody else attempted before. Because typically when you run a scan, you use the same parameters for every single symbol in the universe. But the scan I just showed you use the optimal parameters, different parameters for every symbol, for each symbol we scan through. And we call this generation 3 spearhead scanning, because it's not one size fits all. We use optimized parameters on a per symbol basis. So this is possible with the powerful scanning tool of MetaStock, along with our intelligence built into our indicators. All right, now talking about MetaStock, I should mention that our indicators are really optimized to work best with MetaStock. We support other platforms too, but they are optimized for MetaStock as well. We show clear entry and exit signals. Each indicator has the expert commentary, which I've shown you, with the real-time statistics. Each indicator also has the auto optimization module built in. We have predefined explorations / scans, and we can also run predefined back tests through MetaStock system tests and optimizations. All right. Now, if you're wondering, who should be using these indicators? Are these something for me that I might be interested in? Well, the answer is, if you are a day trader or a scalper or a swing trader or investor, then yes, you should consider these indicators, because they work on all time frames and chart types. Now, oops, this is the wrong order. If you trade equities or FX or futures or crypto or options, then you should also consider these indicators, because they will also work with all asset classes. No restrictions there. If you are an investor who wants to make, or a trader who wants to make his life easier, yes, you should use these indicators, because they will do the heavy lifting for you. Keyword auto optimization. Man, if you don't have to adjust the parameters by yourself, the indicator will do it for you. You will save a ton of time. And lastly, if you believe in tools, and if you believe in intelligent tools helping you making better trading decisions, you should also consider these tools. I'm a software engineer by heart, and engineering by itself is always about making life easier, using powerful tools to create better results. If you believe in that, then you should consider our indicators. Now, here's a testimonial we received recently from a client. He said, the volatility crusher indicator that I purchased from you is one of the best indicators I ever bought. I will be purchasing the 1-2-3 strike, divergence cloud, and IntelliTrail very soon. IntelliTrail is an indicator I didn't discuss today. Or one more thing, if you're interested in passing a prop trading challenge or engaging in prop trading, you may also consider our indicators. They are heavily used for this purpose. And just today, just a couple of hours ago, David wrote to me. He said, today was my first day trading with volatility crusher and 1-2-3 strike in the futures market. I took 4 signals, which provide 3 winners and 1 loser. I'm up $600. Excellent product. And I can tell you that many of our clients use these indicators for exactly this purpose, for passing the prop trading challenge. All right. One more thing before I close out. I promised you a trade of the day in the beginning of the presentation. So this is what I proposed. Go long at MGP ingredients around 103 at the time when I found this trade with a target of 115 and a stop loss of 89. Now, how did I find this trade? Well, I used MetaStock. And in fact, I used the MetaStock scanner. Let me quickly open up the chart of this stock. Close this down. Oops. So I'm going to go here and open up MGPI. Okay, and this is exactly the chart I found. And what do we see here? And I scanned for this. I didn't just browse randomly through all these symbols in MetaStock. There are tens of thousands of symbols. I scanned for it. So I run a scan, and the scan revealed that Divergence Cloud currently has a long signal for this symbol. And we can see this here. We have a long entry signal here on the last bar. Great. The scan also revealed that the statistics are really favorable. So if I go to commentary, we can see, if you go down here, that the statistics for going long are at 75% and for going short at 72%. But since this is a long trade, I would only consider the long efficiency. I don't really care about short because I'll consider going long. All right, so this was pretty good. But the scan also revealed, and in MetaStock this is quite easily possible, that at the same time, we just close down the commentary window. At the same time, also Volatility Crusher has an entry signal on the exact same bar. We call this confluence. Two indicators, two complementary indicators predicting the same thing. So if I apply Volatility Crusher, just a second, you will hopefully see that we also have, as you can see it here, a long entry signal on the same bar. This is confluence. In the MetaStock, you can nest your scans, saying that you can use these scan results of one scan as input to a second scan, making it very easy for you to find instances where this has happened. I should be honest, this is quite rare. Confluence doesn't happen all the time, but if it happens, it can be quite powerful. So from this point of view, I really like this trade. And if I scroll out a little bit, oops, just a second, an alert just popped up. If I just zoom out a bit, we can also see a couple of other things which are encouraging here. So we are on an uptrend, even though we had a big retracement here, but technically we are still on an uptrend. So we're entering in the direction of the overarching trend. Yeah. To the downside, we have a fairly clear defined support level, which is, we had all these bounces here, but also this bar approached at least the support level. So it's around here, so it's clear defined. And to the upside, our resistance, I would guess it around this level here. So there's plenty of room to the upside. So we're entering in the trade direction, in the overall trend direction. We have room to the upside before hitting resistance. Support is clearly defined, and we're at confluence. Divergence Cloud and Volatility Crusher have an entry signal on the same bar. And all these reasons put together convince me that this could be my next trade. And I use MetaStock and the MetaStock scanner to identify this trade. All right. So, Jeffrey, this rounds up more or less my my presentation. Just a quick reminder, if you're interested in getting hold of our indicators, I know that MetaStock currently has a special for all participants of this conference, which will give you access to the Power Bundle indicators for $9.95. And this is lifetime access. And you will get all the three indicators, 1 to 3 strike, Divergence Cloud, and Volatility Crusher. You get all our training goodies. I already told you we recorded this massive masterclass where I explain every single detail about these indicators. I could only scratch the surface today. Each indicator has the statistics and the auto optimization. And as mentioned before, this is for life. There are no subsequent payments required. And Jeffrey, do you want to expand on this a little bit, or how users can get access to it?
Oh yeah, for sure. And we have a ton of questions that came in. So let me go ahead and just I think what I'm going to do right now, Daniel, is go ahead and just show the. Hold on just a second. Let's see. Great job with your demo today too. I love how customizable everything is and all that kind of stuff. So if somebody wants to get this, they can give us a call at 800-882-3040. They can go to metastock.com/promo. And if you have more questions, we probably won't be able to get to all the questions just because there's been a ton that have come in here. But you can ask questions at metastock.com/sales-chat. So I do have a slide that's ready to show though. So, and we did do also with this, we did a boot camp, right?
Yep.
That's available on demand.
That's right. It's a 2.5-hour boot camp where we train you how to use these indicators of MetaStock.
Okay, very cool. So here's the information for that. People should be able to see my screen now. Metastock.com/sales chat, Metastock.com/conf promo, or 800-882-3040. Let's jump into some questions. Lee says, this is very interesting because of the statistics. John says, amazing. And I think, yeah, I said it at the front. I think the way that you just really understand MetaStock and how good the scanning is and how that kind of stuff works. Brian wants to know, and this is a question we get all the time, but when an entry signal fires off, like a long entry signal, when does it come in on a bar?
Yeah, it comes in intra-bar. So that's why I was a bit hesitant, because I ran the scan when the market was still open. It comes in intra-bar, but as long as the bar is not closed yet, it may go away. But you will see it intra-bar right away. But if things change until market close, it may still go away. Once the candle is closed, it's going to be there forever, so it doesn't repaint. But intra-bar, it may flicker and come and go.
Yeah, just like any buy signal, you might get an entry signal, and then if the conditions don't match up because the prices change, it might go away. But once that bar is complete, it should be there forever. All right, Brian says also, another question from Brian, can you compare 2 or 3 different time frames to better your odds?
Yeah, so I love Confluence. So we actually have a whole lecture series on that topic. Yeah, so if you have multiple things forecasting the same move, this could be across different time frames, could be what we have seen here, different indicators having the same signal on the same bar. Yes, it will improve your odds. I firmly believe in that.
John wants to know, once you've optimized the values, can you plug the optimizations into the scanner?
Yes, that's exactly what I've shown you. It will, actually there's no need for that, because as I said before, the scan will use automatically the optimized settings for each symbol. And they will be different from symbol to symbol. So for IBM, it might be optimized setting XYZ. And for, let's say, Tesla, it might be ABC, whatever, something else.
Brian wants to know if a volatility crusher is similar to a squeeze.
To what?
To like a squeeze pattern, where something is adjusted.
No, it's again, it's based on our own logic that we internally developed. And we're looking for what we call explosive breakouts, where volatility is abnormally high, along with a strong price move. And if this comes together, chances are that we have a strong breakout. And again, a strong breakout is a breakout that will last for quite some time.
John asked a question a little bit earlier. He wants to know, is there a way to quickly see which of the power bundles are likely to be more successful at any time, at a given time?
Which of the 3 indicators? I just use the scan. So for me, I don't discriminate. Sometimes it's volatility crusher, which will give me the best signal. Sometimes it's 1 to 3 strike. But I purely base my decisions on the numbers I see, on the statistics. That's my only criteria. Sometimes it's one indicator, sometimes it's another one, but it's just based on the numbers.
And if you see 2 match up at the same time.
Yeah, that's confident. That is, I mean, that was just a big coincidence today. It doesn't happen very often, but I was happy to pick that up. And one thing I should mention, Jeffrey, in MetaStock, it's so easy to run scans. So what I do in the morning, I pick my symbols I want to scan through. I have my own symbol list, which I compiled over a while back. And then I run the scan for all 3 indicators at the same time. For 1 to 3 strike, for divergence cloud, and for volatility crusher. So you don't have to run them one by one. You just can program it into MetaStock, let it run, go have breakfast, and once you're done, you see all the scan results. It's pretty cool.
It's funny, Kelly and I were talking, and every time, we both agree, every time you say MetaStock has the best scanning, we like you more. Mr. Patel wants to know if he can adjust volume in his screens.
Say that again. Can I adjust what?
Can he adjust for volume in the scans?
Yeah, of course. You can add any additional condition to the scan that you want. That's no problem.
In fact, I have a blog post. I'll go find this for you, Mr. Patel. But I have a blog post where I actually talk about how you can set up a price and volume scan in MetaStock. And then you'd run that first and set up like a universe that you scan every day. Because you don't need to run that scan every day. Those things don't change too often. And maybe quarterly you run a scan that says, okay, I'm looking for stocks between 5 and whatever the number is, and have $500,000. That's a super easy. I'll find that blog and I'll put it in the chat in a minute here. So that's the end of the questions, though. Good job, Daniel. Go ahead. And I love how well you kind of show how easy it is to scan and run everything. I really think you've done an awesome job. I'm glad you partnered with us, because you've definitely put some really, really good technology into MetaStock. So
cool. I'm glad you guys liked it. Thanks, guys, and enjoy the rest of the conference.
For sure. Okay, and let me thank you again, Daniel. Really, really appreciate that. Thanks for coming.
You're welcome.
All right, very cool. So for that, let's go ahead and turn on this. All right, for all of that, just the offer is, oh man, sometimes once in a while you get like, I'll turn on the camera and that's all I can see. You can give this a go. It does have a 30-day money back guarantee on it. It's going to include all of the methods, the automatically adjusting efficiency, the automatic optimization, all that kind of stuff. Everything he talked about is going to be included. You can take advantage of that. Get in touch with us at metastock.com/sales-chat, metastock.com/conf promo, or give us a call at 800-882-3040. And there you go. Wow, very cool. I do want to say real quickly, and Tyler's coming right up, so you're in for a treat. CMT Association, I want to say thank you to CMT Association for sponsoring all of our events. You know, Tyler's going to talk about this in a minute, and I've been talking about how impressed I am with the numbers that he actually talks about. But if you're interested in managing money, you want to have more assets under management, you want to increase your responsibilities, or you may just want 3 really cool letters to put after your name, that being CMT. CMT Association is a great organization. They deal with accreditation of traders. You can kind of get an idea of what they do here on the screen. If you're interested in checking out the CMT Association, cmtassociation.org, but they've been a sponsor of the events with MetaStock for a couple of years now. And we love working with them. They're really, really good guys. So before we bring Tyler on, though, we're going to give away a prize, because that's what we're doing here. So for that perspective, I'm going to put this slide up so you can read how awesome MetaStock is. And then we're going to go with the number that MetaStock picked out, 1618. So Kelly behind me threw out a number. We're going to go with his number this time around. And let me go ahead and tell you what that prize is, and then we'll figure out who that person is. So in this particular one, we're going to have a complimentary 1-hour strategy call with Dan Passarelli of Market Taker Mentor. He's going to sit down with you for an hour. It's a $500 value, and talk about your trading, how you're doing, and help you carve out a plan for better success. So a very, very cool consultation that's available, totally free. Normally it's a $500 value, and the winner is, what number did I just say? The winner is number 1618. So let's find out who that is on the thing here. A1618. Okay. That would be Milano T. And it looks like that Milano is in the USA and has a Gmail account. So congratulations, Milano. Good job in winning that. And let me go ahead and make a note of that before I lose it forever. All right, there we go. Very cool. Of course, we've been talking about MetaStock. MetaStock's been rated #1 30 years in a row in its price category. Best software. Scanning, Daniel just said it. Best scanning available. Really does a good job. I love the market scanning. I just realized the market's just closed. I was thinking about, I better go run my scans. It's too late. But it helps you scan, test trading ideas, find the right opportunity at the right time. It's been rated by the readers of Stocks and Commodities magazine best in its price category 30 years in a row. If you buy a month, we'll give you a second and a third month for free. You can do that. And you can order the trading indicators bundle if you want. Metastock.com/conf promo. You can give us a call at 800-882-3040. Or you can visit us at metastock.com/sales-chat. So with that being said, I've been telling you that Tyler is going to talk to you all week long. And here he is. So Tyler, how are you doing today?
I'm doing great, Jeff. How are you doing?
Good. I have. I've literally probably said 15 or 20 times. You're going to be impressed with the numbers Tyler's going to give you. So,
We love numbers. We love charts. You know, we're the technical analysis guys.
all right, I'm going to make you the presenter right here,
Awesome.
and I'll just make sure I can see your screen. So before I kind of just cut you loose. Conference is still going well. You came in and talked a little bit earlier. It's been a great conference, and I'm glad you could help support us with it.
Well, I think it's most important that everybody on the line recognize what kind of a host you are. I don't know when you have time to sleep or eat lunch. You're basically doing this from sunup to sundown and doing an incredible job of it. So kudos to you and to Kelly and to the whole team at MetaStock. We at the CMT Association are perfectly aligned because we believe in education. We believe in people refining their process and their rules-based approach. And we're an education organization. So aligning with MetaStock on these events has been a pleasure of ours, and really glad to be back with you all. So if you can hear and see me and see these charts, first thing I want you all to do is take a deep breath. Right, market's closed. It's up about 0.5% today. We'll take that. Grab your coffee, your tea, whatever's in your cup, and sit back and relax. Over the next hour, we're not going to do anything high pressure, but we're going to talk about a few things that should be evergreen tools that you could apply to your own trade management and portfolio management. So again, my name is Tyler Wood. I'm a CMT charter holder, and I represent the CMT Association. If you saw me earlier this week, I actually have a dual mandate. I'm also the co-founder of Go No Go Charts. But in my role at the CMT Association over the last 12 years, I've helped to advance the discipline of technical analysis, which is it's a pretty big mandate. But thankfully, I get to work with the men and women of Wall Street who have been doing this for over 50 years. And real simply, what we try to focus on are improving investment decision making. So that's for all financial market participants. We do a lot of educational offerings for non-professionals as well. If you just want to come learn how these tools can work, that's just fine. But the credentialing and the career opportunities apply to everyone who is currently a professional in the financial services industry or aspiring to be so. If you want to be a professional trader, you're thinking about taking your private fund public, this is a great education path and a credentialing path towards getting yourself into the space. So real quick, like I said, this organization is 50 years old here in 2023, and it's been an incredible evolution. Just as technical analysis has evolved from, pencil on graph paper in the late 1960s to, all of us carrying around 5,000 charts in our pocket, in our phone, we have expanded globally. It's a nonprofit organization, but we have members in 137 countries. What started as a very small group of sell-side equity research analysts is now a global organization of money managers, traders, programmers, folks who work on market structure, folks who work in client advisory, you name it, you'll find a CMT charter holder in every spot of the industry. I won't belabor our long history, but suffice it to say we've had a couple of really important milestones. One is that the SEC, now FINRA, highest regulator in the land in the US, agreed that there are two types of analysts on Wall Street. And when they reintroduced some new examinations after the crash, the bubble bursting in 2001, our board went to the SEC and said, you know what, you need to test us on our toolkit, the technical analysis toolkit. And through a full year's process of establishing the credential as a professional body of knowledge and a very robust testing process, the SEC and FINRA agreed that there are two types of analysts on Wall Street. The CFA is for fundamental analysts, and the CMT is for technical analysts. And that really catapulted the last 20 years of a ton of growth. CMT program didn't get started until 1989, so we're a little smaller, a little younger than our big brothers over at CFA Institute, but you can check out a lot more about our history on the website. A couple of things that we do to execute on our mission is that we produce a ton of content. So even if you're not interested in the credential or the examination process, I encourage you to join as an affiliate member of the CMT Association, just so you can have access to hundreds of conferences and events each year, chapter meetings. The video archives go back for decades, lots of educational web series, and then of course, near and dear to my heart. We launched a podcast a few years ago, and we have these in-depth interviews with money managers who have been using the discipline of technical analysis to the advantage of their firms and clients. And so if you want to hear how the pros are doing it, wherever you find your podcasts, Apple Music, Spotify, Stitcher, wherever, that's a free, accessible series that I encourage all of you to check out. I did mention that we went global last fall. Actually, we did our third investment summit in the Asia Pacific region. We opened an office in Mumbai in 2018, and we've just seen a tremendous demand from candidates in the region and members and charter holders who are helping us not just advance the discipline with new tools and technology, but also advocacy at the federal regulator level and with employers worldwide. As Jeff mentioned, I get the great pleasure of working with some of the legends of technical analysis. And this spring, April 26th through the 28th, we'll be celebrating that 50-year history. We'll have folks like Robert Prechter and John Bollinger and Martin Pring and Ned Davis and Andreas Klenau, who are coming to talk with us about how they have used these tools and their utility in all markets over all regimes and timeframes. We'll also be having a little reception on the floor of the New York Stock Exchange. So for any of you who are passionate about markets, who want to meet those legends of technical analysis and get to talk with the folks who are at the upper echelons of this industry, I encourage you to come to New York City and join us for that 3-day conference. All right, that's enough of an introduction. Hopefully you've filled your coffee cups by now. But what we want to do today is first define what we mean by technical analysis, and it's a broad umbrella. Over the 50 years, we've had an industry that at times has been very skeptical of technicians, either because they didn't understand the tools or because it counteracted what their fundamental beliefs were about the securities they were investing in. So that advocacy effort exists today. We try to separate wheat from chaff. There are responsible ways to use these tools, and then there are folks out there selling you a get-rich-quick scheme. And so we want to help educate the entire financial industry and all investors on how to steer clear of those pitfalls. We'll spend the bulk of our time talking about a few tools. Obviously, there's a wide and broad set of subject matter that we could go over, but I'm going to pick 3, and we'll go through a few of those tools. And then we'll finish up. I'll tell you a little bit more about the CMT program for those of you who are interested. So let's dive right in. First and foremost, what is technical analysis? Obviously, for many of us, it begins with the chart on MetaStock or wherever you are doing your analysis. And it's price and time series data. But our good friends, Edwards and McGee, these are the folks who wrote the original text, if you will, in the 1930s. They said technical analysis is just the study of the action of the market itself, meaning we're studying what's happening amongst all investors. We're studying the behavior of investors and price action. We're less focused on the operations of the companies that are represented by shares in the equity markets. Well, that's a pretty good definition, right? We get a lot of information out of the markets, a lot of statistics that we can use to our advantage. But we also know that technical analysis is about the supply and demand relationships for shares or contracts of what you are trading. And then from our curriculum, Perry Kaufman, who's a frequently cited author, said, technical analysis is the systematic evaluation of price and volume for the purpose of price forecasting. And I'm gonna pick a little bone with Perry about how much forecasting we do versus how much probabilistic reasoning we do. Nobody knows what the future holds, and what we're actually trying to do is just listen to the message of the market and stay on the right side of those trends, right? So what we talk about in the CMT program and how we define technical analysis is that it starts with organizing a data set. And so if you can think that broadly, right? Bar charts, candlestick charts, or point and figure charts, or Renko charts, it doesn't always have to be time series. We could use volume traded, we could use percentage moves. Organizing our data set into a visual tool is really where this discipline started. And actually, we got to go all the way back to 18th century Japan in Osaka in the rice pits to a gentleman named Monahisa Homa, who was the first person to actually create a visual tool to capture trading enthusiasm and the price behavior of markets. I think it's very fitting that that happened in a commodities pit. because the intrinsic value of a grain of rice is going to be pretty much the same from day to day. But human emotion and the behavior of trading in those pits and what happens to price, that can be very volatile. So he is the gentleman who invented candlesticks. And yes, I did say the mid 18th century. There's some great books. The Foundation of Gold was one written by Mona Hisahoma, incredibly successful trader in his own right, because he understood how to capture that information out of the market and use it to his advantage. We also talk about price patterns, important levels. We look at behavioral finance subjects. That is technical analysis, right? The behavioral finance, the psychologists would talk about herding behavior and these heuristics that we've all developed in our evolutionary psychology. As technicians, we talk about price trends, right? They talk about the anchoring bias. We talk about areas of support and resistance. So behavioral finance, if you hear about behavioral economists or folks who are writing on that work, they're giving a language to things that technical analysts have known about for a very long time. We'll talk a little bit about Dow theory, about the interplay between different markets, confirmation, and multiple time frames. And then, of course, there is a whole field and a broad toolbox of indicators and derivative studies that can be used on price and volume data to help us understand the trends or the probabilistic returns in forward periods. Now, that was kind of a lot. We at the CMT Association gave it our own definition. And what we say is that technical analysis provides the tools to successfully navigate the gap between intrinsic value and market price across all asset classes through a disciplined, systematic approach to market behavior and the law of supply and demand. Now, that's also a lot of words. But what we're really getting at is that some of the work that Aswath Damodaran and other gurus of fundamental analysis started to pick at was that price is not governed by the same things that intrinsic value is governed by, right? We have accounting estimates, we can look at balance sheets, we can do some valuation exercises on companies, but the market action and what governs price is really about sentiment, it's about supply and demand relationships. And so it was Ralph Akampora, when I started over a decade ago at the CMT Association, who said, Tyler, if you're ever talking to people about technical analysis, make sure you use this chart. Now, Ralph taught for 40 years at the New York Institute of Finance. That was where Wall Street went to learn about the markets. And his example was IBM. That was sort of the mega cap stock of the day. Let's talk about Apple for a second, right? In the top half of this graphic, we've got the company, okay? So there's a PE ratio. They have competitors in the space that might be taking their market share or losing share to them. They have a management team that might be very efficient or very inefficient at allocating capital throughout the firm. They might pay a dividend. And of course, they've got these products that are going to generate future cash flows. So when I went to business school, that was all we focused on, right? Trying to understand the fundamentals of the company to come to some derived estimate of intrinsic value. And then you can see if the market is overpricing that or underpricing that, right? The whole idea behind fundamental analysis is that the market can be wrong. And therefore, if we do our homework well enough and we understand a valuable company that isn't recognized in the market, we can make money. Okay, I'm not here to say that fundamental analysis doesn't work. What I'm here to say is that there might be a more complete analytical method. So you can do your fundamental work in whatever way that you choose to do it. But if you want a complete view on what you are doing when you buy shares, because most of us are not buying a whole company. We're not a big private equity firm. We can buy shares of stock. And what you need to understand about the stock, which is very different from the company, is that it has a price at which it trades. There's volume, about the number of shares being traded at any given price. You can look at other market statistics like open interest. You can look at supply and demand relationships for this individual security or for the sector or for equities versus other asset classes. And then, of course, you have to understand the psychology of the market participants at the time. You have to understand the regime that you are trading in to make gains in the markets, right? To use technical analysis in a valid and responsible way. So what Ralph was trying to educate Wall Street about over 40 years was that you can combine technical and fundamental analysis. That fusion approach can be really powerful. We talk about this with a lot of the guests on Fill the Gap in that podcast. So I mentioned, right, behavioral psychology, behavioral finance experts have talked about the herding principle. We know markets move in cycles. The great Daniel Kahneman actually won the Nobel Prize in economics in 2002. He's not an economist. He's a psychologist, which I find fascinating that the world of academia is finally coming around to realize what has been working in practice, but didn't have a sound academic theory behind it, that is technical analysis, is now getting justified through this understanding of human psychology, evolutionary psychology, human behavior and emotion, some of the heuristics we bring. The groundbreaking work that he and his colleague Amos Tversky did is called prospect theory. And as traders, I think you can all agree that rings true, right? It's so much harder to admit to a losing trade, to lock in a small loss, than it is to let your winners run, right? And oftentimes we cut them short because we want to lock in that win. And we know that we get much greater pain from a loss than we experience joy in a gain. That is, in essence, in a nutshell, prospect theory. So I encourage you all to check out further readings on that, or pick up the CMT curriculum, which covers that through the lens of technical analysis. Now, if I can take you all back to business school, Econ 101, right? Supply and demand, right? At a fixed rate of supply, an increase in demand is going to move us up the supply curve, right? And that's going to increase price. Well, that makes perfect sense, right? These are like laws of physics, right? Now we have a fixed supply for most shares of companies in the equity space. Well, what happens when demand surges, right? And for our fundamental brethren who still believe that markets are purely efficient, all I would offer is a few examples, right? The irrational exuberance that we saw in 2020 and 2021, meme stocks like AMC. On a fundamental basis, sure, the pandemic might end, we might all go back to the movies, and maybe there's a good bounce in AMC. But it's a $6 stock. What is it doing trading up here at $250? That is the human emotion that we as technical analysts can either participate in, right? We can take advantage of some of those moves, although I'm not recommending that you get involved in highly volatile meme stocks. But you can see how markets can express their view far extended beyond any intrinsic value estimate. GameStop's another great example, and cryptocurrencies. And I'm going to pause here for a second because there's been a great rally in a number of cryptocurrencies on both a relative and absolute basis here in 2023, and it's happening without much fanfare. Meaning you don't see the same kind of hype that we saw in prior cycles. Now, I do not know a darn thing about the lower level protocols or about how the different blockchain technologies are working. And we can extend that metaphor, right? Do I know anything about biotechs? Do I know anything about semiconductors? I don't make computer chips. But as an investor, could we own NVIDIA without knowing exactly how to make semiconductors or exactly what their management team is doing, or deep fundamental knowledge on the space? Of course we can, because the market is doing that work for us. What we get from price and volume data in the markets is telling us all of the collective opinions from fundamental analysis, all the research that is out there that is known to human beings, plus everything that we don't know and that we don't know that we don't know. So I think trusting in the market as our best analyst is really the way to go. And the person who said this best, Mark Abraham, is a great trend following investor, very successful money manager, said ultimately it's the dollar-weighted collective opinion of all market participants that determines whether a stock goes up or down. And that consensus is revealed by analyzing price. So we are the price analysis folks. And if any of this is ringing true for you in your own discipline, in how you evaluate what you want to be holding in your portfolio, I really encourage you to join the CMT Association. There's a lot of like-minded folks out there who are developing even new tools, cutting-edge technology, and who are very happy to share what has worked and what hasn't worked for them. You can pay a lot of tuition to Mr. Market if you want to, or you can learn from those who came before us. And Alan Shaw, one of the founding members of our organization and the director of research at Smith Barney, what became Citigroup, said, "We are but giants standing on the shoulders of giants, right? There isn't anything new under the sun, and we can learn a lot by talking with those folks who've been through it already. All right, congratulations. We made it to the end of the first section of today's presentation. Let's talk about 3 aspects of technical analysis. We could talk about so many different things: trend and momentum and multiple time frame analysis. We could look at gap studies or candlestick patterns or Elliott wave, whatever. There are many, many topics to cover, but we have to pick just 3. So first, I want to talk to you about relative strength. Technical analysis has a very powerful way to give you a comparative study between many options that you have to hold in your portfolio across asset classes, across sector groups, across and 2 different securities. We're also going to talk about market breadth, right? Is it a stock market, meaning are we just looking at the index, or is it a market of stocks? And can we get under the hood and find out what's happening within the index? Can we look for opportunities in either bull or bear markets for leaders and laggards? Now, the last thing I want to talk about is divergence, and that's the application of any number of momentum tools to confirm or deny what's happening in a price trend. So that's what we're going to cover next. Let's dive right in. Relative strength. From the curriculum, from the great Martin Pring, one of the frequently cited authors in the CMT textbooks. He says, relative strength is a technical concept that measures the relationship between 2 securities. One is simply divided by the other. And relative strength can be used to better understand intermarket relationships. Well, that is a great definition of relative strength. So let's look at this in real time. We're going to take growth stocks and value stocks. And for academic purposes, let's consider this 2020 demise, the COVID crash. Now, if we just eyeball, right, we can get a multi-chart layout in MetaStock, and we can look at a couple of securities and try to compare them, but it's very subjective, right? I see this line's going up and it crashed during the pandemic. This line was going up, it crashed during the pandemic, and they've both recovered. So how would I choose whether or not I want to own growth or value stocks? All right. We can use a relative strength ratio. So this red line is telling us the relative performance of growth over value. So when that line is rising, growth stocks are outperforming value stocks. Now, isn't that a helpful tool in portfolio allocation, in understanding the environment that we are trading in? And what's even more important to me is that this relative strength line picked up, right? Growth stocks were outperforming value long before the top level of the index cracked, way before we plummeted. Now, the important concept with relative charts is that growth stocks weren't going up during the COVID crash, right? They were going down less. And within the CMT Association, I get to work with a lot of portfolio managers, mutual fund managers, long-only shops. And for them, relative performance is what it's all about, right? They're trying to beat a benchmark, and they're trying to help their clients. So whether you're just preserving capital by going down less, owning the things that are outperforming in a bear market, means that, that you are still losing, but losing much less than you would be if you were in underperforming sectors or asset classes or style groups. So that's the basic concept of relative strength. Let's go through a couple other examples. What about Bitcoin versus equities, right? Should we be holding cryptos or should we be holding stocks? Well, again, we can subjectively look that the lines were going up and the lines started to come down. This is 2021. And here we are at the end of 2022. Well, we can look at a relative strength line and we can see that Bitcoin was soundly outperforming, right? Crypto assets over equities, right? It was a risk-on environment in 2021. And the riskier the asset, the greater alpha we could capture. So on a relative basis, Bitcoin is outperforming the S&P 500 throughout that 2021 period. And then we see it roll over, and Bitcoin has underperformed all through 2022, right? Risk off. You'll hear analysts use that terminology, risk on or risk off, in terms of the style and the approach that they're taking for asset allocation within their portfolios. And then just at the end of 2022, we saw that outperformance return in the crypto space. Now, one important thing about technical analysis is that you can use those same indicators, those tools that we're going to talk about later, like a long-term moving average on a relative strength chart as well. So this is a simple ratio, Bitcoin to the S&P, and we can see that it was above its long-term moving average, right? We saw strong relative performance and then above a long-term moving average. We crossed back below as Bitcoin began to underperform and remained a laggard to US equities throughout 2022. And here's this little blip at the start of 2023 as crypto assets are again above their long-term moving average and beginning to outperform US equities. All right, let's do another example. How about gold, right? I love the gold bugs. I mean, the textbooks that I read in business school said gold is the safe haven asset, right? It's a store of value that you could use as an inflation hedge, right? So we had this rapid rising rate environment here in the US and really around the world as central bankers tried to fight the stem of inflation. Gold was nobody's friend, right? Until it was. In 2022, we saw that gold rally. And so let's look at that on a relative basis. Gold versus the S&P 500, strong rally in 2022. And then we cracked below that long-term moving average, and we've had underperformance of gold through the back half of the year and into 2023. So again, it's not about the narrative. It's not about, oh, I'm a perma bear. I'm only going to hold gold, right? What a foolish way to invest your money. And I apologize if I'm offending anybody, but we've got options, right? There's a wide marketplace of securities that we could be invested in, right? Alternatives, commodities. We could be looking at bonds. We could look at fixed income in the junk bond category, high yield corporate debt. We could look at sovereign bonds. There are lots of places we can put money to work. And frankly, anybody who sticks with one thing because they are permanently convinced of one way that the market's going to go, they're really missing out on a lot of value that technical analysis can bring. All right, let's take another look at crude oil. Do you remember? Highest performing sector in 2021 was the XLE. The energy sector was the highest performer, not technology, not communications, not consumer discretionary, energy. And it was really energy versus everything else in the first half of 2022. So we can look at this relative strength line. We can see crude oil outperforming the S&P 500 index. We've got strong relative performance. We're above a long-term moving average, and then it begins to roll over. And then we crack below that long-term moving average. So signs to get out of the crude oil trade, to maybe reallocate to an equity portfolio, capture the upside there instead of the commodities allocation that a lot of investors were looking for. That's how we use technical tools responsibly. So hopefully this relative strength concept is coming through. Again, you might just be trying to decide, should I buy Micron or should I buy NVIDIA, right? Within the semiconductor space. Well, take a look at a relative ratio chart. Which one's outperforming? And on whatever time frame that suits your style of trading. I highly recommend you take a look at relative charts in your analysis and even in your trading. All right, moving on to subject matter 2, breadth. And I know you can't smell my coffee breath during this presentation. We're not talking about that breath. We're talking about when we get under the hood. Perry Kaufman says that breadth measures the imbalance between advancing and declining stocks. So a net increase in the index with more issues declining should generate concern that the upward move is poorly supported. All right, think about the 1990s Chicago Bulls. Yes, Michael Jordan was an all-star, but they had an incredibly deep bench of players. Everybody on that team did their job, as Bill Belichick says, right? You had Scottie Pippen and you had Dennis Rodman, people who were just there to rebound and get it back to Jordan. That's what we're talking about when we talk about market breadth. We understand that the index might be climbing higher, but we want to know how many stocks are participating in that move. The technician will ask, is it a stock market or is it a market of stocks? And we have to get under the hood if we're going to find that outperformance. All right, so again, textbook example, the COVID collapse. What we're looking at is just one breadth indicator. There are many, and you'll go through them when you're studying for your CMT exams. The advanced decline line shows us that for the Russell 2000, going into the COVID-19 pandemic, right, the 2020 crash, at those February highs, we saw the index climb higher while breadth had totally rolled over and deteriorated, right, ahead of the downward move in the index. So as the index is climbing to that penultimate high, we saw lots of destruction in a lot of names underneath. And technicians will use market breadth to understand, as a leading indicator, what's happening under the hood of the index, right? So I know the S&P 500 has been chopping around. The last couple of weeks may have been very frustrating or maybe very rewarding. We've had 1% and 2% reversals almost every day in this tight little range. Now, what's happening in the breadth will tell you whether the advancing bull market that everyone's debating, is that supported or not. And the other point that I have to make about market breadth is that we can see that bottom and we see improving breadth, right, throughout the rally in the post-COVID collapse. Now we get up here and we've got this tight range-bound area for the Russell 2000, and yet we see massive improvements in breadth. That's rotation. That's more companies, more shares participating in the rally, and leadership is changing hands, right? We're seeing different styles and different sector groups begin to gain territory in that rally, even though at the index level, we're not seeing a whole lot of return, right? So again, we got to look under the hood. It's not just a stock market, right? If you had held in 2021, the Russell 2000, you'd just be flat. And who's looking to just be flat? All right, well, let's fast forward this chart and see what happens, right? We had that really painful bull trap. You remember it broke out of the channel, Russell 2000, we're taking off, we're going to the moon, woohoo! Well, at that moment, we also saw breadth roll over, right? A sign that this move was unsupported, right? You've got an all-star player, right? Some mega cap names are holding up the index, but there's a lot of destruction happening underneath. And so we can look to market breadth to see that deterioration even before the index started to move lower. The other thing that I want to point out on this chart, we've got the concept of polarity. And this is classical technical analysis. This is old school. We can look at price levels as important areas of support and resistance. The concept of polarity is simply this, that what has been support can become resistance. So here we are, we've broken up to these new levels, new highs in the advanced decline line. So we've got an area of support. It's tested and retested and retested. When we broke below this support area, look how that suddenly became resistance, right? So any uncertainty in this region here, right, we're seeing breadth that just can't get back to its highs, and it continues to get rejected at the very same level that was support. That's the concept of polarity. You can use that on any chart and any data series. All right, last but not least, let's talk about divergence. Now, the myriad of indicators and studies that you can put in panels below your price chart are all derivatives of our one most important indicator, that is the price action itself. Now, those indicators that we see in the lower panels, they're all calculations made off of price and volume, breadth, you name it, but they're derivatives of the first principles that are coming out of that market data. And we can use those tools to identify market action and separate what is signal from noise. So let's see what we can talk about in terms of examples for divergence analysis. We're looking for confirmation of a price move. Now, here's a classic, right? Not every divergence is a signal, right? So this is bearish divergence. As we see this price trend climb to new highs, 1, 2, 3, 4 new highs. At each point, momentum is further and further exhausted, meaning our RSI in the lower panel, it's a simple momentum oscillator created by Wells Wilder in the 70s. We see very strong momentum on that first that first new high. And at every subsequent high, RSI is making a lower high, meaning there are fewer and fewer enthusiastic buyers as price reaches these higher levels. Well, that's human behavior, right? It's getting a little expensive up here. For anybody who was buying real estate in Miami during the Bitcoin boom of 2021, you know that things got way overpriced. And so there are less and less buyers. It's less supported, right? This price trend becomes unsupported from a momentum perspective. We see the bearish divergence. Now we can see bullish divergence on the same chart as well. With the new low, we saw a higher low in RSI, right? So a bullish divergence is telling us that, you know what, there's not a whole lot of support for further selling. We may have exhausted all of the sellers that had holdings left to sell. All right, let's take a look at another example. Again, back to Bitcoin. Incredible divergences here. Price makes a brand new high and a sizable one at that, unsupported by momentum, right? We see that divergence, and in this case, right, 1, 2, 3, we saw multiple divergences along the way. What we can use this for is to pay attention, maybe tighten our risk management protocols, tighten our stops. We can see that this trend is becoming exhausted. Doesn't mean we liquidate our positions at the next high. It means that we're paying attention, that the market is giving us that message that indeed this rally may be in later innings, right? It's going to come to an end. We can also see bullish divergence, right? With the lower low, we see a higher low in RSI, and on and on. So hopefully that tool is something that you can use on every chart that you're looking at. You can look for divergences on any momentum oscillator. You can look for divergences in breadth. The whole idea is that those subsequent, those derivative indicators that you use on your chart, again, price is our most important indicator, right? That's where we're going to make our buy and sell decisions. That's how we're going to get paid. But we can use these other indicators to corroborate the evidence we're seeing in price action, or to deny and tell us that indeed there could be some divergence from the underlying signals of the market. All right, congratulations again. We made it through the second portion of today's presentation. Hopefully this is going to be helpful, evergreen, conceptual learning that you can apply to your trading at home. All right, now let's talk about the CMT program and why people would give up their nights and weekends to go through this program. Well, it starts with having a professional skill set. So the curriculum, what is covered in the CMT program, is based on the survey results that we get back from hiring managers and investment professionals around the world. We want to know, what are they looking for in their next hire? What are they looking for if they're going to allocate to a money manager? Well, they want to know that you've got a really sound risk management discipline. And that's job 1, 2, and 3, as my friend Jay Woods likes to say. We also know that technical analysis has evolved, and it's not enough to simply have a good price pattern recognition tool. You have to be able to quantify those signals that you're using and use them in a repeatable, disciplined way so that you can have structured and consistent returns, no matter what the market regime is. We're going to deliver all of this in a portfolio management context, meaning it's not just about trading a single security. Yes, we do cover that as well, but we have a lot in the curriculum that's about a portfolio management approach. How do you control risk and allocation? How do you do position sizing? How do you make sure that the correlations between the holdings within your portfolio are not contradicting each other or perfectly redundant? And then, of course, we've talked a lot about behavioral finance concepts today. We're going to cover a lot of those tools, both in an understanding of macro level, what drives the markets, what drives price, but also at an individual level about your own trader psychology, about how you can identify some of these behavioral pitfalls of fear and greed that govern all of us. So within that professional toolkit, we cover a lot of core knowledge domains. Obviously, we're going to talk about trend analysis. We do cover cycles work. That was really eye-opening for me, just the amount of research that was done in the 1920s and 30s, and then even through today, to understand how market cycles have behaved over long stretches of time. I mentioned system testing and quantitative approaches to making sure that you've got a rules-based approach that's going to be robust and work in multiple market regimes. We talk about risk management and stats. We're going to talk about different asset relationships, how John Murphy first identified some of those intermarket correlations, but then folks like Marcos Katsanos really quantified and helped develop the studies that evaluate the correlations, and at times when those correlations break. We saw in 2022 a lot of money managers who had that balanced portfolio approach, right? The investment advisor that puts you in a 60-40 split between bonds and equities. Well, that just straight up didn't work because the data sets and the correlation between fixed income and equities changed. Correlations moved to 1. Bonds and stocks both went down together. That doesn't happen all of the time. That was a really clear signal to the technical analysts community that we were in trouble as early as January of 2022 when those correlations started to change. We talk about behavioral finance and, of course, professional ethics. That governs everything we do as a professional organization worldwide. We actually share a code of ethics with the CFA Institute now. There are a number of different credentials that are all governed by the same professional ethics because, after all, Ethics are ethics. We don't need to split hairs. And so worldwide, anybody who is a CFA charter holder, CMT charter holder, Kaya charter holder, we're all bound by the same code of conduct and professional ethics. All right. So what is the program? What's involved? Well, it's a global credential. It's awarded to those who demonstrate their mastery of the core body of knowledge that we've been talking about all afternoon. We actually have 3 exams. You do have to take them in sequence, meaning you pass level 1 before you can sit for level 2, pass level 2 before level 3. And all 3 levels are offered twice a year, once in June and once in December. We have a testing window of about a week. Having gone through the program, I can tell you that it's doable. Even a person like me can pass these exams. But the trailing 5-year average, we have a pass rate of around 60% at all 3 levels. And I can answer questions offline for people who want to know more about the likelihood of getting through those exams. So statistically, they're not easy. They're academically very rigorous. You're going to get about 1,000 pages of reading per level. But it's a consolidated curriculum. And what I found is that it's much more applicable than any of the studies that I did throughout my MBA program. I really looked forward to my nightly study routine because it could be applied the very next day. It's a very practical course of study. Sorry, those dates are a little out of date. The next exams are going to be offered in June, the 1st through the 11th of 2023. As I mentioned, the curriculum is a consolidated collection of all of those great works, all those legends of technical analysis. We compiled them into a single textbook to make studying more efficient for the candidates, but also to remove redundancies and to make sure that the testable material, what you're going to find on the exams, is reflected explicitly in the textbooks. So for those of you who are interested, my good friends over at Wiley Publishing, they've been publishing the official CMT curriculum since 2015. They said to offer you 30% off your textbooks if you'd like it. So CMT TW30 gets you a little discount on your CMT curriculum. And we did release new books for 2023. They're available now. So if you wanted to get started for those June exams, you have plenty of time to prepare for the exams coming up. Okay, it's a lot of work. We covered that. Not everybody passes every exam on the first try. Okay, so why do it? Well, the structured approach to studying technical analysis is something that we've heard back from all of our charter holders. They learned some of it on the trading desk. They, 20-year careers, they dabbled into a few different technical tools or concepts. But a structured approach, the broad lens that the CMT curriculum covers, is really, I think, the best way to prepare yourself in defining your own trading style and strategy and the tools that you're going to use. I think it was on Monday, Rahul Mohinder was saying that you have to find your own heartbeat. I thought that was such a wonderful phrase. And what he meant was your trading time frame, the time horizon that you're holding stocks, your risk approach or tolerance to risk, it's going to be different for each individual. So can you learn how to trade like somebody else? Of course. But is it going to reflect what's most natural to you? That's debatable. So what I found was best is to learn all of the tools available and then find those that work best for me. The other reason that people go through this very rigorous program is that it has tremendous career benefits. Folks are getting promoted and they have new positions and they have increased salary and all sorts of career benefits after they earn their CMT. But the one that I want to pull out is that 60% of our survey respondents, so charter holders, in the first year after they received their CMT had an increase in responsibility, meaning they grew their assets under management. Their firm or their clients put more money to work with them in their portfolio because they believed in the risk management approach. They believed that there was a repeatable, disciplined process to running that money. So for all of you who have been trading for a while, you're trading for yourself professionally and you're thinking about, maybe this would make sense as an ETF, or maybe I should, hook up with a registered investment advisor and run these models for clients. The CMT designation holds that value. It has a lot of integrity, not just within the financial services industry, but also with end investors. So I highly recommend you check that out if you're considering a career in finance. I often get this question, well, what does a CMT do? What sort of job opportunities open up to me? The answer is all of them. CMT charter holders are spread far and wide through the financial services industry, both as research analysts in the investment banks, but also folks who are running money at everything from small investment advisory firms to large sovereign wealth funds and public pension funds. They might be asset allocators, evaluating other managers, using this approach to understand those strategies that the managers are bringing. A lot of them are client advisors. And then, of course, on the brokerage side, we've got a lot of folks who are doing education and helping people with their trading programs as well. You don't have to take my word for it. So right on the CMT Association's website, cmtassociation.org, we've got a ton of testimonials from longtime money managers, many of whom are CFA CMT dual charter holders, right? So from the very beginning, what was I saying? You can use these tools in combination with each other for very powerful results. And so I highly recommend, if you wanted to check out some of the videos that are on our website, how these folks approach money management, how they use technicals for idea generation, for position sizing, to prioritize the research if they've got a long dated fundamental thesis on a security and it's not working out, how they improve their market timing by using technical analysis, and some of the inviolable rules that we can set for when the market agrees with us or when it doesn't. And with that, we did launch an exemption for CFA charter holders. This goes back to 2018. Our partnership with CFA has been strong and growing, and around the world, I think a lot of fundamental money managers have realized they need a few different tools to navigate choppy and uncertain and highly volatile markets. And so we've seen, as we tend to be very counter-cyclical, 2002 and 2003, we had a lot of candidates come into the CMT program after the collapse. The great financial crisis was another moment of awakening for a lot of PMs that needed another toolkit. And of course, the COVID collapse in 2020 and that remarkable rally off the lows has brought a lot of people into the program. So if you are a CFA charter holder, you are actually exempt on the level 1 curriculum. We did a massive curriculum mapping exercise, so you're allowed to start at level 2. You're still responsible for all the learning at level 1, but I encourage you, if you are a CFA charter holder, to take advantage of that exemption. It's not a great presentation without at least another chart, right? I see an ascending triangle break out to the right side. We've got some of the growth of charter holders in this graph. And what's interesting to us at the CMT Association, we were founded in New York, quickly moved to Boston, and it was a sell side and buy side sort of relationship. There are no geographic boundaries to technical analysis. And in fact, we've seen the charter holders coming out of the Asia Pacific region start to outpace the North American counterparts. So we actually have a shift in our demographics, more ex-US candidates than even here in the States. So it really is a testament to the growing global network of like-minded practitioners. I think for me and for a lot of the charter holders that are part of this organization, the friendships and the relationships that you can develop with folks all over the world. I've got a crew in Malaysia and Singapore and India, and of course throughout the Gulf region in Dubai and in Tokyo, and we've got folks all over Europe and Latin America as well. So it's really great to be able to pick up a phone and know that you can speak the same language with people all over the world. So I highly recommend you check that out. Even if the program and the credential isn't for you, you can join this network as an affiliate member and start to participate. So I told you I had those June dates in here somewhere, Jeff. Level 1 and 2 will be offered June 1st through the 11th. So that's the testing window coming up. I encourage you, if you're considering a lifetime of trading, rather than pay your tuition to Mr. Market and make lots of mistakes on your own, learning from the best is a great way to save yourself some headache and pain in the markets. Registration will close in April. So I encourage you to take a decision soon and come join us in the CMT program this June. You can sit for level 1, and I'm here to help in any way I can. For those of you who have more questions, you can shoot me an email, tyler@cmtassociation.org. We're on all of the social channels. You can find CMT Association on Twitter and LinkedIn and Facebook and elsewhere as well. So drop us a line. Let us know what you're working on, and we're happy to help. Jeff, with that, I'll hand it back to you and see if there are any questions from our audience. I know I ended just a little bit early, but I'm trying to be respectful of everybody's dinner hour.
You're totally fine. And actually, it's not dinner here yet. So it's only
That's
3
right.
here. There's some really good questions, though. V Sud wants to know, is the CMT program recommended for any trader who does not work in the finance industry?
Yes, I get that question a lot. And what I would say is the structured approach to learning all of these beautiful and powerful tools, everything that you're going to find in the MetaStock library of indicators, I think that is the fastest way to improve and to develop a real trading discipline. And the credential, the charter, CMT, Chartered Market Technician, is really something reserved for professionals. But you never know when you might aspire to a career in finance. So I would recommend it. The education is open to anyone. You can sit for the exams at any time. We launched an academic partner program a few years ago, and we actually have a lot of undergrad and graduate students who are sitting for level 1, just to get some exposure to the concepts and the theories behind technical analysis. So yes, you can definitely go through the program, but to use the CMT trademark, the designation publicly, you do have to meet a professional work experience requirement. And again, I can answer any of those questions offline as well if you're considering going through the program.
Cool. Another good question from Sean B. Sean wanted to know, is there a continuing education required to keep your credentials up?
Yes, thank you, Sean. So because of that recognition from FINRA, and because we are a professional association, yes, we track participation from all of our charter holders in a number of educational activities that we host throughout the year. So webinars, conferences, we look for about 15 credit hours per year to keep your license active. Again, it's on the honor system, so you can get those CEU credits from a lot of different places and self-report. But we do encourage continuing education. And yes, to keep your charter active, you do have to be a member in good standing with the CMT Association.
Here's about 3 questions I'm going to blend into one big monster question.
I'll pay attention.
This is a home study. Can you study the curriculum without taking any exams? And how do you get the study material? So that's 3 questions that all blend together really well.
Absolutely.
While you're answering it, I'll paste the link for you to the Wiley.
Yeah. Efficientlearning.com is where you'll find these curriculum textbooks, and that discount CMT TW30 takes 30% off. The simplest way that candidates can approach the material is to simply read the textbook. You have access to a candidate network through the CMT Association. We have a Discord channel, believe it or not. We're young kids now. But you can ask questions of not just your fellow candidates, but also mentors and charter holders that are in those discussion forums. There are a lot of test preparation providers as well. So for those who are thinking about sitting for the level 1 exam, I didn't mention it earlier, but our good friend Matthew Verdau does a prep course for all 3 levels. And new this year, 2023, he's offering free access to the level 1 class. So it's a series of video lectures, again, discussion forums and asynchronous question and answer. And so that has really helped a lot of candidates get through the program. There's more information about that on the CMT program web pages as well. But for a lot of candidates, just studying from the official curriculum is enough. I would say if you're new to technical analysis, I would highly recommend taking one of the prep courses that are offered. I think Wiley has some materials on their site as well. That's separate from, the curriculum is what we publish with them. They also have ancillary products like test banks, Q banks, and prep courses as well. So you can check those out. There are a lot of providers internationally who do local language classes, brick and mortar classrooms in India and China and throughout Latin America. So you'll find a lot of people who will help guide you through the curriculum, because it is a lot of subject matter to cover. I sort of breezed past the structure of the exams, Jeff, but just to take a little bit of the weight off of everybody's shoulder, that level 1 exam is multiple choice. It's 120 questions, takes a couple of hours, and it's just about definition and recognition, meaning Do you understand what candlesticks are telling you, how the chart is constructed? Can you point out how some of these indicators might be used and in what capacity? It's very approachable. Actually, we have a little higher pass rate at level 1, 65% is the 5-year trailing average. So don't be afraid of the exams. I want to encourage everybody that even I could pass these. So if that's not evidence enough, I don't know what would be.
Give me the coupon code again.
All three?
Yes, except for I didn't get a note of what the coupon code is, and I want to put it in the chat.
CMTTW30. I did say that quite quickly. I'll pull that up on screen. So yes, the new curriculum is there. efficientlearning.com/CMT. That's Wiley's website. We author the curriculum. They publish it for us. And you'll find lots of other prep materials and things there. I believe the discount code applies to everything that you might be interested in.
Okay, OG Farms on YouTube says, quality content. I'm currently on level 1, which we read differently.
Good job.
We were like, we thought he was grading the YouTube, and we're like, well, I hope one's good. But no, I read it again later, and I was like, oh, okay, duh. He does ask, though, I saw the exam days as 1 through 11th of June, but I set my exam for the 12th with Prometric. Should I ask about this?
No, if the date was made available from Prometric, then that is valid. We've been working with our test proctors, so we do that worldwide through Prometric test centers, and in a lot of cases where they've had some crowding and they've downsized some of their test centers and tried to group things together, at least in major cities, they may have extended the window by a day. So nothing to worry about, Eugene. You'll be good to go on the 12th.
All right, and then last question. Sean B wants to know if he can get access to the old exams.
No, I'm afraid not. There are practice questions and sort of samples right on our website. What we do provide for all candidates are the learning objective statements at each level. And it actually starts every chapter. What are the learning outcomes that you want to master in order to get through that material? We have some sample questions in those study guides and with the learning objective statements, so you get a sense of the level and rigor and style of the questions that are going to be asked. I know from several of the prep providers, including Matthew Verdau and the folks at Wiley, there are practice exams that they offer with their study courses, but the CMT Association doesn't release old exams for study. It is a new set of questions every time. And we actually keep a pretty tight lid on those for psychometric evaluation. Jeff, on some other day when people are having trouble sleeping, we can talk about how to psychometrically evaluate a test question to make sure it has statistical rigor.
You know, I'll keep that in mind. Yeah, that sounds. We should do a whole dedicated webinar series right on that, Tyler.
Super dense, let me tell you. Yeah.
Oh, Sean B wants to know if the course is available electronically.
Yes, in fact, during the COVID pandemic, we offered the exams through remote proctoring. So if getting to a test center or being in a test center is not an attractive option, you can actually sit for the exams directly from your home office or any place where you've got a speedy and secure internet connection and a room where you will not be interrupted. I'll tell you, exam security is a very serious part of what we do. We want the integrity of the CMT charter holders to remain very, very high and world-renowned. So we did offer remote proctoring in 2020. We're going to keep that, for the foreseeable future, because for some candidates in faraway places, it's a lot easier for them to take the test remotely. But it does require that you have a pristine, totally empty office space. I don't think my desk would qualify. And there's actually a live proctor on the other end. They watch you through your webcam while you are sitting for the exam to make sure that there's no interruptions and no infidelity in the exam room.
All right.
Yeah.
Last thing, Tyler. I just want to say thank you. We love the sponsorship. Thanks for sponsoring the events, and such a well-respected organization. We're proud to be part of it.
We are so happy to be working with you, Jeff. You and Kelly and the whole team are doing a great job, and events like this are just the perfect place for us to team up. So thank you for having me. Thanks everybody for listening. I know that was a lot in 1 hour, but hopefully you took away some notes that are going to help guide your trading practice. And by all means, shoot me a note if you've got any questions on the CMT program.
Great job. Thanks, Tyler. Appreciate it.
Thanks, Jeff. Talk to you
See you
soon.
soon. See you for that webinar series on the psychometric.
On psychometric evaluating.
Yeah. All right.
Snore fast.
See you later. All right, very cool. And again, yeah, we do really appreciate them. They've done a great job of sponsoring and being available, and we're just very, very happy with them. So the other person I'd like to thank for Sean, yes, I believe you can take the exam at home, and I think that's what they're talking about. With the Prometric, that's who they use to kind of distribute those tests. It may not be at home, but I believe it's at a test center that would be near you. So I could be wrong on that, but I believe that's the way that they administered it. David Brennan said that was great. It was clear. It was well done. Yeah, he does a good job. So the other person I want to thank, or the other company I want to thank as sponsors, before we kind of wrap up tonight and get to the last speaker, is Stocks and Commodities Magazine. Now, Stocks and Commodities Magazine is a great magazine. They don't have a talk here, but I've been getting their magazine delivered here to the office since well before I started, but we get it every month, and it's a great way to kind of make sure that you get really good information about trading every month. They are doing they have been sponsoring us for a number of years. If you do any of the subscriptions to MetaStock today, you're going to get a free 5-month subscription, and if you spend $300 or more, you get a 2-year subscription. It's completely complimentary from Stocks and Commodities Magazine. So we really, really do appreciate that. I want to talk more about the CMT because we just talked a lot about the CMT, but I did want to kind of highlight one of the, well, that slide didn't load right, and as you can see, I do want to kind of highlight one of the other offers. So that's a bit of a messed up slide, but that's okay. We'll just leave it up here the way that it is, and we'll just talk about. I wanted to kind of just mention the Magic Trader Elite add-on. Peter came in and talked a lot about the Magic Trader and kind of the ingredients and that kind of stuff yesterday. We are running a special promotion. Normally it's $199 a month. If you want to do a subscription to this add-on, you can get it for $149 or $149 permanently. But if you pay for a month, we'll give you the second and third month for free. So it brings your cost down to about $50 a month to try it. You'll like it, but if you don't, you can cancel it. And it's a very, very powerful add-on. So I wanted to highlight that. Unfortunately, I've never seen this before. I'm not sure why the slide didn't load in properly, but you'll just have to trust me. It looked a little prettier when I designed it. So in any case, let's go ahead and kind of do another prize drawing. We're going to give away my favorite prize of the day. OG Farms actually helped me guess a number. Well, I guess he didn't guess a number. He came up with a number that we're going to use for the contest. So this is the final prize of the day. And you might be familiar with it. We're going to give away a subscription to our award-winning MetaStock software program. Okay. And so if you haven't heard of MetaStock yet, you've been sleeping. 30 years in a row, it's been rated #1 in its price category. Daniel came in and talked about how he loves the scanning. I love the scanning too. You can do testing of trading ideas with it. You can, you have the patented forecaster that Scott talked about yesterday. Pricing on MetaStock starts at about $59 per month. It's won this Reader's Choice Award for 30 years straight. And the winner is going to be number 5639, which I already kind of went and looked up in the table who that was. But let me refresh my memory. It's Pete Trader. I gave away his full last name. Pete Trader is going to be the winner. He's right here. He has an AOL account. I'm sure that's not his real name, so it's all good. We're going to give him 3 months of MetaStock. We're also going to give him 3 months of the Zenith software. Zenith is a software, a news service that they spent $1 billion creating. Has news and information from thousands of different journalists over hundreds of different news bureaus. Some of the best news information that's available. It's a competitor to Bloomberg, which is a $2,200 a month platform. We're going to throw that in for free. We're also going to give a 3-month subscription to learnmetastock.com. With learnmetastock.com, it has hundreds of videos that are available that kind of help teach about MetaStock, the markets, system testing, system ideas, trading ideas. A great website that's going to get thrown in there for free as well. So congratulations, Mr. Trader. I'm sure that's your real name. We'll get in touch with you because we are going to, due to exchange requirements, we will require that we get a actual name, full address, that kind of stuff from you. We have to know who we are providing data to. So I'll get in touch with you. We'll get that last name in there and we'll get you set up. If you also want to get MetaStock, you should. I mean, I love it. I love scanning. I love these events, but I wouldn't trade without MetaStock. What we're going to do as an offer for you is if you buy a month, we'll give you the second and third month for free. You can do that with Learn MetaStock as well. Give us a call, 800-882-3040. If you have questions and I'll answer them right here. Just type them in. But you can chat with one of our sales guys at metastock.com/sales chat. You can also sign up online without talking to anybody if that's what you prefer. Metastock.com/comp promo. So, William says, I love this comment, William. This presentation had high relative strength. I'm just going to, I assume that you mean Tyler. So Tyler does such a great job. We love having him in. All right, my audio is back on. And I think I was working on this slide and I pasted Vince Fora's name in the corner because I was doing something else. We're not going to talk to Vince Fora. We're going to talk to Mark Leibovit. Mark's our next guest. He's been a partner of MetaStock for a number of years. Timer Digest is a company that does a timing competition, and he's been marked Timer of the Year many, many times. I think he was Timer of the Decade for a 10-year period. He does a really, really good job. He talks about volume analysis, and he is going to take us home today. So Mark, let's go ahead and bring you on here. How are you doing? Mark, I'm not getting a audio from you. So let's see. I'm going to send you a request to open up your mic. It should say, hey, do you want to turn on your mic? And then you can just go ahead and click on yes. All right, ladies and gentlemen, we seem to be having a technical issue. Hold on just a second for me, if you don't mind. All right, I got to play a video. You can go to the Oh shoot, tab on your own side too.
Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can you help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use And how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on the security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage.
Okay, so let me do this. Let me go ahead and make you the presenter. People can hear you, but not necessarily me. So let me make you the presenter.
And what do I do now? It says, go to webinar to capture the screen, deny open system preferences.
It should say, do you want to share your screen? Go ahead and click on OK.
I don't see that. Sharing. And these.
You should hit allow.
Maybe we're having these problems. Crazy. Sharing. Sharing dashboard, attendees, audio, questions. I see this thing.
Hey everybody on the YouTube side, we are just working on getting Mark fixed. We should be back up and running here in just a second. Sorry for the delay, but we will be right back. Okay, looks like we're getting there. Just while we're waiting, I am actually just going to go ahead and play a quick video while we're waiting for them to get up and running again. So instead of having you watch this, we're having some issues screen, we'll have you watch a little video. Be right back with you.
Hi there, Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's OptionScope. OptionScope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability.
My name is Martin Pring, and I've been in technical analysis for probably about 30 years or more. I've written 18 books. I publish a monthly newsletter and a weekly info movie report. And probably one of my proudest achievements is I've just signed an agreement with Dow Jones Indexes to create a Dow Jones Pring Business Cycle Index. Well, I work for a broker in Canada, and the brokerage research was terrible, and I found a book called Edwards and McGee, Analysis of Stock Trends, and this is a book on technical analysis that I found was fascinating, and I couldn't put it down.
Stop the video. I'm going to make you are you ready to share your screen?
Okay, I'm going to cut you off the phone or stay on the phone.
Well, I can hear you. Let me try and make you the presenter. We'll make sure we can see it this time.
Show my screen.
I've got your screen.
You see slides?
PowerPoint. We're making progress, gentlemen. Okay, hold on a second. All right. Well, we were overdue for a technical issue. Everything was going a little smooth. So it's good to, I can't see your screen. I can see a bunch of icons right now.
Yeah, what happened to it? We're just here. Aren't it? So I don't know where to go, where it is. It was up on the screen.
Yeah, but you closed it, so you'll need to reopen it.
Gotta find it now. MetaStock. Oh boy, what the hell is it? Oh, that's not it.
All right. If you just click on Start, and I think if you just load up PowerPoint, you should be able to see it in your recent files at least.
Wait a second, I'm trying to find it.
Oh, there it is. Yeah. Well, that's one from November. Is that the one you're looking for?
No, that's not the one, February 24th. This would be it here.
Oh, okay. Yeah, go ahead and click on that.
Honestly, I didn't think I closed it.
All right. Thanks for your patience, everybody. We're almost there. I can feel it.
I can feel it. Where is it?
Well, here it comes.
We're just gonna have to jump to the end of the presentation then, because I had all this other alternate stuff up here, and just gonna have to go to.
All right, there it is. Yeah. So if you just hit slideshow, start slideshow, that would be a good way to kind of just kick it off. Or you could start at some point where you want to.
No, I'm gonna find the
slideshow. Yeah, and then from beginning or from current slide, whichever you prefer. William says in the chat that you have an impressive amount of files, and I would agree with him. All right, Mark, we can't see you now, and we can see the PowerPoint and we can hear you. So I want to say thank you.
I'm trying to get control of it. All right, we're going to go all the way through. I had a lot of other stuff we're not going to have time to do, so I'm just going to go through everything. I mean, I have alternate stuff here, so we're just going to go right to MetaStock and the charts. I was going to talk about cycles and geocosmics and all kinds of fun stuff. So let's just start. Since we have less time, let's just jump into this.
All right, Mark, thank you. Thanks for everybody for sticking around. I'm sorry we had some issues there, but we got it up back on track. Mark, it's all yours.
Okay, Jeff, thanks for having me. You know, I do a lot of things, cycles, geocosmics, market timing, in addition to my volume reversal, my VR analysis. And, you know, Jeff came to me, must be 12, 13 years ago, and we created this technical platform. Basically, it's a toolkit, and it displays my VR indicator. And those of you who follow me at vrtrader.com know that as I mentioned a moment ago, do a lot of other things besides VR and making trades and market forecasts, and notably getting named Timer of the Year and all this other fun stuff. So this is my main technical tool for trading. Though there's a lot of other rules, obviously, that I use, but this is what we're really going to talk about in this shortened presentation. My indicator is proprietary. It is exclusive for MetaStock, and it validates a particular type of a reversal environment. So without reading everything on the screen, we have 3 versions of my volume reversal in the toolkit, which is the sequential, directional, and 2-day. We're going to see a couple examples here. And the sequential is the first one. This one displays all my historical positive in VR, negative in VR, positive and negative VR. So everything on the screen. This is what I like to use because I like to see all the VR signals. What's a volume reversal? I guess that's really the question because we're just jumping into this. Well, volume reversal, it's a trademark indicator. It defines rally days coming off lows on more volume or reaction days on more volume coming off tops. Can be used in all time frames. I use it personally daily, but I also look at weeklies. Many clients I know use 5-minute, 10-minute, 30-minute versions of it because you can change parameters, but that's what the VR is, and sequential shows all of them. This is a skeleton chart of what a VR looks like in an uptrend, and it's only showing positives here, the little green up arrows that you see, volume reversals to the upside, but it's showing all of them. It's showing if there was negatives in here, you would see that, okay? Here's an example, this old examples. It's just an example of a sequential one for palladium many years ago. And what's so good about the expert advisor is you click a button and then a box opens up and it gives you instructions when a VR forms, and it tells you this is a moment that you should go short with the appropriate stop. So that's sort of cool. But what you're seeing here in this particular hypothetical is a real example at the time, a negative VR telling you to get short, in this case, palladium. So that's one example of a sequential, what a sequential chart looks like and what you see on your screen when a VR, in this case, a negative one unfolds. This is for the gold fund. This is also an older example from years ago, but it's in the textbook. You know, I wrote a book, The Trader's Book of Volume. I'll show you a visual of that later. It is available on Amazon, but these are examples that go back to our old book from 2011, but just like the McGee and Edwards book and a lot of the classic books, you know, signals don't change, even though you may update it to a current example. It's still the principle is there. In this case, we'd seen a negative VR. This is a positive volume reversal. A little signal is formed. The instructions tell you to get long with the appropriate stop. As a general rule, when I get a positive VR, I try to keep a stop as close to or near the low of the day prior to it. On a negative VR, which you see here on the right side of the screen, my mental stop would be at the high where that VR had come from. So this is a general rule. It's a good short-term trend indicator, and it signals a change of direction, which in this case is accompanied by volume, which is really my main focus. We want to know there are more buyers than sellers or sellers than buyers. By the way, just as a matter of history, I developed this concept back when I was a floor trader on the CBOE, just watching the volume patterns at the time. So now we have another version, the directional version. On the platform, we call it directional because in this case is we weed out repetitive VRs. So if there's like 5 VRs in a, not necessarily in a row, but let's say every third or fourth day after one has occurred, this weeds them out, and you just keep one example. So it's really detecting a more, I guess, filtered shift of bulls to bears. So this is a skeleton chart. We'll show you a real one in a minute. In this particular case, a negative VR was formed. There might have been other negative VRs in here along the way, but we omit those and until we get either we're stopped out, which means you went higher than this point up here, or until a positive VR was formed. That's what a directional does. In this particular instance, which is hypothetical, you would have been long this whole way until a negative VR was formed here on the top right. You'd have been short based on this one. So that's the concept behind the sequential directional. So here's a directional example going way back to market vectors for the Egypt index. Negative VR was formed, and in this particular case was a pretty good indicator for a continued downtrend until a positive VR formed several days later. In the meantime, when the signal was formed, you click on it and you got instructions in this particular instance to get short with the appropriate stop. Another example of the VR being used in MetaStock is my 2-day version. I came up with this because I found that generally when you get a positive and negative volume reversal, you tend to get follow through for at least a couple days. You know, personally, this is the way I trade. You know, I'm more of a real short-term trader. I come from the view of, from the floor trading aspect that, you know, people that I've worked with decades ago view this as a job. Get paid every day, come to the floor fresh and clean every day if you can, and trade accordingly. Of course, I I stretched that theory out a little bit here for a couple of days, but I sort of view trading as a way of making a living, not as an investment approach, though, I do that as well on a smaller scale. It's more to take advantage and get paid as often as you can. So the 2-day version, this is a skeleton chart. It's sort of confusing here, but basically what it says is after you take a position, you automatically exit after 2 days, unless you're stopped out before that time. So here's an example in Google going back, way back as an older example. The bottom line is if you get a VR, I'm showing you in the middle of the screen here. The little blue button indicates that's when you get out of the trade. It's actually 2 days later. Here's a VR formed here. 2 days later is that little blue button. So this particular tool just tells you what you probably know anyway. It's 2 days after you got in, but just exit the trade and take advantage of the VR that formed. This was mildly profitable. This was a lot more profitable. And again, you have a little expert advisor direction here. The big example, of course, which I should have mentioned at first, is the one that was signaled here, and it told you 2 days later get out. So obviously you made money because there's a huge gap up in Google, and you got out even though it did continue beyond that point. The 2-day rule got you out, which as a trader you would be happy about. So let's look at some examples. I threw this together on the new MetaStock 18, which is I'm trying to get used to myself. It's a new version. Everybody likes this A1 stock, so I sort of put it up on a weekly basis just to show you what it looks like. Without looking at skeleton charts here. So this is a weekly chart using my sequential, which is showing every VR, and you can see some pretty good correlation here on the weekly chart for A1, which is everybody's all excited about this stock. So you could just recently here, we can just track the VRs. You're negative, you're down for a couple of days or more. If you're a trader, you're very happy. Positive VR. This one reversed itself, so you have been stopped out. But negative, you made money. Positive, it went up. So just scanning the chart, you can see there's some nice correlation for follow-through following either positive or negative VR. I can only see one here that's sort of questionable, and pretty good reliability. Again, this is a weekly chart, so if you're taking a weekly approach, then this would be comfortable for you. Let's move on to another example. Let's see here, Disney, one of my favorite stocks. I've traded it for years. This is a Disney on the 2-day indicator. I think I'm going to show you all three here, the sequential and the directional for Disney. So on the 2-day, you can see here how it works. Let's go down to this more recent trade here. You had a positive VR, a little blue button, which means you've been out 2 days later with a little profit. Another positive VR here, 2 days later, a little blue button, and VR obviously worked, you're out. Here's a positive VR here, 2 days later, looks like this might have been even or a loss. Negative VR here, 2 days later, you're making money to the downside. The little blue button says get out. Doesn't mean it can't go further. It's just identifying the 2-day window. So this is a directional of the same stock, showing all the negative in VRs, not telling you to get out after 2 days. And just recent signal here, you had a negative immediately followed by a positive, and it just took off. Of course, that was tied to all this restructuring rumors with the stock, but then we just about a week or 10 days ago, we got a negative VR, and it's been moving down. And let's see here, this is a sequential. So this is showing you all the VRs on Disney, and again, this is a daily chart, and you get a sense of correlation here. Positive goes up, negative it goes down, and for the most part, there are other things that you obviously want to look at and think about too. If there any news that day or whatever, but one of the things I also like to do is I look at a 5-3-3 stochastic, and I tend to like to see momentum with the stock, either to the upside or the downside. So if we've got a negative VR and the stochastic is in a downtrend, I feel a little bit better about it. But in any event, you can make your own judgment. But I've been using this for decades, and you can see some pretty good, nice correlations here on the positive and the negatives, giving you short-term trades. It's just basically telling you there are more sellers and buyers on a negative, and more positive buyers and sellers on a positive, and you're following the momentum of where so-called smart money is moving. So that's the basic concept. Let's look at IWM, which is the Russell 2000, just to give you a sense of index. This is the 2-day indicator. I think I'm showing the directional and the weekly, the sequential and directional as well. So this is the Russell. It's just the most recent signal. You had a positive ER on the weekly. 2 weeks later, this is a 2-day, so it's 2 bars. When I say 2-day, it's 2 bars. So you got out with a little bit of a profit there. And here you had a negative ER and dropped, and a positive ER came in. So you got long, reversed your position, but 2 weeks later you rung the register, a little blue dot telling you to exit. And so forth and so on. Beautiful signal here, positive ER on the weekly. Of course, it got you out early because 2 weeks later to continue to run. But again, you're choosing to use the 2-day. If you're using the directional or the sequential, let's just jump to the sequential. You're making a decision based on the stochastics. You're making a decision on what other indicators you're using. I'm a little myopic because I tend to just focus on the VR. I put moving averages up, like the green line is a 200-day, 80 or 90-day, 50-day, all kinds of moving averages up here to see where resistance is. The 50-day in particular, since so many people follow the 50-day, and I tie that together with the stochastic and my general feeling for the market at the time. But as a general rule, if you're objective and you go with the signals, you'll find that it's going to be right because it's just telling you where the selling or buying pressure is at any particular time in the market. So I just want to throw those up because I'm sure I'd be asked about the indexes. Let's throw up Newmont mining. I know a lot of people talking about gold. It's been in a downtrend. I'm still a little concerned about it, though it's getting oversold here. You have a strong dollar, and that's impeding the advance. But you can see here, the daily for the last couple, 3 weeks, negative VR down, negative VR down. Again, it could be a function of the dollar, but dollar's been rallying a little bit, not that much, but certainly it's been enough to impact Newmont mining. But when it was going up, you could see positive VR, positive VR, positive VR, all confirming the uptrend until a nasty negative VR unfolded here, early this year. So love Newmont. This is sort of my gold play. Why? I think it pays like a 6% dividend, and you don't get dividend with gold. And this is a way, that you can play gold. So when gold really takes off, you got a $40 stock, and maybe if we can buy cheaper, you might get a higher yield. And the company's been around forever, and I believe it's the largest in the industry. So this is sort of my way I play, gold versus doing the GDX or the GDXJ, because at least I'm getting the dividend on a stock like this. This is the weekly on Newmont. I think I was just showing you the daily, if I'm not mistaken. Yeah, this is the weekly now, and the weekly, pretty darn good here. I mean, some crazy signals in here, but just like looking at the most recent 3-4 weeks, negative VR, confirming the downtrend, and going back about 10 weeks, you had a positive VR, confirming the move up until it reversed. So, it's always good to check your daily against your weekly, and I guess you want to look at what gold's doing and everything else. But as a general rule, this is showing a base pattern in here. You can see multiple positive VRs. That's why I like to use a sequential, because it shows all of the VRs. You did get a contradictory negative in there for 1 week, but then it took off again. So you got a bias of 4 positive VRs here, which did overall confirm that it was moving higher. And that's the summary of the indicators, Jeff, that I wanted to go over. And I do have my newsletter, vrtrader.com. I was going to do a lot more today, but we ran out of time in terms of my cycle work and a lot of other stuff. I get into including a lot of stories regarding the recent balloon incident and things regarding what's going on in the government and I guess geocosmics and geopolitical stuff. But you can read all that at vrtrader.com or go to my homepage. You'll see a lot of the stuff that I would have covered here right on the homepage, and some of the subjects that I've been covering are, earthquakes on the planet and all kinds of fun stuff that do affect markets that we don't really hear about so much when you turn on CNBC or the network. So you get 50% off using the code 2022 half off if you like. And of course, Jeff will talk to you about accessing my indicator here at MetaStock, which is really the focus of the presentation. Jeff.
Okay. We actually do have quite a bit more time if you want to go into some of the cycle stuff, Mark.
Well,
It's up to you.
you're gonna disconnect me because I get really far out on the left with some wild stuff here. It's up to you, Jeff. If you anybody listening and want to hear it.
William wants to hear the cycle stuff, and you do have about 20 minutes left. So.
All right, we're going to go all the way up to the top of the presentation then, which is, an hour.
If you want to.
If I want to. Well, I'm just going to go through it real quick because I got into a lot of the stuff with the UFOs and a lot of stuff that's been going on here in the news. I talked about this stuff for years, and people think you're crazy and you lose credibility, and suddenly you turn on TV and they're talking about now because of the balloon incident. And I've been writing about whether there's a false flag and something else going on. The New York Times released pictures of military, and suddenly this is a credible subject. So I talk about this a little bit because it's real. And the question is it a false flag? Why is the government showing all these UFO pictures? Are they trying to raise capital for the military? Is it really extraterrestrial or not? So it's just a lot of fun stuff here that I get into. But when this balloon hit, and everybody's talking about this crossing the country, is it a UFO? Is it China? This really brought the subject to the fore. So I don't have to tell you about all the sightings and stuff that have been going on for decades. And this picture here, of course, was released by the military. But what's interesting is the government, Biden signed this $858 billion defense bill, which allowed people to talk about it that had been previously silenced. So maybe we're going to hear more about. I personally think these are reverse engineered craft, and these are real, and they may be our own, not necessarily alien, but they definitely have. Why I bring it out to everyone's attention is that if this technology exists and we're not using it, the question is why. Is it to control military, to control its power? What's going on here? Because if you believe it's aliens, that's fine, but if it's ours, we should be able to dart around the universe the way these things are. So I'm not going to get into it, but the bill that Biden signed basically allowed employees that had confidential information to come out and speak. So we're going to see if more and more of these things happen. So I'm just going to flip through these here. Of course, this is the year of the rabbit. According to Chinese astrology, this is going to be a jumpy market, a trading market. The geocosmic sphere, those who follow my work know that I also tie the lunar cycles a little bit to timing of the market. Mr. McAvity, I forgot his first name, was a technical analyst in Toronto back in the 1970s. He was on Wall Street Week with Louis Rukeyser, and he talked about lunar cycles and the moon. And ever since 1970s, I've been tracking the lunar cycle to the stock market. And in many instances, you'll see markets bottom or top within a couple of days of the lunar cycle. So I actually chart the lunar cycles. I'm not an astrologer, but I just follow the lunar cycles on the markets. And you see, if you do take the time to do it, we have March 7th, the full moon coming up, and we just had the February 20th, which also tied to a little top in the market. Asteroids, people laugh about it, but we had one that we didn't discuss. It wasn't brought to the public, and it suddenly was announced just a few days ago. It missed us. It was a small one anyway. There's actually, you go to spaceage.com, and they actually list the near Earth asteroid. So it sounds crazy, but these are risks. There's a solar eclipse coming up April 24th. You got to watch around that date. So I think there's going to be a possible swan event. There's going to be some type of market volatility around this time. One of the things I also look at, I know you think that guys are crazy, but I've been doing this for decades. The solstices and equinoxes to find changes in the market. We've noticed over the years, the March equinox, in many instances, big market lows, accompany lows around the equinoxes and the solstices. If you remember this past summer, around June, how the market acted right around that time, the market changed direction there. September, now we just passed the winter solstice. So within a few days of the solstices and equinoxes, the markets often change direction. The most notable one is around that March timeframe, and we're coming up to that. And historically, it's often coincident with market lows. So you got to be careful of the Ides of March. I know it's the old Julius Caesar story, but there's something about the vernal equinox. You laugh about volcanoes. Do you realize that there's 44 active volcanoes on the planet right now. And, there's always that worry that Yellowstone is the big super volcano, and if something like that goes off, that's the end for us as a civilization. But in the meantime, the Mauna Loa in Hawaii is erupting, and these cause planetary changes and affect markets. I go to spaceweather.com. I track the solar flares. I don't know if many of you are familiar with this, but back in 1859, there was a Carrington event, and it was a giant geomagnetic storm, and that froze at the time, all we had was the telegraph on the planet. So just watching these solar flares, in fact, there's one going on right now that shut down some shortwave communications here on Earth. And one of these things blows, we're fried here in terms of our communications. The earthquakes, of course, tracking. Look at the big earthquake we just had in Turkey and Syria, and the loss of life and everything there. So when you track these things, or you try to track them and see what's going on the planet, this affects markets, this affects commodities. So I like to keep an eye on that. And of course, I have my VR forecaster, and this is available at vrtrader.com. This is where I put together the volume reversal and all the cycles and everything together. And this was my forecast for 2022. And the forecast was the vertical bars that you see on the screen, and the actual result is the yellow line. And this is one of the best forecasts I've ever made. I've been publishing this since 1987, and we just published the one for 2023. So I would encourage you to go to VR Trader and sign up for it, because it has some interesting patterns for the year. And again, this just came to me back in the late 80s, and the same formulas that I put together then, based on the cycles, the autumnal equinox, all the things that I just sort of referred to, and the lunar cycles. I throw it all together in one of these things. And some years, like last year, it's just uncanny how it calls major swings in the market. So some of you might want to pay attention to. And then I talk about other things. Everybody's talking about, the Federal Reserve, and Federal Reserve this and the Federal Reserve that. I don't know if you ever recall the book, The Creature from Jekyll Island, which Mr. Griffin had written, and even Mohammed El-Arian, famous economist, just came out here late last year that it's getting harder to justify an independent Fed. And the book basically calls for the abolition of the Federal Reserve, and you're hearing more and more about this now. And I think the days of the Fed may be coming to an end, maybe not this year or next year, but the people questioning, the way they manage the Federal Reserve. I also often quote Ben Bernanke. In 2008-9, he actually came out with a quote. I have to paste that up on my next PowerPoint, where he said, "Yes, we caused it. It's our fault." And he was referring to the Great Depression, where apparently the Federal Reserve raised interest rates at the worst possible time. And you're starting to think, are they doing the wrong thing now again, as they did back during the Great Depression? Of course, then we didn't have great jobs, and it was a different situation. But, it's a fallible institution is really the point. Groundhog Day. When I do presentations, I just came back from Canada and did one up there. It's February 2nd. So what happened after February 2nd? Well, the groundhog said there'd be 6 more weeks of winter. But what happened afterwards with the market? Well, the market's been down since February 2nd. It was actually the top of the market. So here's an application of an arcane cycle that people just laugh at and say, oh, what's the value of that? Well, in the current instance, it pinpointed the market top here in the last couple 3 weeks. So every year I track Groundhog Day and see where the market is, and maybe it'll be go the opposite way. But it's definitely a change of direction indicator. And for what reason? What can I say? It's obviously not the groundhog. It could be cycles this time of the year, the position of the planet. Who knows what's going on? But it's something we also track. The January barometer. You're all familiar with that. Well, actually, the January barometer is bullish for the year, because this is inspired by Yale Hirsch, my old friend Yale Hirsch at Stock Traders Almanac, who I've known for it's got to be 45 years. And basically the first 5 days of the year are early warning sign, and they were positive, and the close of the month was positive. So according to just this one indicator, which obviously this year it could be wrong, it says net for the year it should be up. In other words, if you look December 31st, 2022, and see where we are December 31st, 2023, according to this indicator, because of what happened in January, net. Now, doesn't mean we can't have big volatility all over the place during the year, but let's see how it all plays out. But for over the decades, this has been, pretty decent in terms of its overall market reliability. So let's see, did I hit the wrong button? So gold, everybody's interested in gold. So I throw this visual up, getting into my geocosmics here. NASA is sending ships to asteroids that have gold on it. And I think this could already be going on because, as you know, we had a ship crash into an asteroid just a couple months ago. So what's going to happen to gold if we start mining these asteroids that have 70,000 times more value than our global economy in terms of the value on these asteroids? So I talked to gold bugs that are big picture gold bugs that, well, they start bringing all those gold back from the asteroids, folks. Gold's not going to have the value of big picture that everybody hopes for, but it doesn't seem far-fetched to me that this is not in the distant future. I also given a round of applause to GATA. You should check them out, gata.org. They've been tracking for 20 years manipulation in the gold market, which unfortunately has suppressed the price of gold. Government wants it suppressed. Why? Because it makes the government look bad. But check their research out. So people ask, why isn't gold going up? Why isn't gold $5,000 or $10,000 an ounce? Well, we'll read some of the research from GATA, and there are actually lawsuits filed, some against JP Morgan, which were successful. A bunch of their traders that were fooling around with the futures market and manipulating the gold price. So there is credibility to what these guys have been saying. 20 years ago, more than 20 years ago, a good friend of mine, Terry Laundrie, who passed away, created his Big T gold cycle. And he said there'd be a top, this is back in the year 2000, that we would see a big high in gold in the year 2020. Well, sure enough, there was. And that's the high here that I've circled on the screen. Well, what we had since then? Well, just as you know, a couple of years ago, less than 2 years ago, we had a double top formation. So we have a double top, and for those of you who know the expression, when you see a double top, you sell a double top. And so far, we've come down. So until we clear this double top, I'm not really a big bull on gold. I mean, forget the asteroids. If we take these highs out, then maybe we'll be 2,300 or 3,000 or something. So let's see what happens. But right now, with the U.S. dollar strong, I don't think it's taking out these highs right away. But we're going to watch it. So I'd rather pay 2,100 going to 3,000 than to try to pick a bottom here and write it down to 1,200 or 1,500 in the meantime. So be prepared. There are a lot of things happening. And my basic summary statement is I think the market rally we've seen since last September is fooling investors. And I think, there's going to be another wave down this year. And though it could end up net higher by the end of the year, I think you got to be careful here that there's a lot of hope. Wall Street's talking about the Fed. They're going to stop raising interest rates. They're going to pause, on and on and on. But we have geopolitical events. I don't have to list those for you, from China to Ukraine. So a lot of other things can affect the markets during that time. So I hope you sign up for MetaStock. And meanwhile, again, if you want to go to my vrtrader.com, please take advantage of that half-off offer with 2022 half-off is the promo code. Jeff, I did it. Jeff?
All right, thank you, Mark.
You heard me. I thought maybe I was talking last 20 minutes to myself. So anyway, right. You got the other part of the presentation. So you get a full picture now of Mark Leibovitz and VR Trader, which is a combination of volume, but also a philosophical look at a lot of other things that affect our markets.
All right. Let's see. Okay. Well, I'll talk a little bit about the indicators and how to get them. Mark, thank you for coming today. I appreciate it.
I'm sorry I had a technical problem, folks. This is available on recording, right? For somebody who wants to pull this up at a later date. Yes? Okay. No? Okay.
Sure. All right.
Yeah, thank you.
Thank you very much, Mark.
Thank you, Jeff. Really appreciate your good friend.
Okay. All right. And then Mark does, again, just to kind of reiterate, he does have some really good add-ons that are available with his volume reversal and his gold analysis and the newsletters, all that kind of stuff. We did work on his volume reversal toolkit, and you should be able to see my screen here. I'm going to talk a little bit about what's included with that. He did kind of cover the 2-day, the directional, and the sequential system and the methods that he's used. Of course, these include scanning, they include explorations, expert advisors, all that good stuff. The volume reversal toolkit, if you want to give it a try, is $99 per month. And we do have a special on it that if you purchase a month, it'll give you the second and third month for free. So if you're welcome to try it out, it'll cost you about $33 a month to do that 3-month trial. So you can do that. If you'd like to order, give us a call at 800-882-3040, or you can visit us online at metastock.com/sales chat. So there you go. A couple things coming up. I want to talk a little bit about tomorrow. We have another great day lined up for us tomorrow. We are going to kick off with Kevin Nelson of LearnMetaStock.com, and he's going to talk about an indicator called the Super Trend Indicator, which has been a very, very popular class that he teaches. After that, we're going to go to Adrian Mance. Adrian is going to talk about the strategy and discipline of a master trader. Jerry Allison is going to talk about the advantages of being a trader's tax status versus investor's tax status. And following up with that will be Dan Passarelli, Marco Gomez, and then Ken Calhoun. So another great day of actually presentations tomorrow. I did mention this a little bit earlier, and I want to kind of bring it up again. We are going on the road again. And for the first time, since, before the pandemic. So if we come in here, I'm going to go ahead and click on our events page and go to seminars and just kind of outline where we're going. I'm going to go ahead and put this into the chat box as well right here, so you can kind of come in there. If you're in LA, Irvine, San Jose, Phoenix, I'll be in Chicago and Detroit. New York, Washington, D.C., Toronto, or Montreal, we'd love to have you. We're going to basically have sessions where we come in, talk a lot about the software, how it works, how to use it, answer questions. We haven't done these in-person events. We're excited to bring them back. So we hope you can join us for these 2-hour in-person sessions. So let's go ahead and kind of go back into the PowerPoint. We'll wrap up and put a nice, pretty bow on this. Final thanks to Stocks and Commodities Magazine for sponsoring today's event. Been making magazines since 1982. If you do a free MetaStock if you do our MetaStock subscription with our extended trial today, they'll give you 5 months. Thank you to Stocks and Commodities for sponsoring the event, and thank you again for CMT for sponsoring that event. You can get an extended trial or any of the products that we kind of talked about today at metastock.com/conf promo. You can give us a call, or you can chat online with us at metastock.com/sales chat. You can also call us at 800-882-3040. William, we will probably have somebody at the Money Show in Vegas, but we won't be doing a booth. So that's a really, really good question. We probably won't have actually a booth at the Money Show in Vegas. So in any case, metastock.com/conf promo. Want to say thank you to all the speakers that came in today. Really enjoyed today's session. Thank you for attending. I hope you enjoyed it. I'll see you again tomorrow morning. And thanks for coming, guys.
Hi, Kelly Clement here from MetaStock. I hope you enjoyed today's video, and I hope you found it instructive and informative. If you did, what I'd like to invite you to do is go ahead and like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. So go ahead and like and subscribe, and keep on watching.